it's hot. Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Hola.
Hola.
How are you?
I'm good. How are you?
I'm gonna probably have to go on medication.
What's up?
Well, Indiana plays tomorrow, and the
Yes.
Bears play Saturday.
Yes.
I don't know if I'm gonna make it through this weekend. I know,
Yeah.
but I just
it's too much.
Yeah,
Too much.
I'm
Heart
anxious,
palpitations.
right? And I can't, and I haven't been watching either team, so I'm not gonna start to watch.
Well, you can. You could be a...
No, but I don't want to jinx them. I think I'm very superstitious.
I feel that.
Yeah, right? So if you haven't been, I've been supporting them in my heart, but I haven't been watching, and I don't want to jinx either of my teams, though, now.
How do you not watch?
Because well, they're playing in Atlanta, and my aunt lives in Atlanta, and I was like, I could have...
She got good parking space for people?
Yeah, come to my aunt's house.
Easy in and out?
Yeah, easy in and out. Bathroom privileges, but even the alumni association is sending out emails or hey, we're having watch parties here, and here, and I'm like, I don't want to, I can't.
Oh, come on. You have nothing to do with it. And I really can't prove that because yeah, last night
But I wouldn't be able to live with myself though then if I did go and then
Yeah, it would be horrible.
Yeah.
It'd be horrible. You're right. You best just going shopping, go to Costco or something like that.
I think I'm going to go to the RV show in Schaumburg.
You had that much fun that you're now in the market for an RV?
I have nothing else to do. I was let's just go look. It's $15.
You could have had one on the cheap.
It's $15.
Yeah, you could have one cheap. Is right. I would have done a layaway plan with you. Actually, I sold that thing pretty quick. But I would have done a layaway plan with you or anything else like that. Can you shop? Can you window shop? I don't have I'm...
Yeah, because it's a whole class of things that I don't have any knowledge about. So I was like, yeah, I can just window shop.
So you're being
Of course I can window shop. I don't have $130,000.
Well, you can get a pull one. A pull one's cheaper. You can do
I have nothing to do.
I know.
I
just can't window shop. I have a hard time window shopping. I kind of want it if I window shop. You know what I mean?
Yeah, you're instant gratification.
Or maybe I window shop.
I'm impulsive.
I find a nice, retiree named Bob.
There you go.
And then he takes me away from all of this.
No, definitely not searching for love. Is what that sounds like.
Do you ever set
I'm
up
searching for financing.
Yeah, it looks like a lifestyle. You're looking for a lifestyle.
Do you ever set up a
Says
trap?
the man who just got back from Aspen.
That's fair. That's fair.
I'm gonna sit back and watch this
you
now.
are very lucky because you are in love, but it's nice that she's not poor.
It's too early for that. It's too early.
He's blushing.
Too early. It's too soon.
Yeah, too soon.
You survived a week together, right?
Yeah, a lot of time. Yeah,
with family, so it's not like a week vacation. You go to some destination. It's just the two of you, and people are serving you. You're getting dinners, and
people are serving.
No, I mean when you go to a resort or something like that, you go out to eat.
Yeah,
you order a drink.
Yes.
People are serving you. You're not doing it yourself. You spend time with her and her family. Another dynamic there. A lot of extracurricular intervention, which can get in the way sometimes of budding romances.
I'm just drinking up all this tea.
I see. You have quite literally over there.
All the tea.
Yeah, you best just be quiet. I think that's probably the best thing to do. Try to change the subject or something like that. You were in Fuego yesterday trading with your scalping. How about I'll help you?
Yes.
That's all you can get. That's all you can get.
Yeah.
I'll help you. We had a late night hockey game. Started at 10. Started 15 minutes late. Didn't get home until...
Started at 10 p.m.?
10:15.
At night?
At night. I know. Even the S&Ps were down 8. I was watching all night.
Did he drive the new car there?
No. We drove mine, but he's been driving his... he's been trying to drive his. Somebody has to go with him each time. You know what I mean? So...
Oh, he already knows about his new car.
Oh,
well, that was a problem.
Yeah, they
I thought it was one day, like Monday. On Monday,
can't-
it was a secret. Today's Thursday.
Yeah, no secrets. There are no secrets. Can't hide anything. Can't hide it.
It's my wife. It's not me. It's my wife. It's
It's
not
you
me.
too.
No, it's not me. No, we picked up the car. Well, I was going to go and pay for the car. And I said, would you hold the car until January 27th? That's his
It's
birthday.
literally the conversation we had on Monday.
right.
What happened?
And the dealership said, sure, no problem whatsoever.
He's like, I have your money. I don't care.
Yeah.
Right. Exactly. They even said they would deliver it. So
Yeah, great.
it's all good, I went there with my wife, and on the way there, she's like, we're really going to let them hold it and deliver it. It's kind of silly. Why don't we just pick it up? I go, I don't really think you should pick it up. I think we should keep it as a surprise. It'd be fun. She goes, I just think we should pick it up and, do it that way. What difference does it make? I'm like, okay, fine. So we just picked it up and left it in the driveway, and would not really left it in the driveway. Left it about a block away because I was going to try to keep it away for a little while at the very least.
Yeah.
And we walk. This is funny. We walk in the door, and he's sitting in the living room, and he goes, "What were you doing at Napleton in Libertyville Ford?"
Oh, because
Does
he has the
he's tracking you?
Yeah.
Not me. He was tracking my wife. His eyes were like big as sausage.
Diabolical. That is amazing. I love that. Well, you track him. So.
I said, "You little SOB." He goes, "Yeah, what were you doing? What were you doing?" And then that was the end of that. So
Yeah.
and we gave it to him. But yeah, he's very happy, very happy. So he's happy. But we didn't drive that car there. I drove my own car there. So
Should have let him drive it.
I do. I have. Like I said. He's got to be there at 9:00 at night. It's a late night. I had enough.
Oh, you're worried about him driving at night.
We had a.
I don't
about
think
to.
legally-
He's about to
legally
be
you can't.
15 kids deep, passing blunts
No,
around.
yesterday's driving, we had to have the
escalated
discussion
quickly.
for the second time that pedestrians always have the right of way. We were driving. We had just passed a church that's in our neighborhood. He's going to make a left-hand turn. There's an old man with a cane walking across the crosswalk. He
No.
has a green light. And a woman, I can't make this crap up, and a woman with a baby going the other side this way. And he's going to try to
And a
make
nun.
He's going to try to make it between the two of them. And I start yelling, stop, stop. And he stops, but he was like kind of in the oncoming traffic. There were no cars coming, but then a car turned and the lady looked at him like, what are you doing in here? While these old people and the lady with the baby are coming across the crosswalk. So I had to have the discussion with him again the second time that pedestrians always have the right of way. I think he's got it now, but I'm not 100%.
I would maybe
I
just
worry.
have a lawyer on retainer.
Yeah.
Just to
Yeah. This sounds like
Kids
fun.
yeah.
Ken Lerner is the lawyer for you. Call
Yeah.
222-2222.
You see that all over every.
Yeah, well,
Well, no,
personal injury, like I would.
That's going to be the lawyer on the other side.
right. Yeah.
Wow. Well, this should be an interesting summer.
Should be an interesting summer. Should be an interesting summer.
At least he gets his car, and then it's like kind of no, he's going to have a couple months of winter.
Yeah, he's still got,
I don't know if I time this just right, I could be set for life.
Seriously, yeah.
Just start strolling across the street. Oh, my neck and my back.
I'm not going to continue that song.
But Beth's alma mater beat us last night, 1-0. It was a great
Oh,
game.
New Trier.
Yeah.
Yeah.
And your alma mater.
Nikki's
Yeah.
too.
Yeah. Beat us 1-0. It was a great game. They're the number one or number two team.
Sure.
But it was a good game. Kids all played well. Both sides played well. Our team really played well. But it was nothing in the second period. And my wife goes, we just need one goal. And nobody had been mentioning anything about goals because we would have taken a tie against them. We beat them once this year. We only played them 3 times. We beat them once, lost once, and now we lost last night. But I would have taken a tie at least. And she just need one goal. We just need one goal. And 30 seconds later, maybe even 10 seconds later, they scored on us, and I looked at her, and she goes, it's not my fault. I know it's not your fault.
See? It's
But you can't mention it to your point, and you can't
it's
talk
too
about
much.
it. You're right. Yeah.
How about you, Nikki? What's on deck for you for the weekend, or what are you getting into?
I mean, obviously you got Bears this weekend.
Are you going to try to go? So we have the highest of all the playoff games. The Bears' cheapest available ticket is the highest at around $446.
Yeah, I don't know where
You
they're.
can't pick up a ticket for
Yeah, you can't.
That's what I said. I was
I
like, where are you getting $446 from?
I was looking the other day, and they were like $800-900.
Yeah.
Get in.
Yeah.
But that's the problem that you have when you have the smallest stadium
I'm not going to mention names because it's a sad story, but I heard it yesterday when I went over to see Margin Island over there at Tasty Trade. That's where
Clink has tickets, doesn't he?
That's the name I wasn't going to mention. I believe he sold them maybe $2K a piece.
Wow.
And then the guy backed out because of the weather.
Ooh. Yeah, it's supposed to be. We're supposed to get some snow, so
Yeah.
Maybe, yeah.
That's bear weather.
Yeah,
So you've been hot with your football. What's the line of the game? Do you know? Have you looked at it?
Well, it started at. I think it's basically a pick 'em now. I'm looking at the Miami Ole Miss game, which is tonight. I have a couple buddies that are Miami guys.
Oh, yeah. And Jamal. I think Jamal's
Miami guy?
Yeah, he said
was born
he's
there.
like if Miami makes to the national championship, Jamal's gonna go.
Ooh.
So
You're going to go where? Go to the bar and watch it?
Bears are plus 1.5 right now. Kind of was. I think they opened right around here. It was like pick 'em.
Who do you like? Well, you like the Bears, I'm
Of
assuming.
course, I like the Bears.
Yeah, it's a
Sure.
hard game.
That's a.
I just want them to be
Yeah.
healthy.
Yeah. Oh, but
I just want them to be healthy and have nobody get hurt.
Well, okay. I'm sorry,
Yeah.
Mr. Masochist. Everyone's a winner.
Yeah.
No.
Caleb Williams, loved that quarterback from day one. Amazing. Loved him. Right?
Yeah. Now you're stuck with them.
Now
You're not
it's-
going anywhere. Mm-hmm. He's staying around. Mm-hmm. So.
True that.
I don't know. I'm just so anxious. I just want this to be over.
I'm surprised I didn't get anything from production when I said that. Caleb Williams, I loved him.
You know, James will give you like the blank.
No,
They
James has
just
been
took
on
your
his bandwagon
camera out
from day
of
one, and
focus. They just
rightfully
make
so.
your camera go out of focus.
Right,
It's fine.
right,
They don't know.
right,
You don't know.
right.
You don't know.
Yeah, he's doing it now. There he goes. He's doing it now. I'm out of focus. I'm gone.
There you go.
There you go. Now James in production has been on his bandwagon. He's rightfully so. So good job out of him. There we go. I'm back. See that?
Hey, well, we got a great show for you today. A lot of good content headed your way. And this is a thrilling Thursday here on Tasty Live in the top of the 8 o'clock hour. Fan favorite treats from the research team. The world's greatest financial think tank is going to present their trade ideas to the team. Always something to look forward to. Mm-hmm. Gonna kick that off real nice. And then at 8:40, Nikki and Johnny trades. He is in fuego this week with his trades and his scalping and his fat fingering.
So we're gonna look at it real
That's
time.
true too. Yes. I'm
Even
glad
his fat fingers have worked.
I'm glad I didn't. I caught that early because
Yeah, 'cause you were long goal.
35 right now.
Yeah.
Hey.
That would have been me having to put my tail between my legs and go ask Daddy and Mommy to help me over there.
Yeah, I've done that.
Yeah, it's okay.
It only hurts for a second.
But Nikki presents trade ideas for those of us, most of us, who have smaller accounts. Always much appreciated. And then, 9 o'clock, we have our market measures, how Theta and Vega react during market spikes. What's that about, Nikki?
So we're looking at like just the difference in your vol and of course theta exposure via changes in implied volatility, IV rank in SPY. So it's kind of we're trying to show when volatility spikes, all of the Greeks that you're trading move quicker. Mm-hmm. So I mean that it's kind of more of reinforcement of why we look for high implied volatility because your trades are further out on the curve, they move faster, you get more decay, etc. So we're going to bucket it into IVR ranges. It's a good one.
Okay.
Yeah.
Beautiful.
And then at 9:20, live from the trade desk, we got Quentin and Glenn. Quentin counting down all the top trending tickers over at TC Trade. And G Money, when he's not serving you fresh coffee from Starbucks, he is coming in to talk about the FX side of business.
G Money was one and done. Came in this morning. I was looking for another cup of coffee. I couldn't find it anywhere. Looked under my desk.
But he's smart. He did it right after. Like, the next day he comes and he does his show and then
He was raised right.
Yeah. He's good. He's good.
And programming notes today at 11 a.m. Options Trading Concepts live from the floor of the SIBO. Mike and Jamal are going to be. No, it is not electric when Mike and Jamal are there.
What?
It's only electric when the ladies are there because the ladies are electric.
Oh, man.
I mean, it's decent when Mike and Jamal.
Yeah, it's
are
all
there.
right. It's all
Yeah,
right.
it's all right. It's
Yeah.
all right. But I mean, ask ask the traders who they are more excited to see.
That's
why it's electric.
I think there's a little bit of a bias built into that one. Okay.
Maybe.
Yeah.
I said what I said. But we love everybody. But Mike and Jamal at 11 a.m. So tune in for that. Always great content. But hey, in the meantime, in the between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news. Coming across the wire. Our
This
leading story.
just in.
Top story. Just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It's January the 8th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news?
Are there any earnings?
Nah. You're gonna have to wait another next week.
Okay.
Around the 13th, the 14th, they start trickling in.
In just probably one of the most headlines that screams 2026, Dow Jones signs deal with Polymarket to add prediction data across outlets. What a time to be alive. The Dow Jones on Wednesday said they'd signed an exclusive deal with Polymarket to bring real-time prediction market data to its outlets, including the Wall Street Journal, Barron's, and Market Watch. What do you think about this full stack integration?
I mean, I'm surprised that the Dow Jones, probably one of the older
Right?
organizations doing it, but I think it's inevitable. I mean, I think it has to go mainstream, much like Bitcoin or anything else, where everybody can invest in it and make it easy for sure. Yeah, I like it.
But there's
You
even
can now sit at the bar. You can watch what the market's doing. You'll be able to watch what poly markets are doing across the board.
Bet on sports.
Bet on sports. Maybe we'll be able to interact with people right at the bar with you. You never have to leave.
okay.
Yeah.
You don't like it?
There's just a level of scamminess to the prediction markets because of people that have the inside information that even supersedes the scamminess that scares me about crypto. It's like I was like, oh, there's levels to this, and that's all I'm worried about. And I'm just worried about people.
Why are you worried? What do you worry about it? Like,
Just about people being taken advantage of in losing their money.
Do you know that's what we do here every day? We try to take advantage of what's happening in the market, which means that there's somebody on the other side of every trade that we make, and that doesn't mean that they have to be a loser just because.
Sure, but that's with informed probabilities and.
Nah, you're taking a lot of liberties with this. You're taking a lot of liberties.
I mean, this is binary. I hear what you're saying on some of these things, and that's going to be a huge part of the next evolution of Polymarket.
Right.
It's like how they kind of catch this, the insider trading. But the whole point is that at some point, the inside info gets arbed out, right? So if these markets are big enough, that inside info, there's going to be an opposite side to that, and it's going to be.
So instead of the line coming
point.
out at, let's say the real line should be 70 out of 100, and there's some sort of inside information, allegedly, it's going to open at 80 instead of opening at 70.
And,
You know what I'm
and
saying?
it'll
They're
be
just
bet
like-
down to
Right.
back to 70.
Yes, exactly.
So that it's not there yet because, like your Venezuela stuff is so illiquid that,
Sure.
the insider is the only action.
Yeah.
Once there's a lot of action and enough action, it gets arbed out. And it's in.
But I've heard they're even going to go to like 15-minute prediction markets for price of Bitcoin. Like, do we need these are my concerns. Like,
What is your concern about it? So you can go to a gambling establishment and bet within seconds on hands or anything else like that. Are you worried about those people too?
Sure. Yes, I am.
Well, you got a lot of working to do because Vegas has been around for a long time.
Yeah, we can't worry about people with their money.
Hey, a soft U.S. dollar outlook is set to linger, along with Fed independence worries. That's according to a new Reuters poll. The outlook for the U.S. dollar among currency strategists polled by Reuters remains bearish at the start of 2026, with a modest decline expected by year end. We are awaiting some pretty significant economic data and other news tomorrow in terms of the jobs report, as well as the tariff decision from the Supreme Court. What are you doing in dollar and currencies?
Dollar's been relatively strong, right, versus the euro. I know Glenn will come in here. I'll talk about it a little bit later, but the dollar versus yen for the last week or two has been on a little bit of a tear. The dollar has been on a tear to the upside.
Yeah, a little bit of a bounce. Still at lows.
Still at lows. Yeah. The yen's still at lows. Yen hasn't.
Yeah, the yen is. If there's anything I take away from the last couple months, I'm never being long the yen again.
Welcome to
yen.
Wow.
He's finally a Batista.
The
I
yen
like it.
stinks. The Russell E-mini, Russell Nasdaq pair, both
No
those
rhyme or reason. Just get long or
stink.
short one of them. Yeah, I
They
agree with you there.
stink. Both those trades
But
stink.
the gold silver pair, that's money. You can play.
I kind of
that.
like that one.
Yeah, that's
do
been
like
moving.
that
That's been in play.
FX, I am long the dollar against the Canadian dollar.
Okay.
I am short Aussie dollar. I am short. I'm long euro against the pound. I'm long dollar against the Swiss franc.
Swiss francs.
I mean, you gotta get
So I got-
you gotta get the Canadian dollar in there. I think it's been on a 2-week slide.
He did. He said that
Yeah,
first.
so I'm
Oh, you
long.
did?
I'm
Okay.
long dollar against the Canadian dollar. So
That's how to-
my biggest positions are long the dollar. So I am long the dollar.
Okay.
Yes,
Pretty good.
so I'm against this.
We will see
As
what.
everybody worries, I buy.
Do you worry about him, Banana?
I do. I mean, like,
Okay.
look, like.
This is the least of my worries.
I mean, because he's just at his desk, popping zins, being locked in, and yeah, I worry about
Coffee,
Nikki.
too.
Yeah, an unhealthy amount of caffeine and nicotine.
That's fair.
Here's something interesting that came out yesterday. President Trump says he will not permit defense companies to issue dividends or stock buybacks until those firms address his complaints about the industry. Yesterday, the president on Truth Social took aim at defense contractors' executive pay packages. Excuse me, Senator Warren. No, this President Trump. But then hours later, he's like, also, our defense bill isn't big enough, and it needs to be 1.5 trillion, not 1 trillion. So Lockheed Martin fell 7%, and then it rose 7%, and then just like nothing happened. Again, he can't do this unilaterally. I don't think. But what do you think about him meddling in a free market?
I mean, he loves to talk.
That was
he
a
loves
quick
to hear himself
taco
talk.
too. That was probably the quickest of them.
Yes,
The
for
flash
sure.
taco.
That was a flash taco. That was like a test.
It was.
Yeah.
I mean, Lockheed Martin. We talked a little bit about it with
Down
TP,
$40, then up $40 in the aftermarket.
and it's up
And it's-
$40 now after
Yeah.
being down yesterday.
Yeah.
Traded up to I don't know. Over the last 72 hours, it's gone from around 510 to 540 down to 500. Back to 535.
Yeah.
But there's no market, there's no option markets to trade in there. They're way too wide.
The other Northrop Grumman, NOC, and then I'm sorry,
Raytheon,
yeah,
RTX.
GD, yeah, and General Dynamics is GD, and then Northrop Grumman, NOC.
All of them are very hard to trade. All of them,
I didn't know if there was a defense ETF or.
ITA was the one that TP
Oh, okay.
mentioned in the cherry picks. It's not really tradable.
Okay.
Either.
yeah, that's aerospace
Yeah.
and defense.
We traded Boeing. It's the most liquid.
That's a
of the
good
bunch.
play. That's the most pure.
Yeah. Yes. The
and
most
Boeing's
liquid.
up about $3 this morning.
Yeah.
Earnings January 27th. Ivy rank is around 11, and it's
Yeah.
near its highs too.
Trump's throwing out little grenades here. I don't like. He gives me a little bad vibes from back in April of last
Sure.
year, where it started off kind of like this, like lob a little grenade, walk it back, everything's fine. It's like kind of like a test the water, see how the market reacts. And he hasn't really like talked about the stock market,
No, he hasn't. You're right.
which
You're
is
right.
another, like usually when like it's status quo, he's talking about how great the market is, where all-time high is amazing, and he's not really talking about that. So I feel like
He hasn't really
well-
taken credit as much as.
he's not
Yeah.
he's not pumping, like look at all the gains.
He must not be out yet.
Yeah, so
Well, something
a
else
little bit of a spook.
Something else that came out from the Trump administration yesterday is President Trump says he's immediately taking steps to ban large institutional investors from buying more single-family homes. People live in homes, not corporations, he said. This is all well and good, but institutional investors, landlord properties that own 100 plus more properties make up less than like 1% of the housing market. I will, though, agree in regions, though, some pockets, it's really bad, but a national policy of this is maybe not quite as effective as it's because it's not the same problem in every municipality. So,
Well, okay, let's not walk it all back. 6 months ago or a year ago, you would be talking about how BlackRock and Jamie Dimon and everybody else was buying all the real estate, driving up houses.
but the numbers are the numbers. Like it's less than 1%.
You never said anything like that 6 months or a year ago. On paper, this seems like a good idea.
Yeah, this seems reasonable.
Seems reasonable.
Yeah, sure.
I think it's just another grenade, like you were talking about just a moment ago about everything else. I don't know how you can do this or implement it. I mean, I don't think it's going to be able to happen.
No, shares of BlackRock were lower on the news. So you just do what you want to do with that.
Yeah.
Bitcoin, the boldest Bitcoin predictions for 2026 are in, and the ranges are wild. Some analysts are saying that Bitcoin will break below that resistance level that it currently has around like $85,000, $90,000 and go all the way down to $75,000, while others say that Bitcoin is probably going to rise as high as $225,000. Commentators expect big volatility in Bitcoin this year, no matter what side of the Bitcoin you are on.
I think I looked at predicted markets maybe 2 weeks ago or so, and I was trying to see what the numbers were for like. You have access to it? Do you have it there?
I mean, I could look it up, but I mean, you're an option trader. Can't you look?
No, he's saying on the prediction.
No,
markets.
on the predicted markets. I was looking at. I think for 150,000, they had something like a 5% by the end.
But you can see it on the. I mean, on the
option chain. I know, but I want to know.
Yeah,
I want to know what their markets kind of were. Bitcoin does not have the oomph it had before. It got up to around 94,000 72 hours ago. It's down to about 90,000 right now. You were right. Around 88, 89 is kind of the lowish of the area. So it's been a pretty tight range, but it can't hold a rally.
Let's
look it up there.
So
if you look
150K before. Hold on. 150K before June is a 15% probability. That's what Kalshi has.
Yeah.
But there's
so for like the next 6 months.
There's 20 million in vol on this, in volume.
Yeah.
Like, so it's not that much.
Yeah.
Like,
right.
It's small.
It's
money.
tiny.
Yeah. Anything in IBIT or Coinbase?
Coinbase is trading around 247 or so. It looks like it's up $1 odd with Bitcoin down around 1,000 or so. So a little bit of a bucker there in coin. But coin's been mirroring the markets in Bitcoin too. It's been going kind of sideways off its lows. I don't know. I guess just over 200, 230 or so, up to around 260. It's around 245. So the middle of its range for the last couple of weeks too. Coin IV rank of 8.
Yeah.
Hard one to trade too.
We're long IBIT, and we've been trading volatility via the calls, just like selling calls and scalping out of those. That has been a positive trade. Being long Bitcoin has not, because Bitcoin's at lows. So
And IV rank in
net.
IBIT's gone from like maybe the 60s into the 40s now. It's still
So
high relative to the overall market, but it's come down.
Yeah. It has when it has those big moves, vol spikes
to the
quickly,
upside. Yeah.
If you can, get in quick.
Anything in MSTR? I know it's been moving around this week.
We had a put spread. I closed out of it this week.
Okay.
Took tiny, small profits out of it. It's not an easy one to trade spread wise.
No, $160 stock with relatively wide markets. IV rank of 29 is pretty good. It's on its butt. Really hasn't participated in any type of rally, even to the upside when other products have rallied.
Yeah.
Hey, there is a new regime change, and I don't mean in Venezuela. I mean the second most valuable company by market cap is no longer Apple. It is now Google, Alphabet. Miss Jackson, if you're nasty. Google stock surge in 2025 continues, and Alphabet's market cap surpasses Apple for the first time since 2019. So let's look at Alphabet.
Is that how we measure time now?
I measure it in the before time, like the last
COVID
5-6 years. Yeah, 2019. That's before times.
I kind of agree with that.
Yeah,
I was like when that was a different world.
Like I stopped counting my age. Well, I stopped counting my age after before that. But anyway, like it's just like nothing matters after 2019. Like it's all just the before times. Different. But Alphabet and Google and Apple, what you got?
Apple down $2.50, $3. Google being a bucker up around $5. Google opens here at $3.27. That'll be flirting with its closing highs that it had, not too long ago, back in November or so, November, December.
Yeah.
Alphabet's market cap, 3.88 trillion. Shares of Alphabet were up 2% yesterday. Apple's market cap closed yesterday at 3.84.
1 year
Apple
ago,
shares have slid more than 4% over the last 5 days.
Yeah, a year ago it was going away because the chatbots were gonna, kill Google search.
Yeah.
Or no, Google was going to get broken up.
Yeah, that
Like
too.
but then
the
now
big one was like everybody was like, "Oh, who needs Google search when you have OpenAI and you could just search there?" And it was trading at $120, and then it's
You don't get too many
3x.
multi-trillion-dollar companies that are trading at $150 a year later or less, trading.
like went from 1 trillion to 4.
Yeah, exactly. Yeah, in a year.
Yeah.
In a year's time.
move.
Yeah. Crazy.
Chinese authorities have reportedly asked domestic tech companies to halt orders for NVIDIA's H200 HI chips, signaling tighter oversight even as U.S. export licenses near completion. The move reflects Beijing's broader push to make chips at home.
NVIDIA unchanged, 189 and change. Maybe it's up 50 cents or so. Been going sideways, quietly going sideways with an rank of 5.
Yeah, NVIDIA just it's found its price.
Yeah, I said it's
Seems to
become
be
it's acting like Apple of old. You know what
Yes.
I mean, it's kind of more of a bellwether than an alpha kind of stock.
Well, are you doing anything in the other chip stocks? I know Intel's had quite the week.
He's been trading Intel pretty well.
Yeah, Intel, we had laddered puts, which worked into yesterday's like 10%.
It's up again this morning, about 50 cents or so. Yeah.
We've dabbled in Micron. We've dabbled in.
That was my next question, is the memory.
Like some of those, we've been kind of trading in. I mean, some of these, like the Micron move that was a wild one. SanDisk.
Yeah.
We've been dabbling in some of the others.
AI platform Anthropic has signed a term sheet for a $10 billion funding round at a $350 billion valuation. Get out, what are these numbers? The AI rival to OpenAI is just doing things with more and more rounds of funding. What are your thoughts?
It's going to be interesting with all these because you have, which will probably get a couple of them, if not more, this year. Anthropic, SpaceX, OpenAI. I mean, you add that all together, it's like 2 to 3 trillion.
Yeah, it's like a
SpaceX
Google,
is
it's like a Google-ish.
Yeah, it's like adding a Google overnight into the market. And, it's an interesting
Google valuation, right.
Yeah, it's an interesting, adjustment because that money has to come from somewhere, right? Yeah. So like you IPO a $40 billion company, that's a drop in the bucket to the market. $1 trillion is a big, a big amount to put into the market, and that's got to, maybe there's.
I'd say so. It's a good amount.
Maybe
we made a infographic. You can follow us on socials, but SpaceX is valued at 1.5 trillion, OpenAI 500 billion, ByteDance 480 billion, Anthropic now worth 350 billion, but just at the end of last year it was only worth 183. Databricks at 134 billion, and Stripe at 106 billion.
So that's like
and all set to be IPOs.
Yeah, and that's $2.5 trillion, and you have to get that money from somewhere. So does that come from selling out of a Google, an Apple, NVIDIA, stuff like that?
Nah,
like,
how does that more money to work?
You think it's just more money? I don't know.
I think they're priced to perfection and probably a lot like the earnings.
Where do you get that money is the question. It's like, how did you just bring that's what I'm saying, is like maybe this is kind of the spot where it, kind of top it.
I don't think. Yeah, things are so frothy. Elon Musk's lawsuit against OpenAI is now getting the green light to move forward. Elon Musk persuaded a judge on Wednesday to allow a jury trial on his allegations that ChatGPT maker OpenAI violated its founding mission in its high-profile restructuring to become a for-profit entity. So, headed to court.
I wish I took more than 3 months of John Jay College of Criminal Justice so I could figure this out. I don't know what to make of this, to be honest with you. What are you doing over there?
I sold puts
pre-market. Yesterday you sold some puts in oil.
You're getting
right?
a dollar move today, right now. I mean, come on, gotta take it off.
Very nice, very nice.
Yes.
Markets are tradable in the pre-market or pre-opening because obviously markets
Or in oil futures.
Yeah, good job out of you.
Tradable all night.
Yes, they go all night, but they get a little bit wider at night.
Yes.
Yep. Good scalp. End up being a good scalp.
ARM is launching a physical AI unit, joining a rush to robotics by tech companies and automakers. The decision to create a unit that specializes in robotics arrives amid a flurry of announcements and activity at CES around humanoid robots, which are my favorite type of robots.
You're so ready for it.
I love it. Boston Dynamics robot, the humanoid robot. Look, that robot is 6 feet, 200 pounds. Yeah, give it to me.
You see, I'm afraid.
Things you're worried about don't include robots in your house.
Yeah, I'm not afraid of
Well, it's going to the Hyundai plant, so it's going to be a factory robot. It's not meant for.
I'm not afraid of the poly markets and stuff like that, but I'm afraid of these robots. I'm afraid of the drones. That's the crap I'm afraid of.
Okay.
I really am.
Yeah.
What's going on in ARM?
Drones are a little scary. I will give you.
Yeah.
I will give you that.
And they're getting smaller and smaller.
Yeah,
and better and better.
You got your neighbor, flying the drone over to your kitchen window, watching you.
Just
No one wants to see
acts
that.
of aggression.
What's ARM
That's
doing?
true, that's
what is
true.
ARM doing?
116 looks like it's up about 50 cents, maybe even $1 if it opens on the offer. But ARM's been going lower the last 2 months or so. It started around 180, it got down to about 110. It's sitting at 116 or so. Ivy rank at 24, not bad.
Maybe for option trades today.
Maybe for option trades today. That's earnings February 4th, or even Johnny trades. And option trades every Tuesday and Thursday. Lucky for you, today's Thursday.
JP Morgan Chase has reached a deal to take over the Apple credit card from its original issuer, Goldman Sachs. The two banks said Wednesday in separate releases. JP Morgan said the deal will take around 24 months to close. Good Lord. And that it will book a $2.2 billion provision for credit losses when it reports its earnings next week.
Yeah, when Apple got into this whole thing, it didn't seem like a great idea at the time. And I don't know if
the card's a good deal for consumers.
Yeah, maybe. I meant for Apple. I just meant for the company.
Apple Pay is great too.
Yeah,
I know. So why they need the credit card? I don't know. Just
I don't know.
Yeah, that's what I say. It's kind of sounds like a hot potato right now. They're trying to pass it on to those who I guess do it better. I mean, JP Morgan and others do it better.
But all the big banks on deck to report earnings next week. So
JP Morgan is one of those banks that reports on the 13th when you start getting your earnings. So JP Morgan looks like it's unchanged, maybe down $1 or so. Market's a little wide in there, and Apple, as I mentioned before, down around $2, $2.50 maybe.
Get your take on this. GameStop has laid out a massive all-or-nothing equity incentive for chairman and CEO Ryan Cohen that will only pay out if the video game retailer's stock and profits soar to levels far beyond anything it has achieved to date following that Muskian model at Tesla. The board at GameStop granted Cohen performance-based stock options tied to a $100 billion market capitalization target and $10 billion in cumulative EBITDA.
I love it.
Yeah, why not?
I don't have a GameStop position or anything else like that, but I love it.
Sure,
It can only help the consumer. It can only help the
I think
investor.
all CEOs should be paid $0. No, I'm just kidding.
No, they should be. It should be performance based.
Sure.
What's
Like a
what's wrong with
coach.
that?
Yeah, like a team. Like
We are. You are.
Sure,
Everybody else is. I mean, you get a base, and then you're judged by your performance. Why not the top? Yeah, lead by example. Agree 100%.
Agree.
Also, I'm contractually obligated every time I do a story about Ryan Cohen. I use this just one photo.
Yeah, what is that? A Bijan Fusé or something?
I think it's a multi-poo.
This is right up
multi-poo.
your alley, too. This is
Look at his little face.
This is what you're looking for. A little tiny dog.
I'm worried about a guy with a dog like
lots of
that. I'm not
cash.
gonna lie.
Look at his little face, though.
I don't know.
Okay, well, I don't know.
The girlfriend or wife must put him up to this. If not, I think that's a problem.
Hey, in a first for the U.S., Utah is letting AI, not a doctor, renew certain medical prescriptions with no humans involved. The state has launched a pilot program with health tech startup Doctronic that allows an AI system to handle routine prescription renewals for patients with chronic conditions.
You know, I don't have a problem with this because I think I'm going to need the blue pill. And is that a chronic, is that thing?
You're going to need it as if you don't have that reoccurring subscription already.
Not yet.
Didn't you and Tom?
Tom did. Tom did. I was going to say I lost.
To get like a wholesale.
I lost my daily Mexican cartel connection.
Gross. Hymns. Can we look at hymns, please?
If we have to, but that would
pivot out of this.
Yeah.
Thank you.
That could be a good trade for Johnny Trades today too.
35 and change.
Yeah, Ivy Rank's only 6, but it's on its butt. Maybe a directional play there or something like that. We can take a look at it.
Hey, staying in the medical sphere, Eli Lilly is moving beyond blockbuster obesity drugs with an acquisition for $1.2 billion of a company called Ventex. They will buy the autoimmune drug developer Ventex Biosciences, VTYX is the ticker, for $1.2 billion in cash, the company said on Wednesday, marking the Zepbound maker's latest push to expand beyond its blockbuster diabetes and weight loss drugs. LLY, you ain't got no alibi. That's Lilly.
Yeah, I think Lilly's it is a hard stock to trade. The markets are untradeable on the option side. $1,100 stock. It looks like it's unchanged, but it's right near or at, or maybe even made a closing high yesterday at 11.08 and change. I'd have to look at it to really give you that, but it's pretty close. This VTYX was a $13 stock. Used to be an $8 stock just about 2 weeks ago. It does have options on it, and they look like it looks like the deal is kind of
the news
gone.
is
It's not something that you can benefit from.
But this stock went from 10 to 22 to now at 13, 14.
To 8 to 13, right?
Yeah, that's why we stay away from
SPAC,
those.
it looks like. I don't know anything about it, but it looks like it was a SPAC.
Biotech or
ETYX.
I will say anecdotally, because I'm on some threads and Reddit posts and stuff like that, people are reporting gyms are busy because it's the first 2 weeks of January, but they're maybe they're not as busy as they have been in past years. So people are just maybe people are trying to just do the skinny shot or I don't know. It's all anecdotal, but I was that would be interesting if there would be a way to parse out the data historically about how many people are, coming to the gyms, or now people are F it. Just give me the shot.
Yeah.
I don't know. Hey, in other news, Ford is going to offer its first eyes-off driver assistance system in 2028 as the company wants to move to level 3 driver assistance systems. The technology will first be available on Ford's new electric vehicle platform, and it will be developed by a specialized team in California. Fix or repair daily, Ford.
Fix Repair Daily is Vinny's.
Is
Vinny's preferred vehicle of choice these days. 1380 looks like it's unchanged, maybe up a nickel, but it's at its highs. Ford, I remember, is a $10 stock. I guess 13 doesn't seem, or 13 in the orders doesn't seem that far away, but that's a monumental move.
Yeah, all the automakers have great delivery numbers for 2025.
In this economy, amazing. General Motors too, trading around 82 and change.
Yeah.
Target, trading near its 52-week lows, announces they're adding thousands of products to become a wellness destination. They're trying to launch a year-round focus on wellness. The retailer's expanding their assortment of wellness-related products by 30% and adding thousands of new items, many priced under $10. Think skincare, beauty, nutrition, food, beverages, weight management, and baby care. Can it turn around TGT?
Trading at 100, I think it had a 10-day up.
Something
like that.
It had its own Santa rally.
Lows.
85 in November, so month and a half, maybe 2 months. 85 in November, up to about 104. Where it is right now.
Nice.
It's just under that 103 and a half. Ivy rank at 19, although it's a relatively lower price stock, 103. Maybe there's something to do there. It hasn't been over 110 since March of last year. So let's just call it from 110 to 85, and it's sitting at 104. Maybe getting a little bit frothy.
Roku. We never talk about Roku, but they're launching a $3 a month streaming service called Howdy.
Howdy.
Howdy. It's going to be their newest streaming channel, and it echoes Roku's ambition to become a broader competitor in the market. It offers ad-free access to library content at a time when streamers are raising their prices. Roku.
Yeah, Roku's got to somebody's got to buy them out. This is one where what's the market cap?
16 billion or so.
16 billion. This is like Apple grabbed this one. Then they have the Apple TVs.
I know, but it's so crazy. Like, they've invented the streaming, like before the Fire Stick and before the Apple TV. Like, before.
We were
their biggest customer at one point.
Yeah, we were their biggest sale. Yeah.
I remember carrying those boxes up all those flights of stairs.
Yeah, we started
them to customers
on Roku.
Yeah, we gave them away.
Yeah.
We gave them away.
Yeah.
Roku boxes. Anyway, $112, maybe even $113. Looks like it's up $3 this morning. Here's a stock that in April was trading around $60, so it doubled since April. IV rank is only 8. Markets are
Finally today, this is great. Billionaire and Mavericks minority owner and 1981 IU graduate, Mr. Mark Cuban, is donating massively to IU football's NIL efforts. Love to see it.
Oh, yeah.
Finally, we don't have oil money, but we got billionaire tech money. Let's go. I love everything about this. He says, let's just say they are happier this year than last year. Cuban had never made a donation to IU sports before last year. So more teams now coming in. It's the NIL era. Let's go.
See, he's jumping on the bandwagon. You can jump on the bandwagon.
Yeah.
I don't
want to jinx them.
He's not jinxing it. You're not jinxing it. You'll be fine.
I can do what I want to do. I have free will. You can't make me.
The NIL, it's getting a little.
Also, we signed a 30-year-old punter, like the best punter.
Now it's we.
Well, yeah, I'm an alumni. Like, I paid for this. You're like, yeah, that's we. Like, I've given them my money. You've never given them money. But yeah, we signed a.
No, I actually have. My daughter went to IU. I paid.
Yeah, Sasha. Yeah. But yeah, I was like, hey, let's go. We're making moves.
We are.
Yes.
We are. Never daunted.
My money's an alumni. We are.
Never daunted. Finally today, for my viral video of the day, I'm just titling this, Are Men Okay?
Oh, no. Can I give you the answer ahead of time? Go ahead.
It's
No,
just
we're not.
funny. Watch this.
Hey, I ain't got no more battery for my smoke detector. So if I hear that bad boy popping in the middle of the night, I know I got to get up out of here. Hey. I ain't got...
That's good. That's good.
You can tell there is not an ounce of estrogen in that home.
Definitely not.
That's pretty good. You gonna do that? It's not bad.
No.
No?
I just take the battery out. Have the smoke detector.
We're going to take a quick 90-second break and come back. Even the S&Ps are down 9. We'll talk about that in a moment. And confirm and send. You listen to Tasty Live. Good job, Alex.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stuff.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Oh, it's so good.
I'll read it to you live.
You're live.
We're live.
I'll read it to you live. I just got a message from somebody. Which welcome back, by the way. Thursday, January 8th.
Oh my God.
We were talking about the Rokus that we gave away in years past, and somebody just wrote me. I won one of those Roku boxes at one of Tom's presentation shows years ago, and he threw it at me, and I saved this Asian woman from being hit in the face with a great catch. Typical Tom in Tom fashion. Anyway, welcome back, everybody. Did you ever have to catch a Roku, save anybody's life? Right
No,
now?
I think I was actually after the Roku part of Tasty.
It was very early.
We were on like the tail end of it. We were sending them out, but it was not.
They waned. They were very hot.
Because that was like year 1 or 2, right?
Yeah. That was right away. Yeah. That was right away. We were still in the old studio.
Yeah.
The big walk up. Anyway, even the S&Ps, let's talk about the market if we can. Yesterday, I don't know if you noticed on the close, I know you were doing last call, but even the S&Ps were unchanged to down around 5 or 6, which is a very small move in the E-mini S&Ps. Yeah. And volatility was up around 2.5 to 3%.
We got 7,000.
We did get 7,000.
Higher than where we're at right now.
That is correct. We're 69.54 and change. But the point I was trying to make was volatility was up around 2.5, 3%. And the market was really doing absolutely nothing. That was kind of like I said, maybe that's the move you need for maybe this upside move has been extended. Now you got 7,000 that you talked about. We're only a skosh away from that at 69.55, and volatility is unchanged at 16.75. Got up to 17 last night. You can see here volatility percolating only the last 2 days or so. Now we'll see if it can hold that 17 level or close over that 17 level. Maybe if it does, maybe we get a little bit more follow through to the downside ever so slightly. You can see here NASDAQ 41 going down 42, 41, but still sideways, well inside that big range of around 25.4 up to around 26 or so. We're about 300 handles, 2.5 handles off of its recent highs. Russell down 9, Dow down 170, volatility up 5 cents. Bonds are down 17 after getting up to 116. They've just been going between 116 and 115, going absolutely nowhere. Bitcoin down almost $1,200, back down to 90,000, looking to break 90,000. Was trying to break 95,000, got up to 94 and change just about 2-3 days ago. Back down near its lows around 88, trading 90 and change. Ethereum down $51. Same percentage basis, around 1.5% or so down on Ethereum. Oil doing the other side, going up around $1. You sold puts yesterday. You covered them already, so good job out of you. I think did you just sell NASDAQ too?
I added a little bit NASDAQ. I had one little runner left over from yesterday.
Short NASDAQ futures, and now you're short them a little bit more. Sold them just over 8, handle 25,800. Where we're sitting right now, about 6 handles below that. Gold down $26. I guess it's about mid-range, maybe a little bit lower end of mid-range for its overnight action. Down a little over half a percentage point. Silver, on the other hand, down 4.5%. That's a big move in silver. That silver pair ratio, 2 gold to 1 silver, traded down to about 55.25 or so.
Yeah.
Is now trading 59.5.
Huge move.
So
$4,000.
$4,000 on the micros, not on the minis.
On the minis, it would be
40,000.
40,000.
Yeah, it's 10 times.
It's 10
Yeah. So big move in just the last 72 hours or so on that gold silver pair. Net gas down around 7.5 cents, trading 3.44 and change. That's all I got. I think we can get to confirm and send them. We got trades in the research team after that. So
let's do it.
Thursday, January 8th. Go to our first slide, please. For someone who's trading a small account and has been trading vertical credit spreads, iron condors successfully, but is wanting to learn another strategy to add to the toolbox and use in a $5,000 account. That's the stipulation here, smaller size account. You're going to love Johnny Trades coming up at 840. That's where we look at smaller size account, under 25,000. Certainly be in your wheelhouse. What would be the one additional option strategy to learn and use?
I would say probably looking for just a naked put.
Yeah.
And I would look for like a $40 to $50.
That's directional, right? There'd be a non-directional here.
Yeah. I think a naked put or like a poor man's cover call type
another
position,
directional bias,
diagonal spread.
Yeah, I was going to say diagonal. You can be both sides. I think that's your wheelhouse.
Yeah.
I would say maybe even widen the iron condor out to make it more like a synthetic strangle.
Yeah, sure.
Would be, I mean, that would, for me, that would be my first step, going from an iron condor, relatively tight, $5, $7, $10 wide, to maybe a $10, $15, or $20 wide iron condor, make it more like a synthetic strangle. You'll be using less buying power, obviously, because you're still defining the risk. That'd be my first thing. And then I think your diagonal spreads, which would use much less buying power than widening the wings of a.
And that'll give you a more dynamic position, a bigger position if you're directionally correct.
Yeah, you can get a little directional with that. You can do a long diagonal, and then you can do a short delta diagonal and something else. You get your whole portfolio become a little bit more dynamic than just hoping the market goes sideways.
Yeah.
Good
question though.
Yeah. Awesome. Next one.
What percentage of portfolios trade should be in undefined risk versus defined risk?
Man, really tough question because one investor's floor is another investor's ceiling. I don't have a hard guideline for you. I mean, you go back to that $5,000 account, 100% of their account or 98% of their account is going to be all defined risk because that's the amount of money they have in their account. If you're looking at a margin account that's over $25,000, you're still going to have some constraints where 70-80% of your portfolio is probably going to be defined risk trades still because relatively low, 25-ish thousand. You get into the $100,000 range, you could do a lot more. I like to take a little bit more risk or have a lot more undefined risk trades than defined risk trades. So I would say for me in an account that's $100,000 or more, I would like to have maybe 50% or more of my positions as undefined.
Yeah. I think that's probably a good bet.
It's not 90.
It's not
90. It's not 10.
No, and
so somewhere in between there. But with Ivy low here, like maybe
that's another consideration.
Yeah, right. That's why I say you can't put this in.
You
can't put it in a box. Maybe 20 to 30% of your portfolio, depending on your. If you have a larger account, it'll be closer to 20%. If you have a small large account, like a 50,000, maybe it's more like 30% of your overall buying power being used. And then what percentage of that is undefined risk? It's kind of up to you. It's hard to say. Your opening trade, I will say this, should have a 65% or more probability of success if you're going to be a naked option. That would be the thing I'd be more concerned with than the percentage of trades I have. I don't really look at that. But I want to have that 65 to 70% or better probability of success. I mean, if you have a 1x2 put ratio spread on or a 1x2 call ratio spread on, that has relatively small delta, somewhere between 10 and 15 delta. Do you really look at that as an undefined risk trade? It is, but it's got an 80 to 90% pop. It's like omnidirectional.
Yeah.
I mean, I guess you put it in the undefined risk trade, but is it really? Next question, please. What do you guys mean when you say it's been an inside day?
We're just looking at the expected move for whatever that product is. I mean, typically when we say this, it's about the market as a whole, but you can see that in the order chain when you look at the option chain. I should say, if you look at like ES or SPX, ES today, the expected move through the end of the day is 22 points, which is nothing. It's kind of shocking.
Yeah,
to be completely honest, but SPX at 26. So that's what we mean by an inside day. And it's really that, you're inside the expected move.
Yeah. I think a good thing to do, and you can make your own kind of extrapolate out from this. You've got, I always look at what the expected move is for the E-mini S&Ps daily. Yesterday it was around 19 or 20. Today it's around 22 or 23. It looks like it's 22 right now. You can easily see that. I'll put up on the screen for you by just going into /ES and looking at the 0-day options. You got about a $22 expected move. So if we were, chopping around inside that $20 range, I would say it was an inside day. Now, you can open, let's say like a day like today, since even the S&Ps are down almost 10 handles. Let's say you open down 30, and then we sit there all day long. Now, remember, the expected move was 20. We're down 30. That still would be an inside day for me because we opened down 30 and maybe we meandered around 15 handles from that down 30, maybe down 40 to down 20, and we just kind of bounced around. That would be an inside day, even though it was outside of that $20 opening print. So again, a subjective question.
But it's also a good indicator of like what you can expect if you're scalping.
Yeah,
if you're looking at
you're expecting. That was a good book to read when you were first going to be born. I read that. To expect when you're expecting. I really didn't read it all. I don't. I wish AI was there. That could summarize
it was a different world.
I was going to say your world is going to change, is what it would have said, and for the better.
Yeah.
Next question, please. It really is a book. What to expect when you're expecting. Should give it to you.
Yeah.
You reading or I'm reading?
This is a good one. I'll give it to you first.
All right.
Often when I tell others that I trade daily, a common statement is that trading is gambling. How would you counter this idea?
I would answer it, and I've answered this question in the past by saying, and I don't know if this is the right way of answering it, so that's why I was trying to think of something better to say. But I would say, it's like gambling, but I'm the house. I'm the Luxor. I'm the Hard Rock. I'm the Ho-Chuck Casino. I'm the MGM Grand. I'm the Las Vegas Sands, meaning that, you're the house. You can set, like I just said, if you're looking at a math model and your entry on a trade has a 65% pop, just about a standard deviation of being right, and you can manage early, which you can't do when you're gambling, although now they've changed that game. You can trade gambling intra. You can bet on every down, whether it's going to be a run or a pass or anything else like that. So they've changed that a little bit. But with completely tight liquid markets, no rake of 10% like you get with gambling.
Yeah, you don't have the drag.
You don't have the drag. I would tell those people that trading's probably not for you unless you
if you're that.
If you get a little bit more, unless you want to get a little bit more educated about it. And you can always go to the Learn Center, which don't pay for anything. Go to the Learn Center, get it for free. Go to our Learn Center, get it for free. That's what I would point them to and say, do me a favor. If you really think it's gambling, and if you think it's gambling, then there might be some sort of edge there for you one way or the other. Go to the Learn Center, check it out, and then let me come back to me and ask me that question again. Do you still think it's gambling? That's how I would answer it. Go to the Learn Center.
I think also the other angle is that it's not binary outcomes. Like if you go to a casino and you play blackjack or roulette or whatever, it's win or lose. There's no in between. There's no strategy to it. It's all probability based. In trading, there is strategy. There are things that you are trading other than just up or down. When you sell puts, the stock doesn't necessarily need to go up. You can have vol contract. You have time decay. If the stock goes down a little bit, you can still profit from that trade. So that you're not trading binary outcomes. It's not coin flips. There's strategy that's baked into it, and it's a zero-sum game. If you go to the casino, you lose because you are playing less than 50-50 probability games. Right. Everything is. Right. And so you over time you lose. Here you're not, that's not the case. And there's always an error, there's a point of uncertainty that everybody is dealing with that is tradable, right? So your opinion on whatever the uncertainty is, whether the market's up, down, sideways, volatility contracts, whatever, can be different. But we can have that different.
We see the same thing,
and that's
different assumptions.
Yeah, and that's what we're trading, and so and everybody has that. That uncertainty is across the board, and so there is no edge. There's the uncertainty aspect of casinos is owned by the house. The house knows that you might.
And know it going into it too.
Yeah, right. The house knows that you might win 5 or 10 or 100 times in a row, but if you play that game 1,000 times, you are going to lose.
That's impossible.
That's the difference. And so, in a sense, yes, on a day-to-day basis, there is an air of gambling to it. But over a period of time, and when you're trading more than just binary outcomes, the component of strategy is not gambling, in my opinion.
Good job out of you. Even the S&Ps haven't moved too much. This is where they were at 11:15 last night. Because that's when I went to bed. They're down 7.5.
That's a late night for you.
I know. I told you.
The hockey.
Stupid hockey game. What can I tell you? Yeah, down 7.5. NASDAQ down 35. Russell down 8. I will say one thing. Volatility was a little bit higher last night. It's 16.75 right now, up a nickel. So we'll see what happens with volatility. Let's watch that for some directional bias. If volatility stays weak, continues to go a little bit lower, maybe the market gets a little bit of wings underneath it. If volatility stays bid, the second or third day in a row, you might get a little bit of movement to the downside. We'll take a quick 90-second break. We got more Tasty Live with trades and the research team next. Be back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nikki, we are back, son. And you know what that means? Time for trades from the research team. Who is our first researcher?
Shark.
My man.
The one and only.
The one and only.
Let's get some formalities out of the way.
Uh-huh.
Happy New Year to you. How was your New Year?
My New Year was great. How about you guys?
Awesome. Good for you. Did you go home and see Mom and Dad?
Yes.
Absolutely.
Awesome.
How's Papa
Family
Shark?
came over. Huh?
How's Papa Shark?
He's doing good. He's holding up.
He's holding up? Okay.
He's holding up.
Good,
Yeah.
good.
We went to Rockefeller Center on the day before New Year's.
Okay. Oh, that's where my mom was a waitress down at the Promenade, right by the ice skating rink there.
Giant Christmas tree, ice skating rink.
Yeah.
Super crowded with all the tourists.
You are a tourist.
Yeah, I was a tourist.
You were a tourist. You're born and raised in New York, right?
In New Jersey.
In Jersey. Fair enough.
That offends.
Jersey, Staten Island, Brooklyn. That's just New York, okay? I mean,
You're one of the very few New Yorkers who thinks that.
Yeah, no. Well, I know. Well, I've become a lot softer in my old age.
Oh, because you live in the suburbs now of Chicago.
Yes.
So he
I consider myself a Chicagoan being in the suburbs, right? Right.
I don't know if I agree with that though.
Right.
You're very suburban now. You talk a tough game like you're like this Chicago guy, but you are about as suburban as it gets.
Well, I've lived in the suburbs for 35 years.
I know.
You too, by the way. You were born and raised there. In the suburbs.
But I'm
just off the lake. You know what I mean? Let's not,
I'm a Chicago guy. I've been in
now
Chicago
you are.
for 15 years.
Whatever. Whatever.
Yeah.
One more question to ask you. So I bought my son, who's 16, my other one, my good one, not this one.
Okay.
A car. When you were 16, did you get a car from your? Really?
No.
I would have bet a lot of money that you did.
No, I was supposed to get
Shark, you're tougher than I thought, man. Babe, really.
If I stayed at home, I was supposed to get my dad's old car, but now I don't have any over here. So.
Oh, so what did you do when you were 16? Mooch rides from your friends?
Drove the family car.
Yeah.
Oh, I'm not letting him drive the family car.
No. I had to ask my dad permission. And actually, I never asked my dad. I always asked my mom because I already knew how that conversation
would go with your dad.
You know how he is with cars. Okay?
Yeah.
He has a new one every 6 months. Okay.
Yeah, that's another thing. Yeah, he's real bougie. I keep my cars forever, pretty much. Yeah, not that.
But yeah, otherwise, Mooch rides off the fence. That's what I still do with Gad nowadays. So.
But mom let you
I pay for the gas. Okay.
And you paid for the gas too?
That's the trade-off you have to do.
At 16 or 17?
What do you think?
So wait a minute.
What do you think the probability is Vinny
not
pays for gas? You think Vinny pays for gas?
Absolutely not.
I'll give you a Polymarket inside information. Inside information, which is interesting. So
I was working at Best Buy at $8.25 an hour to pay for my gas.
Vinny worked at 14.
And I was scalping TVs.
in the black market.
Yeah.
Vinny worked when he was 14. I mean, my kids worked
for about 2 months.
No.
It's one of those summer internships.
No. He worked at the ice cream shop for a couple of years. Last year he took a half a season off or so to get his driving.
He finally made it.
To get his driving skill. But that's interesting because you pay for your own gas, but you won't pay for your own DoorDash today.
No, I do. Okay.
That's not what I hear. That's not what I hear. All right, what's your trade? I don't want to.
Done that in 2-3 weeks because I've been at home. Actually, you're right. When I'm at home, mom's pays for things, so I'm not completely as independent as they like to think I am.
You should work the system as best you can, my friend. I would be doing the same thing, if not more, in your position.
Yeah.
But they have a very expensive lifestyle in New Jersey. Okay, my parents.
Yeah. Your mom's got to stop living outside her means. I mean, your dad can only do so much. What kind of trade? I'm just trying to help you, Shark. What kind of trade you got for us today, Baby Shark?
I was trying to find something in the non-AI space. The airlines are going to start using AI too. So every single seat on the United flight back home was full. Like the entire thing. And people
at $6,000 one way.
Yeah,
right?
People were having arguments on. The overhead bins and stuff.
Of course.
Some people had to gate check their bags.
Yeah.
Unfortunate stuff. I'm going full in bullish on the airline stocks just for this.
Wow, even at all-time highs. Okay, go ahead.
Even at all-time highs. Nick always says, bring your wackiest, wildest trades up here.
I want the fun stuff.
So I'll give you the fun stuff. So bullish at all-time highs, Strangle. strangle just so in case I'm wrong. Okay, 105 to 135.
Okay, I like that. So you're selling about a 20. Stock is basically unchanged, 116. You're selling about a 25 delta put, 20-ish delta call. So you're leaning about 5 deltas long. I like it.
Yeah,
I like it.
I'm getting a little bit of pushback here on some of your answers. I don't know if I should out you here. I'm getting. I was correct about the DoorDash thing.
Sure.
I'm getting. And there's some.
He's a smart guy. I mean,
he deserves it. I mean, Emory, right?
Explains the point.
Emory, right?
Yeah.
Okay, listen.
I mean, you leave.
If one of my kids could have gone to Emory, all right, I would have been paying for your DoorDash too. Okay, I mean, I got Batista's with CBs. I mean, that's where we live in that middle
I spend
world.
on my own card that I pay off, but because of the point.
Now I'm getting a little bit of discrepancy on when you got your license too. At 16.
No. I got it at 18. In New Jersey, you can't get it until you can't even get to start the process till you're 17 or whatever. It's like the last
I
state.
get a little discrepancy. You might be even older than that. I don't want to out you. It's okay. It's okay. It's okay. I don't want to out you. I want to get to my next reason. I don't want to be.
No, according to my dad, I'm never going to be able to drive ever. Okay, when I was at home.
Your dad's not a good driver. We were going to Brooklyn. I ended up in Staten Island. Okay, and it cost us like $30 to go over the bridge each way. It would have been just. This is why you can't afford free. You just pay for the Uber and you get to your destination. Your father took me. It was an hour difference, and we had to go over different bridges. I found myself by my own.
Who lives in Chicago, okay, in the city, okay, have not driven for 6 months or whatever. Came back home. I was driving perfectly fine, whatever, okay, and he still made comments. He's a backseat driver. That's what he is, okay.
I'm going to tell you something. You're going to lose your DoorDash account. Who's our next researcher?
Thank you, Shar.
And you guys.
The General, Mr. Kai. Mr. Kai, I hear you're a little bit under the weather, as is Jenny today. So Liz and TP will be TP's film. What's that?
Gad too, I think.
And Gad too, sick. Yeah. Everybody's got this mystery virus going on. What do you? Are you sick?
Or are you just playing hooky?
It's a flu season. You always got it from your kids.
Give us a little like cough. You're supposed to go. I'm not playing hooky. That kind of thing.
By the way, Happy New Year.
Happy New Year, Kai. See, Kai's a gentleman. Yeah. Happy New Year.
Yeah. What's the year this year? Weren't we snake last year? Was
horse.
it snake? It's horse this year. What does that mean?
I thought he said whore.
Yeah,
I thought he called you a whore.
Yeah.
Horse. What does that mean? It's I think it represents harmony, calm.
Bullshit! Yeah, 2026 is starting out anything but that.
Yeah, we are.
Maybe it's the year of the donkey. What's the donkey? Not like a horse.
No, we don't have year of donkey. We don't have year of cats or fish. These are the common mistaken one. Yeah.
All
right. So we're getting some calm.
That's supposed to be a good year. Hopefully, 2025 was rough.
Yeah, I know a lot of people didn't have a good 2025. I think Tasty Nation did okay, but
I think
yeah.
It was great.
Oh, that's actually a good observation.
Yeah.
I'm putting together a 2025 Zero DT summary. Actually, it was pretty good, 2025.
Mm-hmm. Yeah. Right. Well, what do you got for us in 2026? Show me a harmony trade.
All right, this is not a harmony trade by any means. I know you're fully committed to the gold. I want to add some silver position.
Okay.
It's SLV, and unfortunately, I've changed my price 3 times in the past day because it went up and went down. It's 67-ish something right now.
Silver. SLV, silver, the future is a different
SLV.
price than SLV. SLV is 67. It closed at almost 71.
Yeah. Silver down another 4.5% today.
Yeah.
Big move.
So I think it's probably be trading in range. You're getting close to 65. So that's why I want to put on a 65 butterfly, $5 wide. It's pretty cheap. It's a short-term shot. So
yeah, you're taking a short-term directional shot. Well, I mean, it's not short-term. I mean, you got 44 days. There's plenty of time here in the trade. Relatively tight. In years past, I would have said $5 wide and silver was plenty wide. Now with silver moving, I don't know, 30 handles or $30 SLV, this is a relatively tight butterfly. I might widen it out a little bit, but I don't hate the trade as a shot.
It's a cheap way with volatility and the skew that you have in silver and gold too has the same component as well. But it's a cheap way to get some sort of short delta here, or to at minimum play the downside.
Very small.
Yeah, very small. If you're in a little
Johnny-sized account,
you
could do something like
this where it's a cheap shot. It's not gonna, over the next couple of weeks, if silver rallies higher, this will move 10 cents, 20 cents. It's a very cheap way to kind of get a lottery ticket type trade. In a smaller sized account.
Even for naked position on Tasty Trade platform, it's only $1,200, $1,300 buying power, and you can collect $1,200. Probably not this morning. You can still collect like $10.
Let me give you an idea. January, with 8 days to go, as butterflies expand closer you get to expiration, this butterfly is trading for a little over $1. I mean, so it's not the one that you're looking at in February with 44 days is not going to move that much. So I'm just synthetically looking 8 days away. We closed at 71, much closer to your price here on this bearish butterfly that you're looking at, and it's moved about 20 cents. So if you have a shorter time frame, maybe you go into maybe the 8-day options or something like that. If you have a longer time frame, you want to spend a little bit less, you can go into Kai's trade. I don't hate it, Kai. Not a very high probability trade, but you've got it's not a high probability trade at all. But it's a very cheap shot. Yep.
Yeah. But if silver stays here, this will be, in 2 or 3 weeks, it'll trade at $1.50.
Yeah.
You could kind of get a 100% on this.
Yep. Good job, Kai. I don't hate it.
I like it. I think we're gonna look at this for a little Johnny trade. Maybe UAL too.
Yeah, another way of doing it.
Just to find the risk.
Yep.
Wide.
Beautiful.
Good job, my friend. Thank you. Who is our next, I believe, and last research? I believe they have 2 trades. Julie, I don't want to be rude to you like I was to Kai. Happy New Year.
Happy New Year to you guys.
Happy New Year to you too.
Happy New Year to you.
Do you have a resolution?
Oh, my resolution. Oh no. What's my resolution?
Do you
have one?
No.
Do you guys have one?
No.
Nikki, do you have one?
Yeah.
You have one?
Well, it's the easiest one to say, but I gotta eat a little healthier. I gotta do a little.
That's a good one.
Yeah.
Mine's way lamer than that.
Really? What is it?
What is yours?
I'm trying to get better at calisthenics, which kicked my ass last year, and I need to up my game.
Okay, that's good.
Calisthenics,
a morning stretch.
Stretches.
I need to do that too at my old age.
L-sits. I want to do L-sit handstand inversions. That's like a very ambitious goal. It's all upper body, and I've neglected upper body for the last 10 years. So it's good to finally do it.
All right.
See,
you got to do your morning stretches too.
Stretches is always a good idea. I don't stretch either.
I know.
Yeah.
Yeah.
I know.
Because if you don't, you got to start, because then you end up like old.
Right. I know. I don't want to drag my leg in another couple of years. Yeah.
Wobble and
I know.
You got to drag the leg. You got to kind of hold the leg and move it.
I don't want to look like that. I know.
Yeah. You don't. I don't want you like that.
Thank you.
Because if you end up like that, you know what happens. I got to go mercy. Mercy.
Julia,
So what I'm hearing
before he puts me out of my, what's that?
I was going to say we can do like morning calisthenics at the office. We can do it every morning.
Will you lead it for us?
I don't. Ding, ding, ding. Let me think of a routine that everybody can do.
We got some pretty fit people in the office. I feel like we could
We actually do, yeah.
And we got some yogis in here. Like, we got some peeps that I think
I'd like to see this happen.
That could do this. Why not?
Some tasty branded yoga mats.
Yeah.
Everyone gets matching leggings. That could be fun.
Yeah, let's do it.
Oh, now you're thinking about merch.
Yes.
Oh yeah, merch on the mind.
Yes.
Oh, there we go.
All right, what's your first trade?
Trades. Okay. The first one is we got silver and gold, which has actually, okay, we've definitely seen some chop in gold the last couple of weeks, but it's actually been a little bit on the sideways side versus silver, which has been like pretty consistently bullish or over the same time frame. So I have a very love-hate relationship with gold. When it moves, it really, really moves. So I'm going to find risk in here. I'm actually going neutral because of the kind of sideways-ishness, noting that the past performance doesn't necessarily indicate future performance, but that's kind of like roughly how I tend to gauge directional assumptions. So I went, how did I go here? I went with the 377, 440 short strikes and then $10 wide on those. And I think if I remember correctly, I was aiming for around like 20 delta, maybe a little, maybe closer to 18.
Yep.
Yeah.
It's down about $2 this morning and I adjusted. So it should be adjusted for that.
Okay.
Yeah, you're right there. I mean, you're about about a 20 delta based on the closing price yesterday, but it's not going to move all that much today. 43 days out. So yeah, I like it. Delta neutral. 1/3 the width of strikes. We'll take a look at this.
But, Ivy ranked pretty high, 59. ETF, not having to worry about earnings so much for this one. There's a whole bunch of other stuff you got to worry about. But I feel like the defined risk, for me at least, gives me a little peace of mind. So that's generally what I tend to do with these.
I like it.
I like it too. I have no problem with this. Good job by you. What's the next one?
Okay, next one, a little bit more of a stretch. We got the Qs for the next one. Ivy rank of 20, which is not as high as it could be, but across like the market ETFs is actually quite high. And again, you don't have to worry about earnings to the same extent. Obviously, there's like a little bit of like earnings, volatility increase that can come, but with a diversified ETF, it's much less of a concern, generally speaking. So Ivy rank of 20, to me, that's still tradable. It's also had like a little bit of a rally the last couple of weeks, but compared to like the Santa rally from like 2 years ago, thinking like the 2024 one, much calmer. So decided to go neutral with this one as well. It's just kind of my default because I suck at making a directional assumption. So I went with the 596.55 short strikes, $10 wide on those, collects 309 in credit for 691 in buying power.
I like it. I'm leaning a little bit of short delta into today. I'm hoping we get a little bit of a down move, a little bit of a pop in volatility, and this will be a perfect trade to add on for Johnny Trades or something like that.
Just a little sprinkle.
I like it.
Good job out of you. Good job out of the team. Appreciate everybody's support. We're going to take a quick 90-second break when you get ready for this opening. Even the S&Ps have moved about 2 or 3 handles in that half an hour time frame. They're down 10.5. We'll be back in 90 seconds with Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nicky, we are back, son, and you know what that means. The opening bell is imminent. The moment I've been waiting for ever since I woke up at 5 o'clock this morning. Even the S&Ps are down $10.50. NASDAQ down 57 or 58. They're all down around 0.25%. I guess the Russell and the Dow are the weakest, down a little bit more than 0.25%. Dow down 230 and change. Volatility up by 6 cents, but at the low end of its range for today, 1670. But you can see here, it finally percolated and popped itself up a little bit. Let's see if it can hold over $17 today on volatility. Be interesting to watch. Market seems like it's kind of at a little bit of 50 handles off of highs.
Yeah.
Can we say it's an inflection point? It seems like 69.50 on the E-mini S&Ps is the old 68.50 from last month. I mean, we've really just been hanging out between 68.50 and 7,000 now.
Very low volume. Like I've been talking about it with Chris over the last 2 days on last call. You've had a million contracts traded, and we get to that mark in the last 15 minutes ish. Yeah. It's kind of a weird.
But option volume's been hanging in there. We just had the opening bell. I don't know where my ding 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 went. There you go.
There it is.
Yeah, a little low D over there. Even the S&P's moving about $1 to the upside. Gold is down around $29, lower middle of its range. Silver making a move lower, although it's 20 cents off its low, 73.58. That's your big move on a percentage basis. 5%. You saw it just pop up there. What do you think here, my friend?
Do you does that concern you at all? Like the low volume, kind of like I guess some of it is probably still kind of a carryover of all the holiday time off, but start of the year, you think people start putting money to work. It's not there.
The stair step higher on very low volatility is kind of nice scalp on the NASDAQ. You just bought them
67,
25, 758, which is right near. Not near the lows of the day. The lows were overnight.
I still have some left over.
The lows of our movement right now. Even yes, people. I just don't like the stair step inside moves with the volatility contracting.
Well, that's the pain trade.
Yeah,
because you have no, you're not getting any juicy volatility. Right. You're not getting any kind of washout big moves that you can either sell puts into or. Yes. It's the grind.
Been no scare, no velocity.
Yeah, the grind is brutal.
It's been a grind. Yeah. And if you faded it, you never were able to get anything back. And if you bought it and got out, you had to buy higher to sell it higher again. So it's in that kind of market. A little, I don't know, not the best with volatility hanging in the low end. Bonds down 18. Let's take a look across the board at what's happening. You closed 50% is what you were trying to say.
Yes. I still got some left.
Of your NASDAQ futures. On the downside, App 11 down 11. It's a typical size move for App 11 one way or the other. Meta down 9.5 or so. Tesla down 6. MSTR down 4. MSTR getting no love anywhere. MicroStrategy's trading near its lows too. Silver down around $3.80. That's SLV. Carvana down around $3. Oracle, Apple down 2.5 to 3. Coin down 2.5. Let's see what's moving to the upside here. Costco up 18. $900. Sneaky back to $900. Costco's had a nice week here, going from around $850 or so to $900. No split or anything there. I thought it was going to split when it was trading closer to 1,000 a few months ago, but no can do. Caterpillar, BE, Google up $4. Palantir had a good day yesterday. Palantir up another $3 today. It's had a good move up in the middle of its range now. IV rank at 21. It has earnings coming on February 4th. Right now, looks like a rudderless directional ship. It's just like a sailboat with no wind one way or the other. What's that?
Got a big day tomorrow with the
big day tomorrow. So you think we sit for today? You think maybe
I think you got a bit volatility. I think you have a little bit of downside, and you got to get a little bit of a bit in volatility into tomorrow. I mean, there's stuff on the docket that is market moving. The tariff stuff. You got employment reports. You would think there's something there. I don't know.
Yeah, you would think unemployment report comes out for those.
But you have the tariff ruling,
and you have
that's a huge. That's been the talk of the last year.
No, but it's done nothing to the market for volatility, right? If I told you that was going to be the talk and it was going to come to this big culmination,
all at once, though.
Yeah, they really do.
It's like today now everybody realizes, oh shoot, we got big deal tomorrow.
So what is that? Do you do anything to your portfolio with that in mind?
Yeah, I have lesser positions on, so I have capital.
Yeah, but you've got some moves that you wanted, and you were able to take those positions off, at a nice profit. What if you didn't have some profits and you were kind of struggling? You got 44 days to go left to expiration. Let's just say you're staying mechanical 43 days. What do you do there? Nice.
That was the rest of the NASDAQ.
Yeah, nice as NASDAQ's down 140.
Yeah, I mean, I have capital on the sidelines. I was short NASDAQ, so I played that. That's what I'm at right now.
Do you look to get a little bit of directional delta to your portfolio now that the market seems to be, kind of drifting sideways at all-time highs?
Yeah, I mean, I wanted to get into that UAL position. I've been selling some puts. I sold puts in Meta. I sold puts. I actually sold those UNH puts.
UNH?
Yeah. It was down like $10 yesterday.
Yeah, it's unchanged right now. UNH, I find a hard product to trade if you're not directional.
Yeah.
Yeah.
I was trying to get into that UAL strangle, but the markets are like shockingly bad. It's kind of weird. I'm looking at, and this goes to kind of the low volume trading that we've had. You can tell that nobody's out there trading right now.
Right.
I mean, across the board, you see some of these markets. UAL, I've traded 500 times, and they're usually 5-10 cents wide. These markets are 40-50 cents wide. It just tells you that we're in kind of a low liquidity market right now.
Yeah, we certainly are. Let's look at the expected move on even the S&Ps. You're looking at around 23 handles, so volatility upticking ever so slightly on those 0 days. Still relatively low on those 0 days. Yesterday, we put on an SPX trade right on the opening bell. What do you think about today?
Yeah, what do you think? You want to do it?
Yeah, I mean, I'm trying to go with you just mentioned a lot of coming out tomorrow. Looks like volatility is upticking a little bit. We haven't really gone anywhere overnight anywhere else. Volatility is kind of, look at /VX, kind of hanging. Yeah, sure, why not? Let's take a look at SPX right now, and then we can get to our Johnny Trade segment. If you're going to the 0 day, you go into somewhere around the 20-ish delta. It's 68.85. Yesterday we did a $10 wide one. I'll go to $10.
Yeah, let's do it
right now, and then the 69.35, 45. Looks like it's trading around 315. What do we do yesterday? 340-ish or something?
335, I think.
The 335, yeah,
something like that. Yeah, let's do it. Put it through for
us. You want to go in at 320? We'll see if we can get filled there. All right, awesome. That's the trade. We'll see.
There you go.
Yeah, there you go. 320 was pretty easy. Even the S&P's uptick just a little bit to get filled there.
Do I take this Intel position off?
Intel, you went to
I did a 1/3 ratio. It's up like 90 cents.
Sure, why not? Yeah, again, you've played a directional move in Intel both ways, and plus we got Johnny Trades coming up next. Maybe put on another trade. Intel after that.
I have no problem with $17 here. God, look at LMT. Look at that chart.
LMT.
It's one.
That's the one that moved $40.
So yesterday you got the 495. We're at 545.
Yeah,
it's 10% down, 10% up in 24 hours.
A good thing to talk about. Horrible thing to look to trade. The options in there are just not tradable.
Yeah.
So be careful in there.
Yeah.
If you're going to do anything. You ready to take a quick 90-second break or something like that?
Sure, yeah.
Okay, all right, let's take a quick 90-second break and come back. We got more Tasty Live after this. We got Johnny Trades. We're going to do this live, looking at, this is a segment for your smaller accounts where we're looking to put money to work, but using it in a frugal way. We'll be back in 90 seconds. Let's Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nicky, we are back, son, with the E-mini S&Ps down 1250. This is about as low as I've seen them since we've been on the show. I know they are about 15, 16 handles off of their lows made last night. Russell is your strongest of the group, up 12. Dow and Dow is almost up. It's down 34. NASDAQ's your weakest of the group, down $160. You scalped out of your futures nicely. I mean, you got them down to 25, under 25.7. Mm-hmm. They're 25.672 right now, so about 20 handles lower than where you scalped.
Missed out on 30 ticks.
Nah, you can't look at it that way.
Joking.
Positive scalp is all you can do. Bitcoin under 90,000 to 89.8. Oil's been up $1. It's up $1.15 right now. Gold.
No vol though.
Again?
No vol.
No vol anywhere really right now. Volatility 16.75. Up a nickel or up 10 cents right now. Even the S&P's just dropped about 7, 8, 10 handles in about a second here. Even the S&P's down 19 or 20 right now. So you really have some kind of pockets in the market with low volatility. You ready to look at some Johnny trades? I
got a couple things that I actually have to do here.
Okay. We got to clean up.
I got to clean up. I mean, I've been
clean up on aisle 7. Clean up on aisle 7.
I got a problem child in MU that's fully in the money. It's a butterfly, so I got to hold that one. But
butterfly defined risk trade. Not too much you can do there, right?
Yeah. So I have a short put in Nike that's right at the money. We can look to roll that out. It's basically a scratch. Maybe that's a decision that we can kind of talk through here.
Okay.
I've got a call spread in, and you don't have to go to yours. I'll go to my platform.
Okay, cool.
I can go to it here. So I have this Micron butterfly. This one, I wish I was around and not on vacation because we were right where we needed it to be just about a week ago. That one is a hold at this point because we there's nothing you can do with it. Butterfly.
Right.
Just got a face ripper of a rally, 40 points to the upside. So at this point, it's a lottery ticket because it's basically a full loss. It's marked at $9. It can only go to 10. You can't really do anything there with it right now. I've got this short put in Nike, which is another one that we've been holding for a little bit. Probably had an opportunity over the last couple of weeks, but again, that's just how it happens. So we got this naked put. Maybe
So you're saying you're not a diligent manager. That's what I'm hearing.
Maybe we roll that one out. We have a call spread in the Qs. We sold this at $3.35. It was an iron condor legged out of the put side for 38 cents. I think we could probably look to close this one out. It's marked right now at $1.60, so it's probably like 140-ish dollar profit there on the table.
Wow.
I mean, this is a good move. We needed this.
Yep.
Same thing in SMH. I have iron condor here that's basically a scratch. Maybe we leg out of that put spread and lean a little bit of short with a little bit of short delta here. And then we have another butterfly in Tesla, which is very far out of the money. Maybe we close those out. So let's
This is the Johnny account that we put on these trades. You have it on a separate account. This is the one that we watch. We've closed all the other ones for profits, obviously. Yep.
So let's do something with the Nike.
Nike one? Yeah, let's do it. Nike down 35 cents, sitting right at your number with 8 days to go. I mean, if you're still bullish on Nike, which is in the middle of its most recent range, IV rank of 20's not great.
And this is the $1 million question. So just to give you some context, we did this short put, I think it was into earnings or close to earnings. And I just pulled up the market snapshot, which you can get to if you go to the right side menu, order chains, and then you click on you right click, go to view market snapshots. It'll give you this little pop out here. Stock was at 67. It's come down to 62 and change, right at the money here. The put is basically the same price that we sold it at, right? So we sold it at $1.43. It's marked at $1.46. Yeah. The $1 million question becomes, do you hold it for 8 days? Or do you roll this out to February?
Obviously, directionally wrong, right? Stock's $5 lower than where you wanted to be. Unchanged on the position. I roll it from that 8 day to February of 43 days, and I might even roll down a strike to 60.
Okay.
And I put it in for a small credit. It looks like mid price is a small debit.
The stock's at lows though. You want to lean a little bit long here.
Okay, then you can go to the 62.5 strike, and then you would be selling it for maybe $1 in credit or so.
Yeah.
Yeah, just it all depends on no delta change or reduce your delta is really what it comes down to. I mean, you could be a big shot, Johnny, and go to the 65s if you want to and get even more credit.
And do like
But I don't think Nike's on its. I mean, Nike is lower, but it's not on its butt.
Yeah, it is. I mean.
Well, 63 is nowhere near its lows of 57 and change.
Yeah.
I mean, up to you.
We're gonna keep it going. We have a pretty light portfolio here. We're gonna put this in at $1. Let's try and get filled here.
Okay.
I get these in. All right, so we're in for 98 cents. So we rolled that out, so that gives us a net. That is $2.41 in credit that we've collected on this. So our break even is somewhere around 60-ish.
That's correct, and it's trading on the offer $2.37. So you're basically sold the offer in February.
So we got this call spread too. I think we closed this one out too. So this was part of the iron condor that we had. We're going to close this one out. This will free up a little bit of buying power for us too.
So you're looking to close this trade?
Yeah.
Good.
There we go.
Oh, there you go. Beautiful.
All right. So and
you'll see all these fills come in after the segment.
Yeah, once I have a moment to publish these. But you'll see on the order chains, it adds up all of your credits and debits, gives you your net profit on that too. And I can show that for Nike too, just to show the order chains feature. So we rolled that put. So my first sale was $1.43. Rolled it for $1 or for 98 cents. That gives us a trade price of $2.41. It's marked at 227, so I'm up 14 cents on this. It's basically a scratch, but it adds up. When you're managing all your trades, it helps you track them along the way here.
If you just right click quickly on that thing, I'll push them through if you want. On the follow page. I'll push them through too. You'll see those under the Johnny trades with that silhouette of Nick on them.
The Tesla position. So basically, so this is one just to give an example of like where you can buy in the risk, because we've done this. I've done this with the gold position that we have in our main account. I do it all the time with ratio spreads. I like to do this as just a lottery ticket type trade, but we'll walk through it here. So
okay. You're gonna walk through the math a little bit, right?
Yeah. So on the analysis mode, and you can go to the analysis mode here on the left side. Here's my position for my butterfly, right? So at expiration is the binary risk profile here. We sold this at 96 cents. If the stock stays out of the money from where my position is, I keep the 96 cents. Awesome. Great trade. Now you can see where your risk is up here. So we have this, did we do it 5 by 10? We did it by 10 by 20, I'm sorry.
Yeah.
So we have this 10 by 20 spread, right? So you have $10 wide call spread. You collected a small little credit of 96 some odd cents. So your break even here to the upside is $10 above where your short strikes are. So you can see right here at the 35 strike, 535, that's where you start to have risk. So if you can buy in this risk for a cheap value,
sure,
you can own this butterfly for a net credit. You have no risk on the trade. And what we mean by that is our risk at 435. So if we can buy this 435, you don't really need the 545. You certainly could just leave it, but I typically just close out of it to make it even cheaper. If you can buy this spread, it takes off that risk profile, right? So you can see here, and this will adjust with the debit paid. So I'm paying 3 or 4 or 5 cents for this, which nets me 93 cents in total credit, which is why you see this all green area, with a little bit of a lottery ticket, a very low probability lottery ticket
very low
to the upside.
lottery.
You have to keep in mind, doing this adjustment 9 out of 10 times or 9.5 out of 10 times, you're throwing away the value, right? But
that's correct. It's just like a scratch off ticket or a lottery ticket, as you say.
Exactly. So you're paying 2, 3, 4 cents. It takes off. The other positive of this adjustment is that you're taking off that buying power, though. So there's a value to that.
And in a small account, that's a huge value. In a large account, it's not as powerful. But in a small account, you're using that new money now that you freed up, that couple $100 that you freed up on another trade, which is the appropriate size for your small Johnny size account for a new trade that has a much higher positive theta to it, and maybe even a directional bias if that's the direction you want to go.
Exactly. So the adjustment that we do there, it locks me into a profit, say 95, 93, whatever, dollar profit.
Which is a great profit on a trade like that. Yeah.
I got a lotto ticket, 2-3% probability
right
of making up to $1,000 if we pin the 535. It's 100 points out of the money.
How about just making another $100
or another $100? You get a $50 up move,
right? For no buying power usage, additional buying power usage, freed up buying power.
That butterfly goes to 50 cents if we get a $50, $70 move, whatever it is.
Yep.
And then freed up the buying power, $1,000 in buying power that we can use elsewhere. So
I like it.
So those are the adjustments. Let's look for a couple trades here.
Okay. Let's take a look at it. How about I'm going to throw out some names for you. Ready? I don't think these are the places you have positions in.
Yep.
We mentioned HIMS earlier. I'll just throw it out there. BMNR. I'll just give you a couple. Give me something. Halliburton, maybe with oil. Upstart. UPST. CELH. FCX. Fremont. ARM is another one. Rivian. RKT. Okay. I'm just throwing out names that hit you. So.
Okay, I like that. I actually was going to go back to the well too in Netflix.
Okay, you could. I went for lower price stocks.
Keep
with
those.
OKR.
I want to do those. Okay, I want to do some of those.
Sure.
Netflix, you got earnings coming up in the next couple weeks. How do you feel? And volatility is relatively high. Mm-hmm. Stock is on its butt.
Yeah.
I mean, it's reversed its entire kind of move from the middle of last year.
Mm-hmm.
What do you think about doing like a wide put spread here on the downside?
I kind of like it because I've been watching a lot of Netflix lately.
So I like to go somewhere around the 30-ish delta, 25, 20, it depends on your directional assumption. I think you lean a little bit more bullish here. I think we're both kind of a little bit more bullish here.
Sure. Just playing the contrarian role, right?
Yep. So we go to around the 30 delta. Now, if you're naked on this position, $1,200 in buying power. A little bit past.
Right.
Could pull it off, but a little bit past my threshold. I try to keep these under 1,000 or at 1,000. So I go and I buy a $10 wing. You could go and, buy a $5 wing if you want to use less. And it'll trade for about 1/3 the width of strikes. I'm going to go 10. It trades at about $2 here, a little bit less than 1/3 the width of the strikes. You're only doing one side here, so that's not a shock. But it gives you about 20-ish deltas on the spread overall, 70% pop.
I like it.
Let's say you. Good? Let's try it.
Go for it.
We'll do it at 207. Okay.
Beautiful.
All right, so we're in at 207.
I like it.
All right, give me one of those lower priced ones.
Halliburton, FC.
What's that?
HAL.
HAL.
Yep. HAL, $31 stock. It does have earnings January 21st. You're going to probably run into earnings all over the board here. Stock is near its highs, IV rank of 33. Markets in February are not that great. I'll give you another one. BMNR, Upstart, UPST is one that we haven't traded. Earnings aren't until February 10th, closer to February 20th expiration here. IV rank's only 15, but you got a 90% monthly implied volatility in here. Stock's on the middle-ish end of its range, got down to about 35. It's been as high as 85. FCX is another one.
A little copper exposure.
Down $2 today. It's been on a huge run from 38 to about almost 60. Earnings are January 22nd, so they are close. A little bit better markets. You remember, all of these stocks, if you don't trade them all the time, aren't going to have the greatest markets in them.
Yeah.
Silver, HIMS.
Oh yeah, let's do silver.
SLV.
Let's do that butterfly in silver.
Okay.
Kind of stinks doing
good IV rank of 90
this move
here. Say again.
Kind of stinks doing it into the move today. Let's do you want to do a pseudo pairs trade.
Okay, in which way?
I'm thinking we do the Iron Condor in GLD that Julia had.
Okay.
Something around that realm. And we'll do the butterfly a little bit wider, but kind of similar to what Kai was looking at.
Okay, let's do it. I like it.
So what do you think about going to February?
I think you have to be. I think you should be in February, especially in a Johnny account. I like to stay as mechanical as possible in a Johnny account. If you're going to take a shot, then you do it as an opening trade. It's going to be a shot. I don't think you're looking for a shot here.
What about doing it's probably going to cost us a small debit to do this. Okay. But I'm thinking
you don't go to purgatory or jail, by doing a trade for a small debit, right?
Oh.
If it's a couple of cents, under 30, 40, 50 cents.
Yeah. It's always going to hold some value.
Right.
So even if you're paying a debit.
Kind of like the car I bought for Nikki, for Vinny. It's going to always hold some value to it, right?
Yeah, until he finds sport mode and sends that thing.
He found sport mode already.
All right. So
Ford Explorer with 4 cylinders. I don't think he's going to be doing too much sporting right now.
It's got the turbocharge in there.
Yeah, it does. Yeah, it's zippy. I'm not going to lie.
I'm thinking we do a 5x10. So we do something like the 65-60 where you're selling around the 25 delta.
Okay.
And then we'll go 10 points wide. We'll go to the 50. Mm-hmm. It's going to cost us a small debit.
Right. And that's why the probability of success on this trade is closer to 25%.
Yes. So if you change this, and this is just like an exercise you could do.
Yeah.
If you just ignore the 20 cents and change this to a net credit.
It's an 80% pop trade. So,
and that's because you have no risk to the upside.
Right.
So.
But you're really looking to play for somewhere inside that pyramid, that tent that you have there.
Yeah, what you can see here, so on the
go to the
so on the analysis mode here, just to give you an idea. So you've got your position.
You do like a little tutorial here on the whole trading platform. I really like this.
Yeah, I know how to use it. It's great.
You're good.
So what you can do is for the risk profile here, you can kind of change some of the metrics here from volatility and time, spot price. And as you go through, as time passes, you can kind of see how this risk profile changes. This is what we talk about when we say, the pop is 25%, but you really have no risk to the upside, and this is going to hold some sort of value.
Right.
You can see as time passes, you have profits here, even though even the stock stays where it is. If silver stays where it is here. If volatility changes too, which you'll probably see volatility contract.
Right.
And this is sort of a short vol trade in a sense, because you're long the at the money volatility, which is going to hold its value, short the out of the money volatility. So you can continue to play around with this, but this gives you an idea of kind of, if volatility contracts and silver kind of stays choppy here, this is what your risk profile looks like. This position would be up, 40 or 50 cents. So even though you're paying a debit, it's going to hold some sort of value here. And that's why we talk about, not really worrying about
volatility unchanged. Even the S&P is down 17. Interesting market here. Volatility not catching any bid here even the S&Ps and Nasdaq continue to go lower. Russell and the Dow are higher. Dare I say? Because I was I felt bearish this morning.
Now you're a little bullish.
I'm a little bit like maybe we don't go anywhere. Maybe that SPX trade is actually the trade to make, which I was really a little bit afraid of when I put it on.
All right, so we're in at 27 cents on that silver trade. Let's do GLD.
Beautiful. And you can see that Netflix trade come through there, and you see the Tesla trade, the Q trade come through there, all in the Johnny trade, and we'll get that last trade in there as soon as I can, too.
GLD, you want to do like 20 delta for the shorts?
Sure.
I think this warrants a position.
Gold IV rank of 55 is quite good.
Yeah, and you'll see, when you have something that has relatively high implied volatility, 40 some odd days to go till expiration, and you're going to somewhere between the 20 and 30 delta, it goes to the question we get all the time of I can't find the 1/3 the width of strike. It doesn't exist.
Mm-hmm. It always exists, by the way.
The what?
1/3 the width always exists.
Always exists.
Yeah,
across the board.
Credit.
It's just relative to how close you are to the stock.
Correct.
So when volatility is low, when this IV rank is 10, these spreads are going to be 10 points in the money. You're going to be at, or closer to the money. You're going to be at 420 and 390 as opposed to 385 and 438. It's just relative. That's where people get caught up. It's like, oh, I'm too close to the stock. And it's because you're looking at something that has low implied volatility.
Mm-hmm.
So here, we're going to the 20 delta. We're going 10 points wide. We're going to collect around $3 in credit. Pretty cookie cutter here. 385, 438 are my upper bounds here. We're going to start above the mid price, work our way down. You can cancel replace from the analysis mode that we have here too. You can see me doing it here. Just right click on that little flag here.
Bonds down 17.
I bet you didn't know that one either.
I did not know that one. No, I don't know a lot of these. You really teach me a lesson every day when you do this. I'm forever grateful to you.
All right, so we did. Oh, that was kind of sweet. That was kind of cute. So we did neutral delta and gold.
Well, I need you to take your brother to practice tonight. It's at 9 o'clock because I'm going to be asleep.
I'm going to be watching the Miami game. All right, you're going to have to walk.
See, there we go. I tried.
GLD, neutral delta, iron condor.
Mm-hmm.
We did SLV, which we'll call neutral / slightly bearish omnidirectional.
Sure.
With the butterfly that we did for a small debit. Wide put spread in Netflix into earnings. That's our long delta trade. Should we try and get I guess the silver is kind of a short delta trade.
Yeah, silver's kind of a short delta trade.
You got anything we could do like some...
You can look at GameStop. You can look at Rivian. You can look at RKT, SoFi, JD. You can go back into you did the Qs already.
Yeah, let's do
the SPX trade. Go ahead.
What about doing? Should we do like a call spread in SPY? Only got like a short delta. So I have a little bit. So overall, and if we look at just my delta of my positions here.
So your delta of your overall portfolio.
Yeah. So you got beta weighted delta here. I'm basically flat.
Pretty flat. Maybe SMH gives you a little bit of short delta.
Yeah, SMH gives you a little bit of short delta here. Should we do like a wide iron condor in SPY? 40 some odd days.
Ivy rank of 15. I think you get a better opportunity to put something in there in the next week. I mean, it's 43 days to expiration. I know you're itching to put on a trade, and that's what happens when markets are relatively slow. But I don't think you push it.
Need about $20 more from MU, which is 1 day's worth of half a day worth of price action in that freaking stock.
Good job out of you. Even the S&Ps, let's take a look at the market here. Down 12 in the orders. NASDAQ down 200 and change. Russell up 10. Dow up almost 70. Got a tug of war between the Russell and the Dow. NASDAQ, the weakest of the group, down 230. Let's see what's moving the NASDAQ to the downside. It's some usual suspects like APP. AppLovin down 13, AVGO down 10, Meta down 10. Did you want to do something in Meta? Was that one?
I did it yesterday.
Okay, good.
Sold the puts, the 475 puts.
Got it.
Out about like.
SMH down, Oracle down 5 or so, Microsoft down 5. Out of the Microsoft trade from Tuesday's option trades today. So kind of picked the lows, picked the bottom, got lucky there.
Should we get back in?
Say again?
Should we get back into it?
In Microsoft? Yeah, you certainly can. Ivy rank of 32 is good, not great. It does have earnings January 28th. Microsoft, it does have a good high correlation. I mean, decent correlation, 0.40 the overall market, but nowhere near its highs. This was the point that I was making when we got long it when I was trading closer to the lows just 2 or 3 days ago. Just a stock that usually is a leader of the market. If you thought the market was going to catch a little bit of a bid, which we both did,
back down to 475.
It was it got as low as 476 today. It's 478 right now. So if you look at the sales, maybe you put it.
So what do you think of this? So you did that Jade Lizard.
Yeah.
Short the 445, put the 485, 495 call spread. You did that at $11 on the 6th.
That's correct.
Bought it back.
Use a lot more buying power if you do that in a Johnny trade account.
No, I can't do this in the Johnny. I'm talking about our show account.
Okay.
So you did that at $11 on the 6th. On the 7th, you bought it back at $9.50 and change. To be $150.
Yep.
It's now back at $10.50.
Oh,
it's 50 cents below where you started it.
Yeah, it's a decent
scalped out of it.
I don't hate the trade putting it on again. I agree with you.
32 IV rank.
Yeah, I agree with you.
Let's see if we get filled at 10.50.
Cool. Even the S&Ps are down 6, so market catching a small little bid here. Volatility.
This is not a trade, by the way.
In by 11 cents.
Big boy trade.
It is a big boy trade. It does use a lot of buying power.
Yeah.
That's the other caveat. Let's take a quick 90-second break and come back. We got more Tasty Live. What comes up next, son? A market measure.
Market measure.
Even the S&P is down 4. Volatility in by 10 cents.
Cool.
Take a quick 90-second break and come back. We got more Tasty Live immediately following this message.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nigga, we are back, son. You know what that means. Time for a little bit more Tasty Live with the Market Measure, sponsored by the SIBO. Before we do, let's take a quick look at the market. Cancel crash?
I guess so.
Really going nowhere, right? NASDAQ down 180 or so. NASDAQ continues to be the weakest of the group. Russell continues to be the strongest of the group, up 15. And the Dow up $1.24. You got filled in.
Yeah, I did. We put that Microsoft trade on, but I also just shorted the Russell.
I saw that at 26.04. Oh, no, 26.04.
Yeah.
That's the Russell. You're shorting the strongest of the group.
Yeah.
Today.
Yeah. If we get a little bit of a rally in the NASDAQ, I think
very good.
Get back in there.
Good job. Good job.
E-minis are kind of cold.
Volatility in by 15 cents. Good little tell so far today with volatility contracting. E-mini S&Ps were down 16, 17 when we talked about it, and volatility was not upticking. That may be the end of that small down move. I mean, we're going nowhere.
Yeah.
Anyway.
Buy the dip. Got to buy the dip.
I guess we're in a holding pattern. It seems like it, at least, in the market until, I guess, tomorrow. I don't know. Let's see. You're working to buy back your UNH puts. The SPX trade has not moved or gone anywhere right now. It's a nickel one way or the other. I think we're up around 30 cents, down around 10 cents on the overall trade. Hasn't done anything right now.
I bought back those puts.
Oh, good. In UNH, you got filled at 314.
Yeah. So it's like $90, 90 cents.
Yeah, that uses a little buying power too. You take off, make the profit. You put on the Microsoft trade at around 1030 and change, 1033 and change.
Mm-hmm.
Yeah, I like it. Rotating the capital around a little bit.
Yeah.
I like it. Good job out of you. Gold catching a little bit of a bid. Silver caught a little bit of a bid. Gold still down. /GC still down $7, but it's about as high as I've seen it since we've been on the show. And the same thing with silver. On that gold silver pairs trade is trading around 59 and a quarter, got up to about 59 and a half. But it hasn't moved too much today, even with the rally in silver and gold.
I just bought, to go off our discussion on the Johnny Trade segment about buying in risk. I can even show those here on the
Okay.
So Micron, a stock that has been moving $40 a day.
Yes.
And seems very far out of the money. We did a 400-430 call ratio. We did this at $2.14 yesterday. I think it was a fast market trade.
And volatility did not contract. I mean, volatility hung in here. This was you got paid by the directional bias. Well, the delta that you have.
And the stock was higher when we were doing this.
That's what I'm saying. The stock was higher. You
traded to 350.
Right, stock's 330 or under 330. You got paid on the directional bias, not on the IV.
Yes. So we had just this position on for a $2 credit. I just went and bought the 460 call for $290.
Yes.
So I legged into this butterfly, which is 30 by 30. It's a big wide butterfly on the upside.
Right.
About a 20 delta-ish to the 400 spot. So you got about a 40% probability of a touch.
That's right.
At some point in the next 40 days. But really the 40 days and taking off the upside risk here is what I'm, is the reason.
Happiest about, yes.
So I now own this butterfly because we did this ratio at $2.14. I bought in the risk at $2.90. I own this 60-point butterfly, 30 by 30 for an 80-cent debit.
Yes. Ideally, if if everything was nirvana, you would have bought those calls for under $2, which was your net credit. Now you're saying, okay, I've got. You looked at what was it? Kai was looking at a $5 wide,
80-cent butterfly in silver.
In silver.
Yeah.
Okay. Here you've got a $30 wide one, 60 total is the whole window for 80 cents. What is your risk on that per day? Maybe 5 cents, 3 cents?
Less.
Right. That's what I'm saying. Like it's just minimal.
Bid-ask spread differences.
Right. Yep.
But it holds value. So like that trade, I could have taken the trade off and taken 50, 60, 70 cents in profit.
That's the actual risk.
That's the risk.
That's what you have the 50, 60, 70 cents in your account right now. But if MU stays under your number and never really rallies anywhere, you're going to lose that 50 cents that you had plus the 80 cents that you.
Yes.
So net, you'd be like a.
Yes. So it's marked at, we'll just go to the mid price, but you can see these bid-ask spreads are wide. I have this butterfly on for 80 cents. It's marked at $1.50. So it's a 70-cent profit is the risk I'm leaving on the table here.
That's right.
Cool.
Yeah. You're good. When you're good, you're good. Even the S&P's up 50 cents. First time they've been green all day. Volatility in by 30 cents. Oh, sorry, 15 cents.
Costco up $40. Is there some sort of, did it have earnings? I know it's early. Something. What is?
I will check for you. Yeah, I don't know what's going on with Costco. I mean, 922. Man, this stock looked like it could not.
It hasn't had an uptick in
by
6
itself
months.
an uptick, right?
Yeah.
Costco. Let's take a look here. What I can find, or anybody else can find.
Yeah.
If you're right into me. After reporting strong December sales, almost $30 billion, and high membership renewal rates, but the broader market dipped small anyway. So Costco everybody keeping their memberships.
All right, very nice.
And sales of almost $30 billion.
Go.
Big move. IB rank 17. Even the S&P is down 50 cents.
Cool.
All right, you ready? Market measure.
Let's do it.
Sponsored by the CBOE.
How Theta and Vega react
SIBO,
during
sorry.
market spikes. How do you think they react?
How Theta and Vega react during market spikes? I think, Vega's going to go higher, and market spikes. Well, what kind of trade? What are they looking at?
Strangle.
Looking at a strangle? Well, markets, they're talking about the S&Ps, the Qs, IWM, the Dow. Those volatility is going to expand.
Yeah.
You're going to get that tail risk. Certainly, Vega's going to go up. Theta's going to go up, I would imagine.
Let's take a look. All right, so short premium traders benefit from time decay and an option's extrinsic value. That's your theta, but risk potential losses from exposure to changes in IV. When you're selling premium, you are long time, time decay.
Yep.
You are short volatility, so you're selling the implied volatility, you're expecting realized volatility, the actual move in the stock, to be lesser than what is implied. Those are the two things that you're trading, along with your directional assumption. But for the purpose of this segment, we're talking about strangles, so you're basically flat delta. But those are the three Greeks that we really look at. Trade with a high initial profit potential has a high theta for the amount of Vega risk at the time of the trade. And that's just telling you when you are selling premium, the more vol exposure you have, the more extrinsic value there's going to be. It's not, it goes hand in hand. So we're going to take a look at the risk factors for a 16 delta SPY strangle in different IVR environments. So we're basically going to isolate the IVR and kind of show how much more vol exposure, how much more theta exposure you get when volatility is higher versus when it's low.
Good.
Gold only down 6.
Yeah, gold only down 6. Silver down 3 and change. Spread is 59 now, so it's moved about $500 on the big futures. I mean, on the small futures in this little time frame that we had on. So selling gold and buying silver worked this morning, the opposite of the way that we've had it on after the big move from 55 and change up to 69.5. Maybe we should have been a two-sided trader.
Damn.
Put that in your notes.
Shame. The study here, so we're looking at SPY 2020 to 2025, so the last 5 years, 45 days, and managed at 21 days. We're going to look at, of course, the IVR ranges. We're going to compute the Vega, theta, change in Vega, and the change in theta. So we're trying to give you like a magnitude of how much value or how much the Greeks are going to change based on different buckets of IVR. And of course, we're going to compare the results. So let's take a look here. The amount of initial IV directional risk is lower on average in higher IVR environments because options at a given delta are priced efficiently for that IVR environment. It's counterintuitive. When volatility is very, very high, you have you're not only are you getting paid more for taking the risk, but the risk is priced more efficiently. It's priced better because volatility is pricing in the fear. When volatility is low, it's not pricing in fear.
That's correct. That's correct. But they're both perfectly priced.
They're both perfectly priced, yes. But you have less vol exposure when volatility is high because the vol can only go so high. Or it can only go so low.
Don't say that. Yeah, it can only go so low. I mean, what your volatility is mean reverting faster than price is what you're really trying to say there, because volatility contracts a lot faster than the stock's movement, meaning just because Costco's up $40 today, the chances are going up another $40 or if you're looking for a downside move is a lot less than volatility itself. If volatility was high, volatility contracting. If the stock sits, the volatility is definitely going to contract.
Yes. So you can see here as your exposure to Vega decreases as volatility gets higher.
Mm-hmm. Good one.
IVR gets higher.
Yep.
So on average, as IVR increases, the extrinsic value of the strangle also decreases at a faster daily rate. This goes to exactly what you were just saying. It's not necessarily that the price goes right back to where it was or bounces or whatever, but that the volatility contraction is typically much quicker and much bigger than the move in the underlying in that direction.
That's right.
So this means that high IVR short premium trades benefit both from faster time decay and reduced IV directional risk. So when you're in a high IV environment, and you're trading something that has high implied volatility, and we're using SPY here, but just across the board, not only are you getting paid more to take that risk, the trades are gonna move quicker, and you need less time for that to happen. So these, it all reinforces why we're always looking for high IV. This is it. You have faster time decay. You have your IV exposure is lesser because you're further out on the curve.
You got all the things you've been playing for on entry. You get them, faster and better when the IV rank is higher. But we're in a low volatility environment, so it's harder to find these. You're starting to get a little bit more direction.
Next slide here. So theta tends to increase with IV at a much faster rate than Vega tends to decrease, particularly in high IV environments. So this means that premium traders tend to benefit much more from faster time decay than the reduced IV directional risk in high IVR. So the basic here is that you're getting paid on the time decay much quicker than the volatility contraction via Vega.
Yep. I don't have too much to add, but you're 100% correct. I can say that.
Couple takeaways.
Let's do it.
So a trade with high initial profit potential has a high theta for the amount of Vega risk at the time of the trade. 16 delta SPY strangles have a high initial theta and lower initial Vega in high IV environments, but short premium traders benefit much more from the faster time decay than the reduction in the IV directional risk in these types of volatility environments. Basically, we're saying that when vol is high, you're getting paid a lot more to take that risk. And if volatility contracts, you're going to profit a lot more than when volatility is low and volatility contracts from a lower state.
Good job out of you. This market is not doing anything. Even the S&P is up $1, we're down $1, up $1. While you're talking, Nasdaq still the weakest of the group, down 144. Russell is up 22. That's about as high as the Russell has been, maybe $1 or $2 off. Dow up 180. Russell up almost 1%. Volatility in by 19 cents, back down to 1651 or so. And bonds are down 17. Looking across the board here, not too much flashing lights on the screen. If you don't see a lot of flashing lights, that means there's not a lot of movement going on. Would you consider this an inside day to go back to our confirm and send questions? So far, it most definitely is an inside day, even though you've had an over $30 move on the E-mini S&Ps all night long. Not really about that 20-ish handle move that was expected on the E-mini S&Ps so far already today. You have that. Our iron condor is maybe up 20, 30 cents, been down 20, 30 cents, up 20, 30 cents. Really not moving too much at all. We'll take a quick 90-second break and come back. We got more Tasty Live after this. We got Quentin and we got Glenn coming in. We'll be back in 90 seconds. This is Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man. From the trade desk, our very own Q. What's up, brother?
Fellas, how's it going? I'm doing well. How are you?
Good to see you again.
Yeah, always a pleasure. Always a pleasure. Best 15 minutes of the day.
That's the second time he hears that.
No, I'm pretty sure no one's ever said that to him.
Nobody said that to me. Nobody says that to me. Nobody says that to me. What's going on in the trade desk? What's the soup du jour, or what's the question you've been getting? Or
yeah, things are actually a lot more like calm than you would expect necessarily. We're not getting a lot of like crazy trade questions. The overall market has been, super stable. SPOOs are within 10 points like almost every day. Right?
Yeah. It's been a pretty complacent market.
Yeah, pretty calm market. I mean, a lot of people just asking about the platform and things like that. A lot of new customers as well. And
how's the offer going? People taking people that were on the fence, maybe
taking the offer.
Awesome.
For sure.
Awesome.
And I mean, because like I don't want to be that guy like pushing the, come over to the firm, blah, blah. But I mean,
be that guy.
Well, this is a crazy promotion. That's the only thing. Like if it wasn't so crazy, I wouldn't be talking about it all the time. But I mean, 4% cash back. And to max it out, it'd be $250,000. So if you deposit $250,000, we'll give you a $10,000 bonus. And I mean, that's
new customers, though, right?
New customers, yeah.
We're working on.
We're going to get something for existing customers.
We're working on it.
We are working on something for the existing customers. So I don't think you're left out.
Yes.
But yeah, I mean, this is just an absurd promotion. I mean, 4%, $10,000 for coming over here. If you max it out, I mean, that's nuts.
Yeah,
and then,
nice.
If you don't think we're the best platform, do not come over here. But I think we're the best platform. That's why I work here. That's why I've been a customer for over half a decade. I mean, I don't see what's there to lose on something like this.
There used to be a commercial when I was growing up as a kid, Hair Club for Men. You probably never heard of it, but it would be...
wait. Maybe I have. Go on. Sorry.
Okay, maybe your dad was watching and stuff like that. It played big in New York. That's where I was from, but it was when I was a kid. The guy would come on, and he was, and they actually did like a little bit of a parody on it. I believe in, was it Goodfellas, where the one guy he has a toupee, and they rip it off. Yeah, it was definitely Goodfellas. It was definitely Goodfellas. So it was Hair Club for Men. He would say, not only am I, the founder, I use the product too. You know what I mean? And he would have his toupee on or something like that. That's what you sounded like. I used it. I've been using the platform.
For sure. Customer before representative. Yeah. And that's also like really good when talking to the customers. I mean, a lot of our representatives trade as well. So we understand what it's like when you're in these sticky situations because we've all been in them ourselves. Like I've had the risk team liquidate me and stuff like that. It happens,
Ooh.
And so I've been assigned on options put into a margin call. I've, had big drawdowns in my portfolio.
Man, you stink.
Things like April
and
August,
bad boy.
And we're working on it. But yeah, I mean, a lot of us are customers as well. And that's why we work here is because we love the platform and love the company.
Right. Well, good.
Very good.
Here it is.
There you go.
Oh, right. I'm not just the president of Hair Club for Men. I'm also a client. Yeah, so there you go. I knew it was somewhere. Thank you, team, for putting that up there. Yeah, see that? Yeah.
Yeah, see, there we go. And that's exactly how I feel as well.
I just did I did a ratio spread in AVGL. I did one in Intel as well.
Mm-hmm. And then also, I got some things that I can hint at a little bit because I think a demo.
Extra on Intel.
Sorry, go ahead.
I'm getting a little. It's just like I got like it's like I got the itch. You know?
Yeah, well, because there's some things I can hint at. We've got like the new downloadable software coming out soon.
Cool.
I think I've got a demo with you guys today and a lot of the tastylive crew.
Yes.
On that new platform. So customers, stay tuned. The web version will be now downloadable. Because I mean, if you're trading all day, you got to have a downloadable software.
Yes.
For sure. And so that new software is coming out soon.
Yeah.
Beautiful. Good job. All right, well, let's get to your list. I've got my friend Glenn waiting in the wings too. You know, you can't have all the time to yourself, Q.
You know, I just have so much fun.
I'm just teasing you.
All right, top 20 symbols going through the system. At number 1, Tesla, 10%, SLV, 92, NVIDIA, 7, Apple, 19, Meta, 35, GLD, 56, APLD, 15, Google L, 34, BE, 48, AMD, 31, Micron, 48, Oracle, 44, Palantir, 21, Amazon, 33, Google without the L, 35, iBit, 36, Costco, 18, Broadcom, 17, Rocket Labs, 32, and Intel, 45. You know, with iBit and some of the crypto ETFs, because like with the IRA webinar we had the other day, we talked about like that's one of the only products you can't trade pretty much in an IRA is crypto. But you can still trade those crypto ETFs like iBit, ETHA, BITO, all those sort of things.
Yep.
And so yeah, if you do want some crypto exposure in your IRA, you can't buy the actual coins, but you can still trade the ETFs and their options, of course, as well.
Right. And iBit has great option markets too. Penny, 2-3 cents wide.
SPX.
Yeah, I moved up my price a little bit to 280 from 260. So I only took a 40-cent profit instead of a 60-ish cent profit. And I'll tell you why. The spread had a little bit of long delta to it, but it was much closer on the call side than on the put side.
Yeah.
Volatility in by 23 cents. Even the S&P is down $4. Seems like the market doesn't want to go down like it wanted to before, and that spread would have kind of gotten a lot cheaper on the downside. So I closed it, just took my 40 cents. It took over an hour. When these things work, they usually work in a half an hour or more, at least for our smaller profit that we're taking on it. So I just said I figured I would take it and take my ball and jack and go home now.
Good job out of you.
Yeah, if even the S&Ps go lower like they are right now, it'd be advantageous to stay in that spread. I probably would have gotten filled at 260 if I stayed in there. But anyway, I didn't think even the S&Ps would go down 7. So,
Good job out of you.
I gave you a good job out of you a minute ago. Now,
and now bad job at it. Bad job. You got no hands. You got paper hands. Paper hands. Are we done with you?
Yeah, we're good to go.
You're a good man.
Don't you have you have another demo next week?
Next week we've got the mobile app. Mobile app coming up. Managing trades from the mobile app. A new cool thing you can do from the mobile app as well. If you can do an account transfer from the mobile app as well, because we're getting more of that like account management into the mobile app, because should be there too, not just for trading, also for account management. And so that's something that came out yesterday. Make sure you've got the new update available.
Very nice.
Beautiful.
Amazing.
Right, there we go. Thank you, fellas.
Good job out of you. I'm going to let you go, and I'm going to bring in this next gentleman.
There he is. That's
jumping into a spot. What's up, Glenn? Thank you again for the coffee. I want to let everybody know that you were kind enough to bring us both.
No, I heard what you said today, so it's fine.
What do we say? Which one? What do we say?
Where's my coffee today?
Oh,
I said that earlier.
Well, but he first thought it was funny because I didn't really even think about this, but I could have claimed the coffee. I could have said,
and if I was you,
coffee.
And this is my dad, I definitely would have done that.
Yeah.
And wait for Glenn to come in and go, what the hell? Why are you taking the credit, stealing my thunder?
Yeah.
That would be so funny.
I gave you the proper credit.
You did. But you're a kinder, gentler human than
I see. That's one of those like interpersonal relationship situations that I don't know what I would do if I was like heard that like you said, oh yeah, I got you.
If I took credit, what would you do?
Peeled off the sticker.
Yeah.
I have no clue.
Would you roll with it? Would you go with it?
Yeah, but I'd in the wings here, Nick, what the hell?
Yeah.
'Cause, yeah, and then
I wouldn't do that.
Then I'd put the fear of God in you.
I don't know. I heard some of your stories from out west, and I think you're good for a good prank yourself. I think you're okay.
Yeah, he's okay. He's a good. He's a good sport. I think he's a good sport. Yeah.
But yeah, man, the office coffee today, really good.
Oh, you liked it? You liked it? The office coffee, good. How many scoops does it take?
260 grams.
Yeah, he learned how to make the coffee.
I know.
Marty.
I know.
Marty
Anybody can. If Marty
actually
knows.
not that hard.
Anybody can find.
Yeah.
What's that?
It's not that hard.
Yeah.
No.
I've just only seen, coffee on the ground,
Yeah.
beans everywhere.
Yeah.
And I thought, ooh.
But that was quite the day for you. So you shut off to work early. Not the 9 a.m. crew.
Right. This is your
You
standard.
brought coffee for us.
Mm-hmm.
And then you made the coffee for the rest of the office. That's a big day.
With Marty's help.
Very
Marty's
productive.
help. That's
Very
a
productive.
huge day. That's a
So
huge
today
day.
I've taken it off. Rolled
You
in.
should take it. You should take a half day. Half day.
Rolled in around 8.
Yeah. Okay.
Reloaded the coffee. Commented on it. Said, a little bitter
man.
today.
Yeah, a little
Poured
bitter.
it out.
little extra beans in there today. Oh, what'd you use? 280 grams today?
It tastes like 263.
Yeah.
Is this 260 grams? I don't think so.
How are you guys today?
We're good.
We're good. That spreads back to 290, 295. Did I do the right thing?
You did good.
There
Good
you
job,
go.
Bobby.
See that?
Good job, Bobby. He's good.
Nice.
He's good.
Yes.
He's been doing this a while.
Scalping a lot today or no?
A little bit. We
a
were
little
short the
bit.
NASDAQ.
Yeah.
We took some money out of that.
Mm-hmm.
But
very nice.
Hey,
it's been a good day. I didn't have
been
to use
good.
the AK.
Yeah.
Yeah.
That's good.
Very good.
All right, what do you got for us? Are you going to talk about client sentiment? Are you going to talk about how the dollar's been on a little bit of a tear?
A little bit of a run, yeah. We're
to the
we're
upside?
looking good. Volatility not necessarily surging in major dollar pairs just yet, but I thought it was interesting because looking at this morning, we saw a slight dollar gains off of some non-farm efficiency numbers, non-farm productivity. So that's output per non-farm employee in the AI era booming, 4.9%, beating expectations. A little bit of a lift there for U.S. dollar across the board pre-market, but a trend we've seen time and time again. I should do a more thorough, robust analysis on the actual impact, but it seems like anecdotally, a lot of times when we have U.S. dollar pre-market strength, that's very easy to get, erased right on the U.S. Open. And that's exactly what we saw today. We saw Eurodollar press to new lows right before U.S. market open, nearing 116.5 in the spot market for the first time since early December. Now a bit of an uptick in that pair and a downtick for U.S. dollar across the board. But now we're back at some pretty interesting price levels. British pound, U.S. dollar. Pound had been stronger a little bit more than the euro dollar.
Yeah.
Now that kind of whole up move from Monday, that gap has been filled. Now trading back under 135. In the dollar yen, fundamentally not a lot going there in terms of headlines, but now we're back up to 157 in the spot market, which is now approaching that intervention risk area once again. So that's always fun to look for. Australian dollar, New Zealand dollar movers of the day to the downside. US dollar getting a little bit more of a lift there against those Australasian currencies, and pretty successive gains for the US dollar in this dollar Swiss franc, which has just been churning higher and higher from its Christmas lows. Now we've got 0.80 back in sight. Haven't seen that since early December. And just wanted to look at client sentiment this week because this is a tool we have on the TastyFX native side. Not visible with the TastyFX Tasty Trade integration, but this is just taking client sentiment this week in major pairs.
Can you get this on the TastyFX website?
It's through the login wall.
Once you log in, you can get what you're showing.
Exactly. Yeah.
So is this like, I don't know, how do I phrase it? I don't want to say inside information, like Polymarket. Is this like looking at like
No, it's just like the bullish bearish indicator when you get.
Thank you. That's the best way to put it, right?
Like,
Bullish bearish. So what do I make from USD, Japanese yen on its butt?
Yeah.
Here's what I would think.
It's
like
half and half. I mean that tells you that it's split.
But it is.
I know, but if I didn't know this number ahead of time, and I saw the yen on its butt, and I saw that versus the dollar. If currency traders and FX traders are kind of ride the wave type traders,
momentum,
I would think that they would be more long the dollar and more short the yen. Like I know I'm a contrarian, I would play it the other way, but I'm just wondering, so do I look at that and say that maybe they're not on this trade?
Yeah, you're exactly right, and why I thought it was interesting to capture this week's client sentiment, because in the dashboard, I'll give you guys a look sometime, but we get the headline of total client positioning, and that's the headline client sentiment number across all of IG Group, and that we see being a lot more of a sticky number. Like if we were to look at US dollar, Swiss franc, actually favors contrarian in the long term across the board. If we were to look at dollar Swiss franc overall client sentiment, that's checking in at around 86% long, so still on its lows, that pair is, and still clients very much long. And that doesn't change as we get a lot of position traders holding on to positions throughout time and adding on to them. And so this captures just the buys and the sells this week, which we see is a lot more of a mixed bag, which I thought was interesting, because even as we have dollar pressing a little bit outside its recent ranges, no real momentum from IG Group clients in terms of directionality or conviction one way or another. So that was my main purpose for bringing up this week's numbers, because it was just kind of a mixed bag across the board. So in terms of dollar yen overall, we see clients net short at 61% short. So at that historic price extreme to the upside, we see a majority of clients contrarian. Yeah. But in the near term, we see just as many people buying as selling this week. So you have the not all-time highs, but the most recent highs in 2025 at around 158. So half the traders here this week saying, maybe we ride this momentum from the lows on Monday. We're approaching 156. Now we're at 157. Maybe there's still some more room to run in that pair. We started the week at around 157.25. So now we're right at 157. Perhaps people thinking at least even if we don't go to 158, there could still be 25 pips there to scalp intra-week. So a lot of ways to think about it, but I thought it was pretty interesting that we don't have a lot of conviction here, and more clients than not this week in terms of that dollar Swiss franc pair, the most extreme sentiment on this board, thinking that it's going to revert to its recent range rather than keep pressing to new dollar highs. Not sure, what these traders' time horizon is, but these are new transactions this week. So,
got it. And the euro's been a little bit of like on a 2-week slide here right now. Yeah. That sounds like a long time. Like if a stock is on a 2-week slide, currencies can
go.
They can go for a lot longer than 2 weeks.
100%.
And that's kind of why I became one of the worst commodity traders, or one of the worst FX traders ever to walk this earth. Because I always think, man, 2 weeks, this thing's got to have one little bounce here and something. Doesn't have to be that way. So
not at all.
So tread lightly out there with whatever you think you see.
Absolutely.
From the charts.
But yeah, we've got our preliminary labor statistics in. We'll be watching for 7:30 Central tomorrow morning for some event risks.
What level of round? This isn't Super Bowl level.
This is not Super Bowl level. This is
like playing game.
Like a division rival.
Okay. All right.
It's a rivalry game.
Yeah, it's a rivalry game.
It's like Nutrier versus whatever else.
CBS.
Yes, there you go.
Yeah. Hats off to Nutrier. They beat us. Thanks for mentioning that.
I mean, they've got like 80,000 people, right? So
yeah. So this was their gold team. Yeah, playing our JV team. But whatever. It's okay. They can stack the deck against us. It's all right.
You got any funky pairs that you're looking at, like something that might not have something on it? I do. I probably should take this opportunity because I've got some positions here that have finally come in a little bit. Maybe I take a little bit of my.
So a Johnny trader like yourself in the FX here, do you ever like forget about this because?
Oh, I forget about them. I just took $16 profit here.
Ooh, yeah.
I'm gonna take some of my Swiss franc off as well. So just like lightening up a little bit. The one-click close, very very nice. I was gravitating towards, since I just took off some of my Canadian dollar position, or my long U.S. dollar against the Canadian dollar. I was thinking maybe you do like a New Zealand dollar versus Canadian dollar. Do these interest you?
Yeah, that's pretty spicy. Two historical commodity currencies against each other. The Australasian pair is getting banged up this week.
Well, that was pointed that out to me.
I think that was his point, right?
Yeah.
Your point?
Absolutely. If you're looking, I did a segment yesterday with Mike and Jamal on the Mexican peso. We're looking at some emerging market currencies. They tend to act, somewhat similarly correlated.
What are you doing the peso?
The mover of the day is
it's been on a nice move. I haven't looked at the peso in a while. /6M. If you look at the futures, I know you're looking at the Forex. Go ahead.
But yeah, off 2025, its best year since 1993, I believe. A 15% gain there. But a pretty interesting chart because yes, we're coming off of a 14% down move in this pair, but 2024 was a 20% rip to the upside. So a lot of volatility in this pair. And, a very more of a long-term outlook of, could this thing keep going? It might just be up to the risk sentiment of the year. If we see, flows into riskier and riskier assets, that, of course, in the currency space would command demand for things like the Mexican peso, South African rand, or we could see a reversion if equities start to slide and U.S. dollar starts to get some safe haven demand, and we start to get some reversion. So, just interesting for me to look into some of those pairs and how they're fundamentally more of how their framework is set up. I looked at in that U.S. dollar Mexican peso. That's set up inversely to the futures, but the average magnitude of up moves versus down moves, we see a greater magnitude in up moves to the U.S. dollar favor. So we see when the peso gains demand, it's more of a slow grind lower.
Okay.
And when we get volatility shocks that send, some of that risk off moves, we tend to see that to a greater magnitude flow back into U.S. dollar.
I'm going to dabble.
Good job.
Long dollar short peso.
All right.
All right. Very, very nice. Very, very nice.
I want that magnitude. I want those big dollars.
Give me that magnitude.
No more $15 profits. I want like $30 profits.
Good job. Good job out of you.
Little Johnny trades. I just let them sit. I mean, some of these are like unheard of in the FX space, but some of these, I put on my first lot of dollar, long dollar, short Canadian dollar was on December 2nd. I've been holding this thing for a month. These guys, these gunslingers, he's got, his cute little parted hair. These guys are slinging these on 1 minute time frame.
I know.
He looks like he's innocent. He's got, 100K notional slinging around in the freaking Mexican peso.
I've got to check in with my robots after this, make sure everyone's acting all right.
Beautiful, beautiful. Good job out of you. I'm going to check out on one of our robots. That's Mr. TP.
Yes.
I love TP. You're going to get a whole hour of him coming up right now with Liz and TP immediately following these messages. We'll be back in 90 seconds. It's Tasty Live. Thank you so much, my friend.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
everybody, and welcome to the Thursday, Red Shirt Thursday edition of TP and the LD Show. TP, I want to give you a huge shout out. You were awesome. We had to call in the lefty last minute. Jenny is not feeling well. TP had to quick change.
My red shirt.
Love it.
Yeah, what I was saying, it's my stylist. Of course, I have a whole team to make me look like this.
Right? Sure.
Well, you understand these things.
Yeah,
and I told my stylist, I said, it's Red Shirt Thursday with Liz. And she just put her face in her hands. No. She said, TP, you cannot wear red. I said, I have to wear red. She walked out of the room.
She walked out of the room.
And I put this shirt on myself. I said, it is Red Shirt Thursday with Liz. You do not say no to Liz Deerking. Okay.
Correct. You do not cross. There's some lines you do not cross. But in my mind, I thought you just cruise around in your red shirt on Thursdays. And so when we called you in last minute, you were already in it.
No, I'm always happy to. I love jumping on with on the shows with you guys. And, it really isn't a big deal to do that. I know it changes some things in the production side, and I appreciate the work that those folks do there. But for me, I'm already trading. I'm already looking at stuff. This is really just turn the camera on and talk about what I'm seeing. That's all it really is. And that's kind of the nice thing about the Liz and Jenny show. Is it's live in the middle of the trading day. You've had some time to put on some trades or not in the morning, right? So I missed this, I put this on, rolled that. And you can tell people, or we can show people what the process is in live trading.
And TP, I'm really glad you brought that up because it was pretty interesting. I filled out paperwork the other day saying who do I want to fill in when people are gone, and I wrote TP because I needed to put my top 3 choices, and it is because it is easy. Like you said, you've already traded today. I want to hear what you're doing. We have no plan. I mean, I know that sounds bad. I have some questions that I want to ask you. I want to talk about how you are the cherry picks and the cherry bomb, right? Because I want to show people, like physically show people how they can sign up for it, because I think it's an invaluable piece of information. But yeah, other than that, I want to trade with you, and I love trading with you, and we are cut from the same cloth.
Yeah. So my bias. So all right, I think what we're seeing. I talked about this a little bit on the show yesterday with Nick and Tony. Are you cheating on us? Are you cheating on Jenny and I with Nick and Tony? No. It was recorded from like 2 years ago. And
okay, good.
They just shoehorned it in. This was before I even met you guys. Okay. Before I even knew who Liz and Jenny were. No. So I am biased. I have a bullish bias in the market overall for 2026. Why? And specifically a rally in some of these defense stocks. Why? Obviously, there's more military stuff going on now. Everybody's sort of arming up and getting ready for whatever's next. And anytime you shoot these expensive missiles or fly these expensive helicopters or whatever, parts need to be replaced. Things need to be replaced.
Hey, TP, I'm having a mental lap. Give me, and we could jump in the platform while TP's talking because I want to. Give me defense stocks. I can't think right.
Hey, can I show you something a little bit more than that, Liz?
Yes.
Let's create a watch list.
Okay. Let's pop in. We're in the platform right now. And you're going to
so go into the down a little bit. So go over into the to your right a little bit. Well, you can do 52-week high. I think that'll get us started.
Okay, 52-week high.
And if you go into if you go on the main page,
you want me to go to the watch list page
right there, perfect watch list. Now, if you go up in the upper left-hand corner there where it says manage, and I hit the plus arrow,
got it.
Create new watch list. Let's call this defense stocks. Just new defense, defense stocks. Okay, and super easy.
Defense is with an S, right? Defense.
Yeah, that's fine. And then let's just go into add symbol. The first one we'll add in is, let's say General Dynamics, GD. So type in GD, and you have to click on GD and then plus.
I like it.
Let's do a couple more. LMT. That's
Lockheed Martin.
Lockheed Martin. LMT. Click on that. Boom. Done. Let's click on Boeing because Boeing is kind of a defense stock.
Oh, Boeing is a defense stock.
Yeah. Boom. Done. That's how you do it. Now you hit create.
TP is Northrop Grumman. What about Northrop Grumman? I can't remember the symbol.
Sure. NOC.
And that's NOC. Yes.
NOC.
I just want to put one more on there. Okay.
Yeah, NOC. The other big ones are RTX.
Oh yeah, we'll put that on there. RTX.
Raytheon.
Are there any? Hold on. RTX for those with new hands. Are there any ETFs?
Funny you should ask, Ms. Deerking. Type in ITA.
ITA.
And this is going to be there are 2 points here. So this is what I do for the cherry picks. I do a little bit more digging in the cherry picks. So I write the cherry bombs every day, and those are sort of the way I think about trading, right? It's not, you got to do this. I talked about live cattle yesterday. You don't have to be bullish on live cattle, okay? But what they do is they set the context for what I'm seeing in the market, and they create a trade based on volatility and probabilities, things like that. And with the cherry bombs daily, they're the drumbeat of how we think people should be considering trades. Okay. Yes, bullish and bearish is important, but we'd rather you think about the risk you're taking or the probability you're making or the theta you're generating, right? And that's the cherry bombs. The cherry picks, which come out on Tuesday afternoon.
So while you're talking about this, I'm going to go and show where people can sign up. So you keep talking about this. You keep talking.
Thank you. So the cherry picks come out Tuesday afternoon, a little bit more of a deep dive into either a sector like the defense sector or the overall market. Like I wrote a couple of weeks ago about, missing the best 10 days in the S&Ps over the last 20 years.
Ooh, that was a good one.
It's a little it's a little more in depth, and there are things that I can. It's more visual also. The cherry picks gives me the space to put up some graphs, right? And a lot of people are visually oriented. And indeed, when you compare, let's say, the volatilities of different stocks or the IV ranks of different stocks or whether one is outperforming another, charts are really helpful, and we have a whole research hub on the back end that isn't public. And really, it's not that we don't want you to see it. It's really kind of clunky. It's not. It wouldn't help most people. And I'm not saying that I'm any kind of genius in coding, but I have the time and the ability to pick through the stuff and make that code do what I needed to create the cherry picks, to do the comparisons and the studies and all that stuff.
I think it's invaluable information because what I like to people aren't as addicted as we are yet, right? So, but it helps people's thought process to see, and you write it down. You are the guru in this industry, and you write it down from the beginning to the end, your thought process, how you got from point A to point B. And is it harder for you to come up with something every day, TP?
Yeah, well, what I want to do with the cherry bombs is, look, I trade the S&Ps every single day. Okay, I'm trading the 10 years and the 30-year bond option, note options every single day. I'm trading gold just about every single day. I'm trading crude oil every day. I'm trading, Apple or Amazon every day. I can't just send out, hey, it's a SPX trade
every day,
5 days in a row.
Yes.
Okay.
But you do it 5 days in a row.
Well, indeed. So there's my own trading. So I do or try to do every single one of the cherry bomb trades. Sometimes I don't get filled, right? Sometimes I don't get them, and I do at least a one lot. But I do about 20 other trades a day. So the cherry bomb trades are either a lot of times they just kind of get absorbed into a bigger position in the symbol or another position in the symbol, or it's a small amount of capital that I've allocated and not something that I have to think about all the time. Right. But I manage it according to whatever the rules are, yada, yada. Right. But the point is, it's trying to, I don't necessarily, people don't need to hear me talk about 10-year note options every bloody day. Okay. Sometimes
I do. I would love a 10-year note option segment every day with you.
But you are an addict, Liz. Most people, the vast majority of people aren't you. Okay. They don't have 25 years of trading experience. They don't make a living off of trading like you do. Right. True. So you'd love to drill down in, you also have the time. Okay. Yeah. Your kids are big. Right. This is your job. Right. And my point is, a lot of people, hey, they have this much time to devote to the trading platform. They're just starting out. Show me, hey, what's going on Amazon? Right. Or, hey, I just saw, like yesterday, I wrote a cherry bomb about live cattle futures options.
I want to take a look at live cattle's futures options, but I want to create this list first. So you and I have a tendency to go off the rails of the crazy train.
Yeah, we got to
slightly in line, but I do want to look at live cattle with you. Okay, so I'm going to create this defense stock, and
there they are.
Your cherry stock today,
and you can add symbols to that. Okay, you can edit, you can add symbols. So add in, what's another big, CW, Curtis Wright. Just type in add symbol.
CW. That's Capsum Vision.
CW, that's CW.
Sorry. I'm learning the alphabet.
And I'm just pulling, these are just symbols and plus, and there it is. So that's how you create a watch list.
So these are pretty high today. Now, my question to you is, on a day like today, with all the defense stocks up and Boeing up the least, would you get into Boeing?
Sure. Yeah. Yes. I would buy the IV rank in Boeing is very low, 13%. I would buy a call spread in the Feb expiration with 43 days passed a couple days ago. And let's take a look at the skew in there. So it's 228. So it's kind of in between 225 and 230. Let's go down 10 points from 225 to the 215s. It's 425. Let's go up 10 points from the 230s. It's $5. Yikes. Okay. All that tells me that does not tell me that Boeing is going higher. It's not what it is. It just says, to me anyway, and I'd like to hear what you think about this, is it just says this is where the market is placing its risk. This is where it sees risk. The market is adding value to those out of the money calls because it's afraid of a rally. That's all that's saying.
It does not. You're right, TP, and I'm glad there should be a disclaimer on the bottom. It does not say the market is going up. But when we've seen call skew before and the market goes down, we've seen put skew before and the market rises like a phoenix from the ashes. So it doesn't mean which way it's going, but it is good to know because some of the trades are better with a put skew versus a call skew.
Right. And so but again, that's just a bias. That's one piece of information. And so kind of what I'm thinking about in defense stocks, like we were talking about a minute ago, there's a lot of shooting going on and blah, blah, blah. Regardless of whether you think that's a good or bad idea, traders don't care.
And the market doesn't care.
They don't, no one, I mean, you can have an opinion, great. That's fine. That's fine. But really traders, it drives my wife crazy. She says, hey, honey, what do you think about this? I said, I don't care. Am I making money today? Good. Okay. That's all it really is.
Yes.
So the point is with Boeing, all I'm looking at is IV rank at 13%. Very low. Let's go out to 43 days. If I'm bullish on it and I think that earnings are coming up and I think that those earnings are going to factor in some of the rate cut that we saw back in last fall, okay. Yeah, I have a bullish bias in Boeing, so I'll buy the 225 calls, sell the 230 calls, and see what the numbers are.
Oh yeah, wrapped around the at the monies. This is what I love, and I've been trying to teach my son this because he's got lower limited funds. You're using $267 for a maximum profit of $233, and all you're saying is that you think Boeing is going to be up from here.
That's it. That's all. And
we're with you, but we're with you.
So anyway, so that's the sort of thing I'm doing. Let's take Liz, before we get off the rails on a crazy train, let's go back in and take a fill. Boom.
Done and dusted.
Let's take a look at /LE. And one of the things.
So we've been burned on these before. That's the only reason I want to hear what your opinion is. Okay.
Oh yeah, I was bearish on live cattle last summer. Got smoked on my short call spreads in the fall. In the rally you're pointing at right there. Yeah. So now I'm a little bullish. Why? For the lamest of reasons, they came out. The USDA came out with a new food pyramid. Where so yesterday, that was the big news. And so it's kind of, they did an inverted pyramid. So now you're not, at the very bottom, on a very small amount of like grains. So you're not supposed to eat a lot of.
It used to be grains on the bottom was the big one when I was a kid.
Now they narrowed. Yes, Liz, and I'm not saying you're as old as I am.
Yes, I am.
If you remember, the food pyramid was heavy on your cereals and grains at the bottom, and it worked all the way up to the sugars. Now sugars are gone. The only sweet stuff you get is some fresh fruits in the middle, but you have this teeny tiny amount of grains and cereals at the bottom. At the top, the white, because it's an inverted pyramid now. At the top are unprocessed meats and vegetables. Okay, great. That's kind of how I eat anyway.
I mean, only you could come up with a trade from the new food pyramid.
So it's, and I don't know, Liz, I don't know who does the food shopping in your house. I do 95% of it.
We split it, but yes.
I mean, when my wife, she doesn't eat meat like I eat. She'll eat some chicken. She'll eat some turkey. Fish she likes. But it's always when she goes to the store for that sort of stuff, she always texts me, what should I get? Stuff like that. It's just easier if I go because it's faster. So I just go and get the food. And I keep an eye on the price of ground beef. Because it's a 16-ounce package, it's very constant. It really doesn't, it's always the same quality. If I get the HEB ground beef, it's always the same, right? It's not like buying a steak or a roast or something that, is it prime, is it choice, blah, blah, blah. The ground beef is a good metric for the price of beef. What am I paying? That price really didn't, if you look at a chart of LE, the price that I was looking at really didn't come down along with the price of live cattle. And live cattle, by the way, for everybody playing at home, cattle go through two stages, and I don't want to hear from a biologist talking about all the actual stages of a cow's life. I don't care. There are two stages. The feeder cattle, where they take a little cow,
If you missed the live show, here's our cherry on top weekly recap.
Look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! You were on Eliminate! Oh my God!
You've seen it?
Have you met me? Yes, I've seen.
Turned round to the guy she eventually picked and she said, "So where are we going on our date then?" He said, "I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custards and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can't because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
I'm a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish. For sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
All right, yeah, I'll talk to you. There she is. Hey, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car.
No.
My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank
Does anybody
you.
ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy.
Yeah.
Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
So it's time
Not today, Cattle Cartel. TP saw the helicopter swirling and said, come back again another day.
For the record, I love beef. I eat it every day, and I will happily pay whatever price is charged for it. Let's just make that clear. Okay?
We're not going to make them mad again.
Oh, okay. We're good. Okay. So
all right, we are back. We're sorry for the brief interruption. We are back, and we are going to jump right into live capital. I want to place a trade in. You want to show me something about this?
Yeah, so let's do something real quick here. So go into the 29 days, and I know it's a little short term, whatever. It's like let's just look at a trade. So what I'll do is go and click on the create an order to sell the 232 put.
232 put, got it.
Yeah, so bing, bang. Okay, so what I see there is, okay, it's not a bad trade. I can make, $1,200 on that trade, max profit versus $2,800 of buying power reduction, but that's a little steep, kind of expensive. So all I will do is buy now the 230 put and create a short put vertical. Boom, down. Let's check the metrics out. So now I have a max profit of 280 versus a max loss of 520. That's about a third of the width of the strikes, which is kind of my metric, right? It generates 98 cents of theta per day. So that's how I think about it. And it has a 61% probability of expiring worthless. Okay, I kind of like that trade. Okay, that's the trade I put on this morning. I sold it right here at 67.5 cents. One of the things I want to show folks is you can actually see now regular options like Apple or Microsoft or whatever use Reg T margins, regulation T. It is an SEC Treasury FINRA rule. Okay, it's an SEC rule, but it's NASDAQ, SEC, that equity world. The futures side is the CFTC. The Commodity Trading Futures Committee, whatever it is, CFTC. They use SPAN. It's a different methodology, and you can see how they do it. Liz, if you now don't route that order yet.
I won't.
Go to the positions page.
Okay.
And look in the upper right-hand corner where it says Cap Rec.
Oh, right here?
Right there. If you click on that.
Agree.
I agree. And then go to risk analysis on the top. And then you see over the right-hand side, add order legs.
Right-hand side, yes.
Add order legs. Boom. Let's see if the live cattle order comes up in there.
There it is.
There it is. And so what you see along here is in the middle, you see where it says minus 545?
Yes.
So those are P&Ls for that spread. And what it says is this is kind of how SPAN works. The SPAN, the futures options margining, it says take the current price of live cattle, move the price down, see how much the position loses, move the price up, see how much the position loses. And the margin requirement, the SPAN margin, is the largest theoretical loss in this grid. That's the way to think about it. So what this I'm sorry, go ahead.
So the SPAN margin was more than your max loss.
Yeah, and that's one of the things that the buying power requirement, and we'd have to talk to the trade desk about why that happens. And that's something that goes on internally on the Tasty Trade side. They can pad it a little bit, or they do their own risk analysis and create their own buying power reduction. Remember, the legal margin requirements, whether they're Reg T or SPAN, are the minimum amounts. A broker can set any margin higher if the broker thinks there's more risk in there.
And
so
they do.
You see that sometimes.
So there is like an overall, there's a minimum, and that's the SPAN, and then the broker can adjust up. If they want.
And why that happens, that's that business. That's their side. But I want people to see how these things work and the functionality that's on the platform.
It's pretty
pretty interesting. That I've never seen this before. Because and it's so funny, TP, because people do. I mean, we're talking about cattle. People do like to know how the sausage is made. I typically don't. I just take things for face value, being like, oh, they're holding up this margin. That's fine. But people that want to know why, and in here, they can dive deep and see the different scenarios, which is pretty cool.
Right, and so this is a feature that is on the platform. Hey, by the way, Liz, what do you think about the lawsuit against McDonald's for the McRib?
What? This is news to me.
You're Liz.
You know I love a McRib. I shouldn't say this out loud, but I am a big McRib fan.
Well, yeah, get them while you can, sister, because what's happening is somebody filed a lawsuit in Illinois because McDonald's, I think the headquarters is in Chicago. They filed a lawsuit saying that it's the way that McDonald's described the McRib is misleading, that you're not really getting a rib sandwich or whatever the lawsuit is. But there's a lawsuit out there, Liz.
Come on.
No, I'm not lying.
Hold on. I'm you keep talking because don't share my screen yet. I'm trying to get out of this. I don't know how to get out of.
You can go open that up.
I might have to re-log in because I'm getting the spinning wheel of death every time I try to go to the platform. So
all right, that's not good. Hey, let's talk a little bit about you mentioned earlier when we were creating the defense stock watch list, there's that ETF that's for defense stocks, ITA. The problem with trading ITA, and you know, we've been doing this for a long time. We understand why this happens, but the markets in ITA options stink. Okay. They're basically untradeable. The bid-ask spreads are wide. There's almost no open interest. And the stock itself, the bid-ask spread in the stock is like 50 cents wide or even more for a $300 stock. Or whatever it is. It's about $300, something like that.
Yeah, it's about 300. TP, I'm having technical difficulties with my Tasty Trade. It is giving me nothing, and I have the spinning wheel of death. So you and I are going to do a trading show in Twitter.
Yeah, we can do that.
So just keep in mind.
Anyway.
I can't go back to the platform right now, but yes. So number one, let's get back to this. So the McRib is being sued. They're being sued for something on the McRib, which is very disheartening for me. And I understand that people think in the chat that the McRib is gross, Ashvin, but it's delicious.
I don't think I've ever had. I'm sure I have. I don't remember it because I've eaten one of everything at some point.
It reminds me of my childhood because it would only come around occasionally. So it would come around. The McRib, the Shamrock Shake, the Cadbury Egg. I'm a fan of things that only come around occasionally.
That's what do they call that, Liz? Scarcity marketing or something like that, or something like that, where. Oh, I don't know, Liz. This might be the last time you get the McRib. Oh, you better get it now. And it's that little bit of fear that they plug into, that they touch into, that makes you run to McDonald's.
Yes. And I do. And it's delicious. So it is scarcity marketing. I love it. Okay, but TP, we jumped into Twitter. We jumped into Twitter. I'm going to go top down because I can't get back into the platform. I have no idea why, but we'll pull off in a second and I'll try to do that again. But I wanted to go to the first one coming in. Now, this was 49 minutes ago, but this is Jackie. And he or she talks about Jajun did a study in Tasty a long time ago that if the VIX dips below 15, then crosses above it, the risk of a 2% SPX crash increased by a lot in the near term.
Yeah. So one of the things, again,
Did that happen? I'm going to pop in. I want to see what I'm in my platform on the side. But
we can blame Jackie for this if we spend the next 20 minutes talking about the VIX. I'm bullish on the VIX here. And there are two ways to trade that. It's yes, that the Jajun did some great work for us in the back testing and all that. That's great. Yeah. If you think that where the VIX is now, it was down. The last time I checked, it was about 1550, 1560.
It's 1531 right now, but did it get under 15?
Yeah. A couple days ago, I think it was. I'd have to, again, I don't have my platform up. to preserve the bandwidth here. But the point is, yes, short term, yeah, if you think they're going to sell off, sure, I'd buy a put spread in SPY, SPX, NDX, something like that, because volatility is low. Call spreads, yeah, you could sell a call spread, but that's how I would trade a potential sell-off in the market. I'd buy a vertical. For the VIX, and it's a little hard to describe because we don't have the option pricing, but the VIX right now at 1530, you said, the future is trading over 16. So the future with about how many days? 9 days, 10 days, is trading about 90 cents over the spot. So I'm bullish on the VIX. I would consider selling a put in the January VIX, or buy a call spread or something like that. Selling a put's expensive. It's got a big margin. Talking about margin requirements, it's expensive. So you could do a short put spread in there, something like that. But I am bullish on the VIX.
You're bullish on the VIX. That means you're bearish. So they're all kind of versions of the same trade. If you're bullish on the VIX, that means you're bearish in SPX, which means you're kind of going along with Jajun's study. But so, I don't expect you to be able to, this is not our forte. I just want an opinion right now from you, okay, TP? So tomorrow we have something that I've never traded through in my entire life, possibly the tariff news coming out, whether it's legal or not legal, the Supreme Court. The Supreme Court. So that's something I've never really traded through. I was surprised that the VIX wasn't higher because nobody really knows what the markets are going to do when that comes out.
I don't think the market is going to care. Somebody described the news cycle with President Trump and, Venezuela and the Russian tanker and tariffs and, they're gonna prohibit BlackRock from buying real estate and all this stuff. It's a vortex, right? And it doesn't matter which side of the political aisle you're on. This isn't a political discussion. No, it's just there's so much coming out. I don't think the money knows what it's like. I don't know. Is getting rid of tariffs bullish or bearish? I don't know. I really don't. And more to the point.
I really, like I said, I don't expect you to be the oracle here. Like you usually are an oracle, but this is one of those where. But this is one of those where I've never traded through this before. I've never had a Supreme Court discussion on whether forced tariffs are okay.
I think the Supreme Court should weigh in on the day trading rules.
Oh my goodness.
Let's do something useful, okay?
Hopefully they are going away. I'm hoping that they go away.
But the point is, my argument for overall bullish in 2026, and yeah, just like Jackie was saying, there could be a short-term bias downward. Yeah, I mean, they go up and they go down. But my point is, most of these stocks, like the big defense stocks, I don't think they care about tariffs.
No, I don't think so.
I don't think they care. Most big companies like Nvidia, they have so much money. They can navigate any negativity from a tariff. They're not going to lose money on a tariff. Same thing with Apple or Google or Microsoft or Meta. Could they be hurt on the margins with a tariff? Maybe, but it's not going to change their overall business model. And you want to talk about demand. Those places, people love those products. They will pay more for an iPhone.
I agree. So, you know what I find fascinating, TP, and you and I talk about this all the time, only because we have to talk. I cannot force quit my Tasty platform. I believe that will help, but I'd have to force quit my entire computer, which means I lose you all. So, but when I looked this morning, just because I get up and I get up early, so I always kind of just check the news, the CNN and all the news, making sure nothing as crazy is happening in the world. None of that matters, just, for general knowledge.
Yeah.
And I was just fascinated by clicking on, everybody had an opinion on what the market was going to do, whether the tariffs were the 30% chance that they're deemed legal or the 70% chance that they're deemed illegal. Mm-hmm. And everybody thought they knew what the market was going to do. How the hell do people know that? I mean, if I've never traded through this and you've never traded through this, why would anybody know what's going to happen?
You don't. And I think that's I'm wondering if that's coming from Kalshi, the prediction market broker.
Oh, the prediction market, I think, is smarter. The prediction market is smarter than people giving their opinions.
Well, right, but here's the thing: there are two things happening. There's whether or not the Supreme Court says yes, he can have his tariffs, or no, he can't, and then how the market may or may not respond to that.
Yes,
I think those two things are separate, and there's so much money sloshing around still. The people with a lot of money are still investing. They're still investing. They're still buying stuff.
There's nowhere else to put it.
No, there isn't. Somebody was showing. I saw a chart on the Chinese 5-year yields, and they were ticking up. And I was thinking, okay, are we going to see reflation again? Is that a signal that we're going to see higher prices going into 2026? Maybe, maybe not. And a tick up in, let's say, the 10-year note yields. They really haven't gone up. Bonds and notes, the ZBs, the ZNs have been relatively weak for the past year. You're not getting rewarded by keeping cash at this point. Yes. Okay, well, I haven't checked CD yields in a while, but they're probably maybe the best is maybe about 4%, maybe.
That's probably your best. You're looking like 3 something is my guess, but yes.
Yeah, probably in the 3 handle. My point is, I think you're better off looking at stocks that if you want a steady stream kind of thing, I would look at stocks. I would do a query saying show me stocks at 52-week lows and show me their dividend yields.
Yep.
And can I sell a put in those stocks? That's how I would approach making money. If, what are you supposed to do? And that, in turn, whether you're selling puts in those stocks or buying those stocks, is an upward pressure on those stock prices.
You know what you just did for us, DP? So because Jenny she's ill today. She'll feel better tomorrow, hopefully. But if she's going to love that. If we're going to create a watch list, I'm going to show her how to create a watch list. Stocks that are on their butt that have a high dividend.
Yeah. I mean, it's the sort of thing where if you want to trade small, trade often, having more symbols to trade and have some sort of rationale to trade them, because yes, we are product agnostic. Show me the volatility, show me tight bid-ask spreads in the options, and I'll just do a trade in it. I don't care what it is. I don't care if it's the VIX. I don't care if it's live cattle. I don't care if it's SPX. I don't care. Okay.
So, what's great? You kind of said that. Can we, John, can we pop into Twitter real quick? This came in a little bit before our show, but I wanted to show you this because it's kind of what you were alluding to. And this is the great Gatsby viewer. They've been wonderful, and they send us stuff all the time. And they found this on the site, and it is a decision tree that was made by our guys a long time ago.
Yeah.
And is that to your point? It doesn't matter. You don't care what it is, right?
Yeah.
Wherever you start, and you can go if your volatility is high, if your volatility is low. And you just kind of make decisions based on that because you don't.
Yeah. And looking at the names on that, you and I taught those guys.
I know.
But the point is, trading. It's not easy, but it can be simple. Okay, so trading is hard. It's losing money. How do you handle losing money? That's hard. Emotionally, it's hard. But the actual process, the decisions, it's pretty straightforward. It's not complicated. And yeah, if you want to get complicated, Liz, you and I could talk about complicated trading strategies and information and all that. But you don't need to. And that's my point.
No, I think you don't need to at all. And I think that's an excellent point in the fact that I think you need to learn maybe one trick. And I think you in the beginning had said this. And we used to talk all the time about your bread and butter trades. And that was just selling far out of the money puts.
That's it.
Because puts are neutral too. You're not saying, I don't think you have to have a directional bias in the market either. Because puts are, if you sell out of the money puts, you're not saying you're bullish. You're just saying it's not going to go down too far in a certain time frame. Right.
That's it. And that stupid trade makes money. Okay. It just makes money. Whenever I try to get cute and try to guess what the market's going to do, yeah, maybe it's 50-50. Sometimes it works, sometimes it doesn't. Selling out of the money puts or put spreads is a reliable winner. And so my point is with that, here's what I'm working towards, sort of content wise, is I think talking to new traders or even experienced traders, the fundamental option trade, the strategy is the vertical. You don't need to know about individual options.
So, okay, that's a great question. So you would start with verticals. Like if somebody brand new doesn't know what a put or a call is, you would start with verticals.
Yeah, because here's what I can do with a vertical is I can tell you exactly your win-loss numbers. I can say, Liz, you're going to max profit is 130 and your max loss is, the 330, 370 or whatever the number is, right? I can give you those numbers. I can't do that with a naked short put.
No, you can't. I think it is easier for people to understand it when you do it that way. That's why I love those 0DTE SPX, because they were the easiest things for me to teach. Meaning,
yes.
It'll be over today, whatever. This is your probability and this is it. It's defined risk and it'll be over, done with and dusted. You don't have to wake up in the middle of the night and be like, where's SPX? It's gone.
You can spend your entire trading career trading verticals. That's it.
Yeah.
You don't need individual options. Yes, there's some advantages towards selling strangles. Yes, I get it. And I sell naked strangles. But the point is, you can make a career out of selling verticals.
You can. I hesitate to say this, but we're always very honest on here. I don't sell. I mean, I shouldn't say I don't. I rarely sell strangles these days because I don't like the risk of the calls, in my opinion. The only thing that I've been burned on, and like you said, you kind of get used to it. I've gotten burned too many times to the upside where the volatility gets sucked out, it's up too high, and then I have to do something else to keep a short position. So I've been leaning towards, will I sell them? Yes. But are they rare? Yes. I'll do a jade lizard or a lizard before I'll do a strangle.
Yeah. No, I get that. You want to talk about complex stuff. You raise an interesting point about, the stock rallying up and the volatility getting sucked out and everything. We do not have what I call a stochastic volatility model in our option pricing, in our theoreticals. What does that mean?
I don't know what that means.
That if I'm looking forward, if I'm looking at, the stock prices here and volatility is here today, looking forward, what's the probability that the stock will be higher or lower than the strike price at some point in the future? I've built models in the past that would say, well, the volatility, it starts off at 15, then it goes up to 18, then it goes back down to 17, then up to 20, then back down to 14, blah, 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 blah. That's stochastic. It's random. Okay. So it would be non-constant volatility. So volatility would change. The problem with doing that, though, and why it's really not very useful, is that once you have the trade on, the stock price determines the P&L way more than volatility. So when you say, I don't like selling strangles because the out-of-the-money call gets creamed when the stock goes up, Liz, it doesn't matter what volatility does. A drop in volatility isn't going to save your short call when the stock is up 20%.
No, but it is. It's almost like a 1-2 punch for me, because when that volatility gets sucked out, I'm selling premium, so I want the vol out, but it's hard to defend. So I can't, rolling out in time, there's nothing I can get. The defense of that option is harder for me than if I'm selling a put or, your bread and butter trade where you're just selling puts. If the stock drops down, I'm rolling and I'm collecting more premium. I'm doing things of that nature. It's just a 1-2 punch when it goes up and the vol gets sucked out.
Yeah. Well, that's been happening a lot over the past 20 years.
Yeah. All right, TP, we managed to finish the show without using the platform. I want to say thank you. We've had lots of bugs, but nothing is going to stop us from doing this. Thank you for filling in for Jenny. I hope she does feel better, but you were wonderful.
I hope so too. It's never fun being sick. That stinks.
Never. All right, TP, you can take your red shirt off. Go make sure that the police...
My stylist...
You can comply with your stylist and go make sure the police are off your front porch. Everybody, good luck today trading. And remember to trade small, trade often, laugh with us, learn with us, and watch TP and VLD. Thank you, TP. You're the best.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Welcome to the show. Thanks for tuning in. This is Tasty Live, Options Trading Concepts Live. My name is Mike. I'm here with Jamal.
Hello.
From the SIBO floor. And this is the first time we've done this year, but also the first time we've done this where the markets are flat, at least the A-minis.
Yeah, it is really quiet. As much as I would like to take offense for the market doing this on our trading day here at the SIBO floor, I got to say it's been like this most of the week, right? I mean, this has been a very quiet week. I guess we're waiting on jobs numbers. We've gotten a little bit of data here throughout the week, but it's been very quiet start to the new year, 2026. No surprises here, but I'm not the guy who gives a rundown of the markets. You do. Go right ahead.
Yeah, E-mini's flat. Literally flat. NASDAQ down 180, which is interesting. We got the Dow and the Russell up a little bit. Bitcoin and ETH flat. Really, everything is pretty flat when we look at the futures markets here. We do have natty gas moving to the downside, silver moving to the downside.
I mean, that could even almost be considered flat for silver.
Yeah.
And gold is flat.
2%?
That just tells you everything you need to know.
2% these days is ultimately flat. Copper moving to the downside along with silver. We've seen them moving together along with platinum and gold. But as you can see on this screen, really not much moving to the upside here.
And the things that are your crude oil, your lean hog futures up 1.5%, and gas futures up 2.7%. So it's definitely a concentrated day of movement when you consider the precious metals to the downside and some energy products to the upside. But I mean, this doesn't really surprise me. Like you said, I mean, we've had a pretty low implied move in SPX for the start of the year. And we do have some numbers coming out today and tomorrow, but we also have bank earnings kicking off the next earnings season in about a week here.
That's way too long.
Yeah.
we need it.
But
we need it sooner.
It kind of feels like the market is waiting for the equity data to see what to do next.
Yeah, I would agree with you. It does feel like that. I mean, even if we're not scheduled to move, as you have laid out here, the expected move for tomorrow, 42 points, way below 1% even. I mean, that's pretty small. However, when I look at the moves that we've seen recently, as far as the average daily range, which I'm watching it sort of more recently just to make sure I'm not crazy, because the expected moves are small. I mean, 0.5% move average daily range over the last 9 days. Same thing over the last 14 days. As far as points, that's 38 points. As you can see, that's pretty small, and that's kind of in line of what we've done. As a matter of fact, that's in line for tomorrow. I mean, 42 points. That's pretty small. Again, less than 0.5% a move. And the market is not exactly expecting a big move on, at least as a whole, on these things. However, there are individual names, I'm glad you pulled this up, that has moved. I mean, we've talked about these early in the week, and now they're doing the opposite move. WDC, Styx, Micron, those have been some really big movers this week. Another one, BE. Remember literally the other day I said to you, I was like, I am not selling a strangle in here because I'm bored, because I know what's going to happen. If I do, this thing's going to, and look what happened. So I arguably would say this has probably been one of the more dangerous weeks as far as trading, because you could easily trip yourself up. I think you got to be really smart. When things are quiet, the tendency is to be bored and put on some trades, and I think you just got to be a little bit careful in a week like this.
Yeah. Couldn't agree more. And yeah, I mean, you can get away with it sometimes, but generally speaking, when the VIX is in, the low teens and the markets aren't moving, it can be a tough environment to find really good new opportunities, or at least new opportunities that speak to you. But to your point, just throwing something on because you want to throw something on. And we talk about this all the time, like, yes, we want to generate a large number of occurrences over time, but that doesn't mean I have to place 5 new trades every day or 10 new trades every day. Like, there's plenty of times where I don't do anything. And it's really just a function of the market not showing me anything that I want to get involved in. And at the end of the day, really, we have 250 some odd trading days in a year. I mean, you can get a large number of occurrences throughout the year, and we will get to that, higher occurrence number throughout the year. But right now, there's just nothing moving. So it is kind of tough. I did make some adjustments though. If we look at the Tasty follow page here, we can look at some activity from today. See, you did something in silver. But yeah, I adjusted the year-long micro E-mini position. I said I would this week, and we're getting, this is not a sell-off. We're down 1 point. But I just wanted to move this from the January end of month to the Feb end of month. Keep that premium rolling in. We're coming on 21 days here, so I just made this move a little bit early, but I actually rolled it up 50 points and out to the Feb end of month cycle. So Feb 27 moved my 6600, 7100 strangle from January up and out to the 6650, 7200 strangle in Feb. I'm still leaning bullish here, and I want to kind of lean into this inactivity in the market, especially if the VIX stays suppressed here and sub 15 handle. I want to play for a grind higher to the upside, and moving into February a little bit earlier without much market activity for me means just slightly shifting to a new bullish stance for the next month. So I picked up $238 in credit when you break down the math. This is going to be one of the trickier things with the micro E-mini position, because when you look at your P&L, it will show you your total credit received. So I've collected $703.75, currently trading for $434. So we're looking good right now. But when you're looking at your break-evens, you have to break that out to your points. So when we look at my total premium received and total credit received from this position, you can look at the monetary value, but I'm also going to lay out the points here. So I've picked up 140 points of wiggle room beyond the strikes. So that tells me that my upside break even is at 73.40 and my downside break even is right around 6,500. So we're looking good right now in terms of covering a wide range, and we've just started the year. And when we come to Feb, if I need to make this adjustment again, I'll do the same thing. I'll probably pick up a similar credit. And this is a credit reflective of a very low VIX environment.
Yeah.
If we do get a VIX pop and we're closer to the end of the February cycle, I'm going to pick up a lot more credit. Because when I started this trade back in late December of last year, I initiated this trade into a nice market sell-off, and the VIX was significantly higher. I picked up $500. So I would say if I'm expecting this to be the continuous roll, somewhere between $250 and $500 every single time I roll is what I'm expecting, and I will continuously adjust my risk as the markets move. So just a quick update there.
I think those are the best kind of trades. It's funny, I'm looking here, and I might have 8 trades that I've done this week. And I feel like typically I might do like 5 trades a day, but
yeah.
I'm telling you, that's showing an incredible amount of patience for me. I'm proud of myself, because typically I would probably overtrade a little bit. It's been pretty slow, and I think I've done that on purpose, just as sort of self-preservation. Earlier this week I talked about SLV. I rolled my strangle out, and then today I did buy back the call because it's down, and we've seen the moves. I hope I'm wrong. Again, my only position I have left now is a long February 75 put versus a short 66 put in the January 30 cycle. I closed off the call from that strangle in the Jan 30 cycle. I'm up 50% on it. I'm up 50% on it, and I feel like this thing will bounce back, and I'll be able to sell that call probably for the same price that I sold it the day before, because that's just the way silver's been moving. We've seen those type of trades. Another one to highlight, Costco. I'm glad I closed it, but I am almost not surprised that the stock is higher. I don't know if you saw today. Yeah, it's trading 930s now.
Very nice.
It almost seemed like it had that look when we took it off, and that's usually how it goes, right? Like, you hold on to something for so long. We had a couple of different calendars in there. Damn. But it's been taken off to start the new year. I know, right? But that dovetails with something we noticed earlier. Consumer staples, they've been moving big. As a matter of fact, today they're up 2% overall. It's the largest move since April. So there does seem to be somewhat of a rotation. Again, that shouldn't surprise you when you look at the 4 indices today. You can see Russell and Dow up versus NASDAQ and ES. I feel if there's any one thing that is to take note of this week, it's been that. I think there's been a little tug and pull between those two. It's almost like it's like 4 brothers, and like 2 of the brothers are fighting against 2 of the others. You got multiple brothers. I'm sure you know exactly what that's like. So It's been that kind of week. I think there's been a little bit of rotation to start the year. That's one of the things typically you will see is like a sector rotation. It hasn't been heavy at all, but it's been there, and this shows it.
Yeah, for sure. Crazy move in Costco, 5%. Love to see it, but yeah. And these are the opportunities we've talked about before too. It's like if you're trying to play if you want to have a bullish stance in some equities that you want to get long, like look no further than your household names that are really low relative to counterparts. And like Costco is obviously not going anywhere. Like they're expanding every single quarter. They announce their expansions and how many new warehouses they're building. So, yeah,
you know
great
what?
trade.
There is the supposed situation about tariffs tomorrow, right? Supposedly.
Yeah.
I don't know.
There's supposed to be an announcement. Yeah.
Supposed to be.
Yeah.
Again, SPX is not pricing anything in for that. I know that's something we've heard about. Maybe that's why Costco's moving today. Could be a little anticipation in front of that. Yeah. Obviously, they've been one of the. I think that's the only thing that's weighed the stock down, because, like you said, that place makes money hand over fist.
Yeah.
Mine mine too. I went a day after you, and I spent like $500, $600.
Yeah, so it's $1,000 between us.
It's typical.
Yeah,
but
that's called revenue, people.
Yeah, exactly. So yeah, that might be part of the reason, but I think also too, it's just a consumer staple situation as well. I mean, you showed a bunch of names there that are moving today.
Yeah, and I have no doubt that Costco will eventually get back above 1,000 and continue on. It's just like if you want to place a bullish trade now, maybe this is your signal that that's the start of something new going back to 1,000. But it's tough to place a bullish trade now into this rally.
If it fades tomorrow, I'm getting back in some way. Yeah, for sure.
That just I like that because it shows you like this is the capability. If there's a reversal based on news that maybe working right now, or at least moving Costco for whatever we're supposed to hear tomorrow, and then something changes, still over time, I think it's a nice bullish trade, and we'll continue to trade it that way. Definitely.
Oil with a little bounce today.
Oil?
Yeah, bouncing back.
Yep.
I guess if there's one other thing this week that has been a story, has been oil. It's been running in place, if you will. It's not like it's making new highs or new lows, but it's been obviously a story part of the week since that's how we started the week.
Yeah.
With a little geopolitical risk.
We were talking about natty gas too.
I thought we were only talking about positive things here today. Why would you do this to me? Why would you do this to me?
We'll switch back. We love crude oil. I have a bullish position on here. I've got the 50-57 call ratio, and I have the long contract against it as well, so I have no upside risk here. But as you can see, still $140 of extrinsic value to extract from this position, and that will be extracted over the next 6 days. So I'm going to hold on to this position. It's one contract. Even if this goes back below 55, so be it. But I want to stay in this thing as we see a nice little bounce from the lows. We're still in the lower end of the range. But yeah.
Yeah, if it goes back below 55, I'll put the same thing on again.
Yeah.
And next expiration.
For sure. But yeah, that's pretty much it for this portfolio. This Amazon position, I'll keep my eye on it, but it is a long-term crab trade in the earnings cycle. So if we get to 260 pre-earnings, I'll just close this thing and restructure something else for earnings because I don't want to have a neutral trade on for earnings in Amazon.
Yeah.
But yeah, that's pretty much it. Other than that, everything else is kind of just chopping around as expected. It is Thursday though, and we are on the SIBO floor. So we've got some trades for you. 2 trade ideas, January 8th. And both of our strategies, very similar.
Yeah,
They're
the
might
same.
Hint at what we are feeling in the markets right now.
Yeah, I mean, there's not a whole lot of premium to sell. Honestly, I feel like these are the times where it's probably best to just pick a direction. And so I chose to pick a direction in Merck. I've been watching the stock more recently. It's making a move. We talked about some of the consumer defensive names, and so I'm curious to see, again, if this thing is going to make a bigger move. If you just look over the past year, I don't think that really tells the story. You got to look over the last couple of years, and then you see Merck's stock has been down for the better part of a year. It's trying to make a recovery here, and again, you just see that. Like, you're like, oh, okay, this thing's on way too high. Like, but when you zoom out a little bit, you see that it's been making a run. Maybe it's poised to make a little bit more of a run. So I was like, well, what's an easy and cheap way to do that? Well, the Super Bowl. So I collected 65 cents to using the 110-105 put spread to get long the 120-130 call spread. I always like to widen it out just a little bit wider if I can and still collect a credit on the upside. So that's the play, and we'll see if this is the beginning of something in the consumer defensives, if it's the beginning of something in the healthcare a little bit. I figured it was a cheap way to get in. As much as I like Lilly, it's a little expensive. Yeah. I couldn't do it in that one, but decided to do it in this one.
Yeah, this one's nice, and you're still picking up a decent credit, giving some of it up, but you're creating a much wider range for this thing to shift in terms of gamma. So like this is really just a gamma trade where you're trading your short put max profit, which is static, to more of a dynamic position where if you do get the rally from where we're at up to 120 and beyond, this call spread is really going to appreciate and the put spread is still going to lose value. So instead of having $150 of max profit, if Merck really goes nuts, you have $1,000 of max profit and some change. So
let's go.
I like it. Yeah. And really, this one's nice too because you have a really wide call spread relative to your risk on the downside. So nice asymmetric risk return as well, with a max loss only at 435 since you collected a credit for this. Love it. I'm also deploying a super bull.
Super bullish?
Because I am super bullish. So what's interesting about this one is I always try to place an SPX trade when we're here on the SIBO floor, but right now, we're looking at a situation where, to Jamal's point, like implied volatility is super low, so selling a lot of premium in here for me doesn't really add up, unless I'm in a year-long position like an MES where it doesn't matter what the implied volatility environment is because I'm going to be in it forever. But right now, I think throwing something on like this feels about right. This is a shorter term one. Similar story though, 67.50, 67.40 put spread to finance a 7100, 7105 call spread. And I picked up 60 cents for this thing, actually 55 cents to be exact. But as you can see, 55 cents is my neutral profitability if we're in between this range and everything expires worthless. But if we do end up rallying closer to 7100, 7105, the max profit is $555 with a risk of 945. So still plenty of room to the downside before I'm tested. If I am tested, I can just roll the put spread out and just let the call spread expire worthless. But as it stands, 76% pop because we have plenty of room to the downside before we're tested. And we'll see what happens. But this is a shorter term trade, so if we do get a nice pop over the next week or so, I'll just close this thing. And looking at call spread value, so the 7100, 7105, it has a max profit of $500, but if this thing goes in the money prior to expiration, I shouldn't expect more than $250. If you look at the money spreads right now in a 22-day cycle, they're going to be trading for about 50% of the max profit on that trade. So all things considered, looking for $150, $200 best case scenario if we get a move up to 7105 or beyond over the next week or so.
What's nice about that is that you're literally like 2% out of the money on that put spread, and I think that's what's really giving you that really high pop there.
Yeah, definitely. And what's nice about this trade, the risk is actually pretty much covered because I also have this downside butterfly in February. So I've got my risk is at 67.50, 67.40, and I have about $900 of risk in this spread. However, if we get to 67.50 or we go below it to 67.40, this butterfly is going to be in the money. It's at 6,800, 6,700. So this butterfly will more than likely offset a ton of the risk in my Super Bowl, which is a shorter term trade. And you can actually see that if we go to the curve analysis here and we just consider all of these positions that I have on, and then if we evaluate at like the end of January, you can see I do have some risk to the downside, but it's not close to the $900. Like that, we'd really have to have a big sell-off, a 400, 500 point sell-off before I start to take on some real risk. But this wider butterfly does offset a lot of this put spread risk here. So just another thing to shout out, and another reason why I was comfortable throwing this position on, because even if I take heat on it, that butterfly is going to offset a lot of it.
I know you were talking about that butterfly, I don't know, it must have been last week, and I remember saying, like, you should just keep that thing on. And honestly, ever since yesterday when I saw it again, I was like, I'm going to try and buy that. And ever since I've tried to buy that, market dipped. Like, I haven't been able to get it. I've still been out there. It's like I'm just reminded now of the price right now. It's, was it 550 or something like that, 530?
Yeah.
I mean, we're bouncing a little bit. Maybe I can try and get it on now. I had it on since this morning. But yeah, it has not given me any love on it. But, I mean, I like that trade. Like, why not? It's just so quiet. You really don't know what the next move is. If we bounce, cool. I got long deltas, but I really don't have anything. I really don't want to buy any puts or put spreads, but I feel like the easiest way to do it is like a butterfly, downside butterfly.
Yeah. I mean, it's the best risk reward for sure. When you consider this is a 100-point wide butterfly that I bought for $500, and even into this inactivity in the market, and we are 125 points out of the money on this butterfly, it's still flat. So that just goes to show, like, this is it's a nice way to buy some downside protection and not really have too much risk as it stands. Like, I've had this on for over 2 weeks and it's still flat. And if we look at SPX, like where we were 2 weeks ago, you will see that we were just a little bit lower. We're basically flat on the position. So nice to see that even if you have this position on and you do nothing with it, or nothing happens to make it more favorable, you're still looking okay from a risk perspective.
Because that's like essentially in the heat of earnings, right? That time period. I mean, when I look at Amazon's earnings are on Feb 5th, Apple late Jan. I mean, that's actually pretty good. If things don't go well, I just got filled on it, 580.
Look at that.
Yeah, Meta's on Feb 4, so that's the other reason. I think that's the other thing to always pay attention to. Try to do things on like around or after catalyst. You know what I mean? Like, Because I mean that's ultimately what usually has made us move over the last 3-4 years now.
Yeah.
At this point, we got plenty of data for that.
For sure. But yeah, let us know if you've got anything you're looking at in the YouTube chat. We're streaming live there. Just head over to tastylive. You can see the video streaming front and center on the homepage, and you can throw in your trade ideas and questions along the right-hand side chat. But yeah, we got about 30 or so minutes. We can field some questions, see if there's any trade ideas out there. But yeah, it's kind of a grim day from activity standpoint.
Yeah, it is.
Not too much going on.
You see what's going on with the people?
Yeah.
See what's going on with the people? People in the chat. What's going on?
DraftKings catching a little bit here.
Is it? I just heard there might have been some news.
Playoff weekend?
Yeah, I heard there might have been some news. I think New York lawmakers proposed ban on individual sports betting markets, allow March Madness and playoff contracts, according to covers. That's from our Taiwanese sources there. But anyway, chat, what's going on, guys? How you doing? Yeah, it is. Let's see, SoFi. That's right, SoFi is a bank. Some people call it the Amazon of banking. Really, the Amazon of banking? Do they deliver something? I don't know.
They deliver loans.
Speaking of delivering in Amazon and started as a book place, do you know that Barnes & Nobles is opening like 4 stores in Chicagoland area? Like stores.
Really?
Yes. Do you know anybody that goes? I mean, who goes to bookstores?
Yeah, I mean, I guess it's the one on. There's one in Wicker Park that's nice. It
Coffee.
took over. Yeah, it took over the Walgreens that was right on the corner there.
Oh yeah.
That one's really nice. So I guess if you're looking for just spending some time reading, doing whatever, Barnes & Noble is the place you're gonna go.
I guess.
But it's the same thing. It's like when everyone shifts to digital, everyone wants to come back to hard copy. It's just
what's so funny about that. I think it's deeper than that too. Like you said, shift to digital, you come back to hard copy. Dating shifted to digital. I think it's going to come back to hard copy. You can take that however you want them, however you want. I'm just telling you. This is how things go, man. It's the ebb and flow.
Yeah.
Oh, let's see.
SoFi, I like SoFi. SoFi had a huge rally last year. It was trading around 10, jumped to 28, 27. Yeah, I think there's when you look at what's funny about these products is like you look at SoFi and then you look at the market cap, 34 billion. And then, SoFi's let's call it a introductory banking product.
Yeah.
You look at something,
it's fintech,
the most established, JP Morgan, and you have 800 billion. Huge gap there. So, yeah, I mean, if you think that SoFi's market cap can get up to 100 billion, which is 1/8 of JP Morgan's.
Well, I'm
looking at a $100 stock price.
I'm struggling thinking of a regional bank right now. What's a regional bank ticker? I can't remember any. All I can think of is KRE, but
I don't know.
I'm trying to compare that to a regional bank.
Yeah. Anytime I drive by the regionals, I'm just like, what does the card look like? If it's like,
it's fair.
If it's like Lakeshore Trust Bank, what does that look like?
Yeah. No, it's fair. Let's see. TFC. TFC. I'm just curious. What is their market cap?
3 times.
So it's about half of a regional bank. Okay. Yeah. Wintrust. What about one that's here? WTFC. God, that thing's $149. Only a $9 billion market cap. How about that? And that thing is everywhere all over our town.
Yeah.
Hell, they even have an arena named after them. It's kind of interesting.
Yeah.
I just always like to put things in perspective. I mean, because honestly, I really wasn't sure at the size of some of these regional banks, but even within it, that's a big spread. I mean, we just looked at one that was, TFC is pretty big. It's pretty big in the South, which honestly a lot of banking has gone to these days. Chat, let's see. Mike and Jamal, how do these specials look? PLTR call crab. 210, 220, 230, so $20 wide. March Feb, is that what they're saying? Yeah, March Feb.
210, 220, 230?
Yeah.
March Feb. Let's take a look. Yeah, sure. I mean, this is so cheap that
It's very cheap.
It's
actually.
fine. Like, I like it. So when I say cheap, I mean like you're looking at a 10-point wide crab trade, long march, short fab. You are paying $3 for that 10-point wide. So this analysis that we're looking at is at the end of January. But if we flip it to today, if you were to get a rally in Palantir, this is still going to be a home run. Like you can make almost double your money on this type of trade. So yeah, I like these longer term crab trades only if you are paying a low amount relative to your max profit intrinsic value here, which is $1,000. So you're paying $3 on a $1,000 max profit if it expires in the money or right around there. So
that's a good one.
Yeah, I like it. And that's the way you get around like offsetting too much time in a spread. If you have a spread that can appreciate $2,000 and you're only paying $3 for it, this is how you get this theoretical P&L that still looks very good if you do get that rally, and you do have that potential bailout from earnings, even if it doesn't move. If you're looking for an earnings rally, the short premium here in the Feb cycle, of course, is going to crush more than the March cycle.
They got another one in ticker net, Cloudflare. The 220, 240, 260.
220, 240?
Yep, 260. Also, March Feb, I assume?
Yeah. Also, I was instantly filled on the Palantir one, so I take back everything I said. Yeah, I mean, this is another one. You have a $3.50 debit for a 20-point wide. So again, you have no issue here. If I can zoom correctly, you have no issue here if you get a rally up to 220 or even higher. Like, you're looking at a doubling your money type situation. But of course, as you pass time and you get closer to the expiration of February, you can see your premium starts to really bubble up. And that's because now the theoretical risk analysis assumes your 220 calls holding on to extrinsic value and potential intrinsic value, but your 240 and 260 go to zero. So you can make a ton of cash here if you do get the rally, especially if that rally coincides with February's expiration or getting closer to it. And same thing with Palantir here. If we look at the same expiration risk analysis, we're looking at $900 of max profit here on the same time frame.
I like both of them. Yeah, I put the Palantir on as well. It's going to be a little harder to get filled in the net.
Yeah, a little wider.
Why is the stock down today, by the way? Any news there?
But yeah, I'll bite on both of these because the debits are just so low that you don't have too much risk. Even if net continues to plummet and Palantir continues to sell off here, these options are still going to hold on to a good amount of value and should be okay. I'm in on both.
Costco question. I am short the Jan 875 call. Hurting today with the move, considering rolling up and out to Feb 2885 for a $1.90 credit. Thoughts? What would you do?
Yeah, I mean, this is a tough one. This was trading for about $1,200 or so. Yeah, $1,400 yesterday. Now it's $5 with this big rally. So rolling up and out to Feb to which strike?
The rolling up and out to the 885, so $10 up.
Yeah,
For
you can do
$1.90
something
credit,
like this. Yeah, you're still picking up a credit, which is nice, but really the thing here is you are shifting your intrinsic value risk, which is at 875 in Jan right now. You're shifting your intrinsic value risk up 10 points, which is why if we freeze this price, you're seeing $1,000, $1,210 in extrinsic value added to this position, although you're only collecting $210. But again, it's because you're moving your 10 points of intrinsic value up 10 points closer to the current stock price, and you're shifting your high short delta position into a lesser short delta position. You're picking up 20 deltas, picking up some premium, getting yourself within the expected move for February. So yeah, I like this as an adjustment. You just need Costco to not continue to climb here and kind of flutter around this level. And over time, in theory, you can keep rolling this. Let's say you keep picking up this sort of premium. You can keep rolling this up and up and up until you get closer to the current price. If you wanted to offset some of that delta even more, you could consider throwing on a short put. If you throw on a short put at 885, now your credit looks a lot different. You're picking up $1,200, adding $2,200 of extrinsic value to the position, neutralizing deltas a lot more, and depending on what your credit was initially, this could set you up in a position where you don't need Costco to move anymore. Like if you have a $50 credit in this new position, your break even's up at $935. So you could even absorb even more, assuming you had a $50 credit overall. But yeah, I like the adjustment if you want to stay in short. It's just a tough pill to swallow, of course, with this 5% up.
Yeah. Somebody's asked me about my MNQ strangle. So the year long. So I am short the 25-250 in February right now. I am short the 25-250 and I am short the 27K call. And so, no, I still have that on. I haven't, this has been my first adjustment. I adjusted this a couple of weeks back. I mean, I've had this current position on since, for 17 days now. Initially, I started in the Jan, and then I rolled it out to here. And I'm holding it. I mean, we're firmly within the 45-day window right now, so there's nothing really I'm going to do until possibly around 21 days, and we'll see what it looks like at 21 days. If we're literally sitting kind of right here at 21 days, and obviously at this point I probably would have, I don't know, probably collected another maybe $200-300 at that point, and I will probably analyze the roll. I mean, more than likely I'll look to roll at that point. If for some reason let's just say we're at 26K, right? Let's say 26.2 just to be exact, and we're still quite a ways away from 27,000 and quite a ways away from 25,250. Maybe I hold just a couple of more days, who knows, maybe another week or something before I think about rolling, but eventually when I do roll, it will be out to March. But for now, yeah, I'm just sitting in that expiration, especially since nothing's happening. Sure, we're making money, it's albeit slow. I mean, we're watching paint dry here overall, as you can see where VIX is and what Vol is doing, so there's no reason for me to do anything as of now.
Yeah, and you can roll to the March 20th, pick up another 20 days. One thing to note, and something that we'll account for when we roll from contract to contract, eventually in this position and the micro minis, we're going to go from the H contract to the M. And as you can see, the M is 200 points higher than the H. So what we'll have to do is, if we're keeping the same trade on, we're going to have to shift our strikes up 200 points to offset the increased price. Because if you roll the same strikes out and you're rolling into a 200 point higher product, you are now leaning short.
Yep.
So just something to call out. Let's see what the MES one is. This one's like barely anything. It's 40 points. So the roll I made today, where I rolled up and out 50 points, that would have been a neutral roll if I went from the H contract to the M. So just something to keep in mind, like when you're rolling from contract to contract, and Tasty Trade does a really good job of organizing this, where you can see when it happens. You can see a color shift in the trade tab here, and you can see the last price. So anytime you're rolling, and here's my position with the little white circle. Once I roll into the next cycle, I have to adjust my strikes to adjust for the new price. So just something to call out.
So, Mike and Jamal, any trade ideas for Micron, Sticks, WDC, SanDisk? I mean, I don't know about you, but I've worked hard to stay away from these names. At least I tried. I mean, I was trading MU Strangles, I think, in November. I think right around the time we first got around here on the floor. Same thing with Oracle. But since then, it has been, they've been in the no trade zone for me, just because they move so much. They got a lot of premium, I know. But the movement is just, it's hard for you to monetize any volatility that you sell, that you collect when they're moving so much. And they're, the buying power on these strangles are not cheap anymore. They're really expensive. In some cases, they're kind of almost untradeable. When you look at like SanDisk, for example, I think we did this exercise last week. Those options are so wide. Micron is tradable to some degree. SanDisk, the options are wide, and there's earnings around February. There's no way I'm interested in doing anything with that one. STX, I mean, same deal, kinda. Dollar wide, damn near on some of these. It's just tough, and I get it. The lights are on. This thing is moving around a lot. It seems like opportunity, but it's tough when you can't get in and out. And that's the thing. I mean, it's the number one thing we preach is liquidity. It's tough when you can't get in and out of these is when you want.
Yeah. Yeah. And especially when you look at all three of these, they have decent return on capital. I mean, you're looking at like 10%-ish, but for such high implied volatility products, I'd like to see a little bit more. But this comes with the risk of, you know, what's going on in these markets, and especially with earnings coming up. I prefer to just be directional if I'm picking a direction here. If I'm selling premium in the earnings cycle, because if you're selling a strangle, you lack that implied volatility decay because it's going to stay bid until the earnings are out. So just something to consider as well.
Any interest on Netflix? I mean, I'm already in it. I'm still in it. I got a Super Bowl, and it's been super bare.
Yeah.
The stock has.
I couldn't be more short since Stranger Things did not release another secret episode. I don't know if you saw that, but it was like
I didn't even end up
taking over
watching
the
it.
internet.
Yeah,
Really?
I didn't even end up watching. I started watching the first episode, never really got into it this time around, and ended up like not watching it all. I don't know. But what happened?
So the series ended, and then the public was like, this can't be the last episode because there's too many nuggets in the series of like the fact that this could be a fictional last episode.
Yeah.
And the internet just went crazy with it. But they kept saying like, no, there's no extra episode. Like, this is it. And then I saw stuff like coming out like, ooh, there's a new episode showing on Netflix. And then you go to Netflix and there's nothing there. So it was just like, it was a crazy, like, it's a weird thing because now like the public wants another episode, but they're not creating one.
Interesting.
Yeah.
All good things come to an end at some point.
That's true. That's true. But yeah, Netflix, $90 price point, sitting at the lows here. I really like this one for an earnings trade. So I have a leftover long call from a previous position. Obviously not looking good here. It was a smaller trade, a 105, 110 diagonal spread, but I'm probably going back to the well here with earnings because when you look at 39% IV for March, 55% IV for January, only an 11-point move for March, an 8-point move almost for the January earnings cycle. Just looking at a quick diagonal spread to the upside, like this is going to be a really cheap one with a lot of upside. If you look at like the 90-100, long March, short the 15-day, paying $5 for a 10-point wide spread, like this is where I want to be for an earnings announcement if I'm leaning bullish or even bearish. It's going to be a similar setup. But looking at the premium here, you're only collecting 60-70 cents for a downside short put, where you're picking up $1 for an upside short call. So there's definitely call skew here, and that just helps reduce basis if you're playing a bullish trade. So I will definitely be getting into this closer to earnings, though. I want to see where the market's at, and this premium will still be there.
Yeah, I got Super Bowl trades in here that I've had for a while now, going back to around the time of the announcement of the deal, ever since the stock cratered, and stock hasn't been able to catch a lift at all, man. So just sitting here holding them, waiting.
Yeah.
Somebody's wondering about SPY. Our SPY 60 Delta calls, leap calls, SPY 60 Delta leap calls, a good core position for your portfolio? I would say yes. What say you?
Yeah, it's basically a way to get strong delta with a defined risk. So leap call, let's just call it like the Jan 15th, 2027, you're over 100 days. 60 delta is going to run you about $7,000. So $7,000 for a long-term call here. Plenty of upside profit potential. Let's just say we get a 10-15% year-end rally here. That would bring you to 760 in SPY. So expiration, you're looking at $1,700 on your $7,200 debit, which is just over 20%. So your leverage would pay off here if you're right. If you're wrong, you have defined risk, and you have plenty of time left in this trade to where even if the market crashes, yes, you would realize losses, but you have the ability to hold it and see if you get that reversal like we saw last year time and time again. Like even after the tariff stuff, we ended up near highs again. So yeah, I like it. I think you could also consider, like, if you're inventorying this 670, maybe selling something against it. Like right now, the market's not moving, but let's say you buy this and you get a 150-point rally for whatever reason. I would be looking at like selling something against this. If you get the 150-point rally, now we're sitting at over 7,000 in SPY. You could go way up here and just like chip away at this premium here by selling near-term short calls. But if you don't want to do that and you just want to lean with the long call, like I'm fine with it.
Yeah, I mean, I think it's a good, core position overall. Obviously, we've seen markets be strong. Even in weak years, even if you have a weak year, you still have time, like you said, and you can sit on that thing. There's nothing like having a longer-term trade that you don't have to think about that much every day. As a matter of fact, if you can put that trade in a different account that you don't trade out of regularly, I think it makes it a whole lot easier. I'm telling you from experience, for sure.
Because if you have a year-long intention, but you're checking it every day, like our trades are different because we have to move our trades, we have to adjust it. But if you're just buying a leap, I like that idea. If you're trying to keep this for the whole year and you believe that regardless we're going to be up 10-15% and you want to take that yield, you can't be looking at it day to day, because you're going to see I'm up $500, I'm down $500, and that's when your brain's going to start working against you and manipulating your initial intention. So definitely a good call out there.
As we're scrolling down the chat here, somebody, the person who asked about the Costco question, they actually had a little addition to it. They're like, yeah, hi Mike, on the Costco question, I plan to sell near-term puts to support my short call. Sold a 905 Jan 16 put, 23 Delta, 440 today. Plan to keep doing this to support the new Feb 885 short call. So, little addition there.
Yeah, I like it.
Apple pre-earnings pump, sold off from recent highs. I know I saw something, although it wasn't right, I don't think, but something said Apple had been down 7 days in a row.
Yeah, 1, 2, 3, 4, 5, 6.
I guess it is. Yeah, it is. Okay, I didn't realize that. Wow, what chart was I looking at earlier? Clearly it was the wrong one.
Kind of crazy.
Yeah, there's this dude I follow on Twitter. I can't remember exactly what he said, but one of those situations where he showed how Apple's been down 7 days in a row. Every other time it's done that, within 3 or 4 days, it makes a bounce.
Sold.
Something like that. So there's some news that came out a little bit ago, and I think it bounced a little bit, but then it faded. Something about Tim Cook's replacement.
All right. Yeah, it's bounced a couple of points from the session low. But yeah, this is kind of interesting to see.
It was actually, when we were looking at doing trades, this was what I was looking at initially, but I was looking at a Super Bowl in here. I just didn't love anything that I could find. I don't know.
Yeah, and this is one of the differences between Netflix and Apple is I'm looking at this very similar setup, buying March at the money and selling the weekly cycle that has the earnings announcement. This, though, is $800 of cost versus the Netflix one, which was $500 of cost. So you're not going to make nearly as much on this trade if you enter it before earnings and you get the rally, just because you're paying $300 more than the Netflix one. So I like it a little bit less for a pre-earnings pump trade because you're buying this for $8 and it's got a 10-point wide spread. So I think for this one I'm going to wait for earnings, because if you do get this continuation all the way back down to like 240 or 230, that's a much easier price point to buy, obviously. But if I were to pick one between Netflix and Apple, I think I would rather do the Netflix one early and the Apple one later, just because you don't have as much profit potential for holding the risk pre-earnings.
Agree. Yeah, I see you, Jared, in the chat talking about doing a calendar next week prior to earnings. I think that's probably an easier way to do, just like Mike said, waiting for earnings. Just might be the best thing to do.
Yeah.
We are essentially at the bottom of the chat here. No new things have popped up. Got 10 minutes to go in the show. What do you think about tomorrow? I mean, do you think is there anything?
Yeah, what are the numbers? There's jobs numbers that are coming out tomorrow, I believe.
Yeah,
I think we got a teaser today, this morning.
We did. I never pay attention to that crap, but
yeah, I mean, when the market's not telling us that we should, we don't typically.
Yeah.
So, and
it is December non-farm payroll, so it's not like an old thing that we're looking at. It's not a catch-up. It is the most recent one coming up.
Yeah. I mean, 40 points. So volatility's low. Looking at the VIX, we're looking at a 15 VIX. SPX 40-point move through tomorrow, which it's not crazy, but when you consider we're looking at a 40-point move through tomorrow and only a 90-point move through next Friday. In other words, tomorrow's expected move is about half of the expected move through next week. So in that sense, or in that context, it does tell us that maybe the markets are looking towards tomorrow's numbers to maybe move. But all in all, like less than 100 points for 8 days is really low.
Yeah.
Tragically low.
I mean, yeah, tragically that's a good use of tragically there. It really is. I mean, it's just, I think it's just one of those situations where it's the beginning of the year, people are trying to figure things out. We're seeing a little bit of rotation, like we said. You can see that based on Dow is basically, I'm thinking this is another new high in the Dow here. Well, no, not quite. Okay, given yesterday's fade, but still sitting around highs. Russell 2000, I feel like those have been strong to start the year. That's looking upward at a possible new high at some point or another. It would seem 26.25. It's close. It's really close. So, yeah, I mean, it's just kind of a quiet start to the year so far. At some point or another, we're going to look back on this and be like, wow, remember when how things were quiet and VIX was 15? That's gone. That's changed.
I think when you look at Nike, Costco, Lulu, those are three of the tariff impact companies.
Yep.
They're all up big today. Like Nike's actually, I think, even more interesting than Costco. Like Costco was already at lows and it's ripping higher, which makes a lot of sense to me. Lulu chopping around, but Nike was had a big sell-off yesterday and then actually had an opening price of 62 and now we're sitting at 65. So this was like an open and then, whoa, let's figure this out. Like, when did this happen?
I don't know. I don't know.
Looks like right on the open. Just an absolute rip.
It's clearly been. Well, look at Lulu as well. It's in this same pattern. I'm curious if it's been okay. What about Restoration Hardware? I know it's another one a lot of people have been looking at. I mean, I think this is definitely tariff related. This is the pump before the tariff news. People are trying to get into these stocks to see what happens. XRT is another one, obviously the ETF for retail. This has been on the move today. So this is clearly the play. This is what people have been doing. We'll see if it has more legs.
Yeah. We'll see tomorrow.
You know what's not really doing much again today is these oil names we looked at throughout the week. VLO. Remember we've been VLO. Remember we've been looking at. Oh, it turned around. I swear to God, this thing was down earlier. It was. Holy cow.
Yeah.
That's interesting. What is going on here? What is going on here?
Chevron too, picking up a little bit here after
what is going on with these names?
BP selling off a little bit. But yeah, these products are
Exxon
are reacting for sure. But yeah, Exxon ripping through the sell-off.
Oh, there was another question. Speaking of current news and whatnot, somebody asked about one of the defense names. Sorry, I missed your question, but I do remember it. Something about, poor man's covered call in LMT. It is definitely expensive, and the options are terrible. I actually looked at fading this move today in some of these names, but it is so wide. They were talking about looking at a poor man's covered call. But, yeah, I mean, this is, like, look at these markets. It's stupid. Yeah. Same thing with RTX. Same thing with, what was the other one? There's another one that was moving today. These things are so wide. It's impossible.
Yeah. Yeah, these are tough. Feb looks a little bit better.
I guess Boeing would be like the only name you could probably trade out of this group or GE. I guess GE is still this now, right? Aren't they? They're since they divested. Yeah, since they spun off GEV. This part I think is just aerospace.
Yeah.
So I think GE and Boeing are tradable. The rest of them, LMT is hard to trade. GD, RTX, they're really wide.
Yeah, these are $500 products. So LMT, $500 product, $500 wide bid-ask spreads here in March. February, a little bit better. I think for these products, just because they're so illiquid, I think you really have to just do like a binary earnings trade if you really want to do it. Like, getting into the January 29th cycle, the January 30th for the Jan 29th earnings report before the market opens. Like, these markets are fine. They're still bad, but like I can't get into a 3-point wide Feb bid-ask spread or a 2-3-point wide bid-ask spread in March. Like, you're just gonna get killed on slippage. So I think that's where you go if you're just trying to get some kind of trade on here. But yeah, I'd much rather trade Boeing, much more liquid across these expirations. GE, much more liquid across the expirations. Still got to be careful with some of these strikes though. But yeah, like this one here, 20 cents wide. The one right next to it, 70 cents wide. So still got to be careful. But yeah, I think you can find other names that are moving in a similar fashion.
Yeah, that was just the last one. I forgot about that one. Anything else? Oh, we got a...
Yeah, Nike coming in. This long call remaining from my earnings trade gone wrong. Like, when did I do this? I don't even remember.
Just do it.
December 18th.
Somebody says short put cashed in cycle for me.
Oh, this is a calendar because I didn't want to have a lot of risk. So I bought Feb, sold the one day for $1.78, and now Nike is rising from the dead, almost completely reversing the earnings sell-off here, and we're about 2 points away from break even on this trade overall, which is fun.
Yeah,
we'll see.
Did you have a target spread? Target calendar spread came through, Mike P.
Something's going on here because Target, Costco, Nike, Lulu.
Yeah, it's just that rotation into those names.
But yeah, this is another prime example. Like we said this a couple weeks ago. Do we think Target's going away? Do we think they're going bankrupt? No. So if you're getting in at these low levels, like you have a nice trade, and now you're feeling the benefit of it. But of course, longer term helps you a lot. I've tried to buy the dip in here a couple times. It's not been good, as you can see.
Yeah, I know.
But I had a couple of them. But yeah, still not great. But this is why, like, if you're selling a put with the intention of taking the shares, even if you did that back here when it was at 100 and you were taking this pain all the way from August, pain, rolling, and now you finally get the pop where you're good. So that's the benefit of short premium undefined risk with unlimited time frames, is you just have the flexibility to just wait until you're right.
I forgot about this Nike short call. It's just left over from earnings. I forgot about that. Still sitting there.
Ooh, TastyFX. Look at that. The dollar strength is coming in. Only down $70. This is down $300 at one point. But I refuse to close losing trades. So keeping that the history clean. But yeah, some of these positions we put on, the dollar peso, the peso
got
yen.
you in the dollar Mexican.
Yeah.
The dollar peso, I mean.
Yeah. Yep. He sold.
And the MJ. You're in the MJ, huh?
Yeah. The old MJ. Flat. But yeah, we're looking for a continuation here. Love to see it. All right, 1 minute left here. Let's give a little prediction for tomorrow. How about it?
Okay.
So I'm going to say outside of 40 points and up.
You're going to say outside of 40 points and
outside
up.
and up. I think right now the VIX, if these names are moving, if we have Target up 5%, we have Nike up 3%, we have Costco up 5%. If these names are moving and it's positive tariff news related, I think the rest of the market rallies on that news, and I think we'll be up 50 plus tomorrow.
Oh, geez. We've moved less than 40 points a day on average. I just looked. I'm going to say, you said over 40 points, right? I'm going to say under. I'm going to say under.
But up within 40 points up? Or just within 40 points? Neutral.
Within 40 points, I'll say up.
Thank
up.
you. Appreciate it.
Positive by the end of the day, yeah, I'll say up. I'll say up.
Lovely. Yeah, we'll see what happens. Of course, the market is what it is, so we'll see if we exceed this expected move of 41 points tomorrow. But I'm thinking maybe we see an upside move in this market with the VIX low and these names that haven't been able to catch a bid recently, finally catching a bid. Maybe it's telling.
Anything can happen.
Yeah, we're out of time. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Stay tuned, though. We got plenty more content coming your way on the Tasty Live YouTube channel, as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward. Today's Thursday. The market's gotten a little bit choppy, but we've gotten some volatility in the morning, so we'll touch on all of that, some of the metals, some other individual underlyings that we'll get into. But before we do that, I hope everybody's doing well. Brother Gus, how are we doing today?
Good. Yeah, portfolio's good. Feeling good.
Good.
Yeah, we got a good lunch waiting for
There we
us
go.
out there.
Fire.
Looking forward to it.
Right.
But yeah, hanging in. We got all types of interesting moves going on today. The defense contractors, in particular, are very interesting.
Okay.
We had some weird contrarian action this morning, and then everything seems to have righted itself by now. But interested to dive into a little bit of that. And excited to get going.
Oh yeah, bro. It's gonna be a good day. It's almost officially we've almost officially completed the first full week of the trading year. So we're about 4 days in. The market hasn't really had any intense down moves. I mean, we haven't seen an uptick in VIX. Nothing too crazy yet. But it's looking like it's not hell the first week of the new year once again. So I think that data is going to stand corrected. We'll see. We haven't really had any type of slides, significant slides yet.
Yeah, no.
For a lot of
nothing.
the past data.
Yeah, we've been cruising so far this year, which is good for me. I'm hoping we can cruise for about another 60 days so that I can rotate out of most of my long delta before anything comes around to bite us. But yeah, it's we're doing well. Accenture is actually the big winner in the portfolio for me today.
We can go ahead and
get a nice pop.
Yeah, we can go ahead and pull up the Tasty Trade platform, look at some of those underlyings as well. What's going on, Greg? What's going on, Jared? Allison, Donald. What's going on, guys?
Hey, good to see you guys. Thank you for the kind words.
Yeah, I'd seen Chipotle in the chat quite a few times too. You know anything going on in Chipotle? Let's take a look at it.
Yeah, I hadn't had a look at Chipotle.
CMG.
Yeah, finally rallying out a little bit there. Protein menu working for them.
Protein menu. Let's go.
Yeah, I was excited to see that protein menu. I feel like that addresses the concern that I have about Chipotle. I was just talking about this off air with Vanetta the other day, but my issue with Chipotle, as I've said many times, is the inconsistency, is the portion sizes. And now they're rolling out this high protein menu, and it's actually all just specifically portioned stuff.
Yeah, what's that protein menu looking like? What's that all about?
Yeah, there's like 5 items on it. They range from I think 28 grams of protein on the low end to 81 on the top end is like the big loaded up bowl or whatever. But what's most interesting to me on that menu actually is they have little grab and go 4-ounce chicken cups, like 4. That's volume ounces, not weight ounces. No, other way. That's weight ounces, not volume ounces. But yeah, they have them on. I believe that I haven't been in to see this in person, but I believe the premise is that they're just going to kind of be sitting there on a heater, similar to like a Starbucks grab and go situation, and you can just grab one.
This is actually being addressed.
Yes, and they're little 32 grams of protein, just grilled chicken cup. You can just grab it, scan it out, and be on your way. And yeah, I think that gives them a nice quick option that people can just pop in and get, and also addresses the inconsistencies in the portion sizes by just establishing some firm consistency. If this item has this much protein. Because that's been my main concern. So it seems like they're working on fixing that.
No, that's
going to be so easy to just give the people a food scale that they slide along while they do your portions. But we're getting there.
That is
in the right direction.
That's completely valid. I will say I did go to Chipotle the other day, and I noticed I'd gotten in a very large amount of protein on my bowl. And I mean, I wasn't complaining about it, but when we checked out, it was more than I had anticipated. Now, and I looked back, I was like, oh, I got double the protein. But it reminded me back to our conversation. I was like, yo, I think this scoop landed in my favor. I was thinking about you while we were going through the line too, and I was like, oh, he thought I said double, so I was fine with it. But I was like, why did I get such a big scoop? Like, I'm down. But
well, yeah, I mean that is the other side.
I thought I benefited.
I like to gamble as much as the next guy. So if you happen to if the roulette ball happens to land on a little bit of extra meat for you, that's a great Chipotle trip. But you just can't be sure of that.
100%. Now, with that being said, VIX is at 1530 right now. Had a little bit more volatility coming to the market, but nothing too crazy. Kind of sitting around the same levels that we closed at from yesterday. Some of these massive pops in VIX that we'd seen last, like November 12th, November 13th, November 14th, a VIX past 25 almost seems very nostalgic at this point. I'm being a little dramatic right now, but it feels a little nostalgic. But it would be nice whenever we do get it, because first week of the year put in, it's inevitable. But when is it going to be? I don't know. We'll be here to talk about it whenever we do get that pop. But that's VIX for us.
Yeah, my VIX. I got long VIX yesterday, as I mentioned on air, and it's kind of a funny position because there's just not much more down for the VIX to go.
Right, exactly.
I just saw somebody, Jared said almost time for short puts on the VIX. I absolutely agree. I've just chosen long calls myself to, prevent. But I mean, how much lower can VIX realistically get? How long has it been since it was, sub 14 or something like that?
And to start the year?
Yeah, to start the year. And today is a green day. And we still actually had a little bit of increase in VIX just because it wants to move up. So the PGA Tour and Chipotle Mexican Grill announced yesterday a new marketing partnership that designates Chipotle as the official Mexican restaurant of the tour. That's a good tidbit. Oh, it's a hill. That's a good tidbit. That's interesting. Good marketing in for them, I guess. I suppose there's a overlap in those clientele. Although I wouldn't. I don't know. I would expect a slightly more affluent Mexican restaurant to or upscale, I suppose is the word that I'm looking for. Expensive is what I mean. Mexican restaurants would be coming in to sponsor the PGA Tour. It's usually higher end companies there, but yeah, Chipotle right there in the middle, fast casual.
Cue everyone saying that Chipotle is not real Mexican food. Tell me why I legitimately said that in my head. I didn't say it out loud.
I concur. I'm in that camp as well. I get it. I'm not going to hate on things that people like, but it's Mexican adjacent. Amerimex is a good way to put it.
Agreed. No, I mean, with that being said, we're sitting in Netflix right now. This position is still yet to come to fruition. I did see a little bit more headlines about, Paramount, Warner Bros., Netflix, that whole fiasco. So it's kind of funny that those conversations still lingering, a lot of thoughts and opinions on it. But our short side is getting tested right now, so we're kind of on the dance floor, if you will. The overall position is down a bit. We got 43 days left till expiration, so we'll be patient on that end when it comes down to Netflix. But Netflix has been getting crushed. They haven't had a great New Year so far on the media side of things. What do you got here?
I'm chuckling at the chat. Anthony, I think you mean a alleged flamethrower in Minecraft. Hypothetical flamethrower that you built, of course. We wouldn't we wouldn't want the ATF seeing things. It's all in Minecraft. Yeah, my big winner today is Accenture ACN. It's getting a nice
ACN.
pop. Actually, haven't looked into why this is moving. I'm just glad that it is. I am deeply long Accenture. I was getting long off the bottom there. I believe early October was my entry, so very, very close to the very bottom.
Good average
And I've just taken 2 different short put verticals at the same expiration, which is usually more aggressive than I would tend to be. But I wanted one that I felt was realistic, and then one that was like a 2-to-1 risk profile, and I felt was speculative. So I have the 230, 240, and then the 260, 270, both of which are well within the money right now with 71 DTE. Still too much meat on the bone for me to start pulling those off. I might pull off the higher one. I'm still flirting with those ideas. And then Firefly Aerospace, which is just fly, having a great day for me as well.
Nice.
This is been printing. We're finally starting to get a little bit of momentum. It was a lot more momentum this morning, as you can see from that candle. But,
pretty large percentage moves, huh?
yeah, so we're legging up a little bit. People are starting to get excited about Firefly Aerospace once again. And then UNH it would be the other UNH.
Oh yeah, UNH.
Logging another green day. Not quite the parabolic upside moves that I was thinking we might get with UNH, but we keep plugging away.
Yeah, I mean, maybe we're just a little bit early to a lot of the fun that's yet to happen on UNH, but it's all faithful. What's going on, Big Deal? How are we doing today?
Allegedly.
No, I mean, with that being said,
Covered calls on earnings for Netflix, waiting for next week. Yeah. I mean, earnings feel like they pale in comparison to this Warner Brothers situation to me.
Yeah.
I have 291 as a short-term goal in ACN. There you go. That's a good tidbit. I would be very happy with 291. I'll take it. I just needed to hold over 270 at this point, so we shouldn't be in too much danger. But I think people probably would have said that before it took the dip that I bought into. So nothing's certain. Nothing's ever certain in this market. That's for sure. And then defense contractors, we also need to acknowledge. Give me some LMT, some RTX. We got Trump has issued an executive order that defense contractors have to suspend dividend payments and share buybacks, and they're also considering putting caps on executive pay at these companies. And instead, they need to focus more on production and meeting deadlines for government contracts. I'm not knowledgeable enough about these government contracts to know whether or not this actually is a prevalent issue. Have defense contractors just been missing deadlines for years and I don't know about it? I'm not sure. But it's causing some big moves, and Raytheon RTX is one that was called out specifically by name on Truth Social this morning by Trump, saying that they should be looked into. So interesting things happening there. Palantir kind of adjacent to this sector, and there's all sorts of little names that you wouldn't even really consider could move on this news, but like Boeing would be in that group, L3 Harris would be in that group. Ingalls? What is it? Huntington Ingalls would be in that group. HII. So there's a lot of contractors moving on this news, and I really wanted to draw attention to it because this is like terribly bearish news. Like you can't, if the executive order is that you can't pay dividends or buy back shares, obviously that is terribly bearish news. And all of these opened up like 6% today. And it was so strange. And everything is corrected in the world now. I've actually been kicking myself all day for not getting short anything off the top. I mean, like Raytheon, especially the tweet at Raytheon came this morning, or whatever, Truth Social, the truth at Raytheon came this morning. And like pre-market, and then it still opens up 6%. And I wasn't bold enough to step in front of that freight train, but I should have been because I think it's given pretty much all of it back.
A lot of it, for the most part,
almost back to unched. Lockheed Martin, Raytheon, Northrop Grumman, kind of at the top of that list. Palantir to follow, and then L3 Harris, Huntington Ingalls, Boeing, kind of round out the bottom subsidiary set that we could see move on this news.
Yeah,
all he can do is threaten the contracts. Yeah, there's no way he gets that through. Technically, these are still private companies. Yes, that's true. I mean, you could. The only way to do it would be to threaten the contracts or pull them when they are up. And I'm not even sure what that entire ecosystem or timelines or any of that looks like. But yeah,
see how the volatility in those pan out. Definitely keep an eye on LMT. I mean, they're extremely volatile. And to your point, it's kind of closing unch now, but I mean, they've reached a high of 542, almost 543 I mean, today alone, that was the highs, and right now we're trading at 518, so it's volatile.
RTX is the freaky one because all this news started breaking yesterday, and it's just, look at this. It's just done the same thing over and over. The news breaks, and it moves higher for some reason. And this was the initial news before they had been called out by name, and then it runs down all day, and then get called out by name as one of the companies that's going to be looked into this morning, and it moves even higher, and then gives it all back again. This is very, very strange market action. I don't know where the bulls are coming from, but yeah, it's been a strange mover throughout the past couple of days.
Yeah, it's looking like it took new highs today and giving back about half its gains. We'll see how that one pans out. I mean, it's almost taking out yesterday's highs and almost trying to take out its lows. We'll see. It's volatile.
For sure. Big deal. Paramount still going with WB. Warner Brothers is making the call, but no decision yet. Polymarket pricing in Netflix increasingly more. It's like 60% Netflix, 25% Paramount at this point. Scattered stuff between Comcast and no sale at the bottom there. But yeah, Netflix is the efficient market is saying that Netflix is becoming the favorite.
That is what it's looking like.
Maybe people think it will be walked back. That's true also, and that is really the biggest thing. And I think people make a very good case for that. I believe the poly market market itself.
What I was going to ask
is what.
That's what I was going to ask. Are you aware of any of the speculation going on in terms of those decisions or it being reversed?
Yeah, well, I believe the market itself, the no sale option is no sale by June 27th, 2027. It's definitely a late June date. I think it's 27th. Is the actual market. But I've seen people make a very compelling case for that, and it would simply be that this gets blocked for antitrust and tied up in the weeds, and it's nothing is final by June of 2027, which I think could be a very real, plausible thing. I mean, because we're talking, that's what, 17 months, 15 or 16 months from right now. So yeah, 16 and a half months from right now, the shareholders haven't even voted yet. Does it take a year for the sale to finalize, even if there's no hurdles? I mean, it's a giant sale. It's going to take all this underwriting and everything else, payouts, all that good stuff. So then you're kind of left with like a 4-month gap where if anything goes wrong that takes 4 to 5 months or longer, this could very well, continue out beyond 2027 and drag a little bit. And with the way antitrust has been clamping down on everything recently, I have a hard time believing that either of these companies are going to be able to get this done without tying a bunch of stuff up in the weeds. And that's part of why Warner Brothers is leaning in favor of the Netflix deal, is because it wouldn't be the entire company. It would just be the IP, more or less. And so they think that might be easier to get through than Paramount, who wants to buy the entire company and absorb it.
On that note, totally forgot about the buckets of popcorn that you reminded me of. Still need to probably.
Oh, yes. And I'm happy you're reminding me right now. Okay. I spread misinformation, guys.
Wait, what?
January 18th and 19th are the dates.
Okay, there we go.
Yes.
It is happening,
good,
though.
But yes.
That's when we're getting pranked, guys.
Yeah. I was under the impression that it was running for like a week. I discovered as I was leaving work yesterday that it is, in fact, January 18th and 19th. But yes, bring your own bucket, Cinemark, January 18th and 19th. 3 gallon maximum. 5 gallon maximum if you get a Lowe's bucket specifically.
I'm looking forward to it. That's right around the corner too.
How Disney can own what they want to with no antitrust issues as well to me. Yeah, I think that's a great observation as well, Jared. And it's like antitrust, they've just started to lock in a little bit in the last 5 years, for lack of a better term. I don't understand because I understand Warner Brothers is a giant company with a lot of IP, but we're talking streaming here, which is like one of the most competitive, oversaturated sectors that there is, streaming. I mean, there are so many things. I mean, I challenge you to find me somebody who's not upset with the number of streaming services that there are for everything under the sun, for movies, for TV.
I like having a lot of options. I'm just kidding.
Yeah, so I just don't see how if we, go from 12 streaming platforms down to 11 and the fourth biggest one absorbs the 10th biggest one or whatever. These are arbitrary numbers. I don't see how that's going to be some massive antitrust concern, but I would be shocked to see that it's not. I see this as no different than Disney buying Pixar whenever that happened. I mean, that was 10, 15 years ago now? I guess longer than that now. Old.
Getting up there, brother.
Yeah.
Getting up there. With that being said, we can we did a little bit in the micro NASDAQ today. We can jump over to the to the TradingView platform, check out what's been going on in these markets too, touch on some of the metals, touch on some of the crypto as well. Paramount would be CBS, CNN, etc. Disney only has ABC. Who wins in the long run though? Who do you think is going to have the most influence and most impact in the media space? You think Disney? You think Netflix? Maybe there's some competitors that we haven't even seen yet that's going to hop into the space and have some type of competitive advantage. I don't know, but it's seeming that Netflix and Disney are starting to really consolidate a lot of the powers.
Yeah, I mean, Disney is obviously ABC, ESPN.
Yeah.
And then Paramount, as mentioned, CBS, CNN. There's scattered other properties under that umbrella. And then the other big one would be, NBC Peacock, which is Comcast. Somebody correct me if I'm wrong. I'm not entirely certain how that ownership breaks
Everything's
down.
getting consolidated. You gotta recheck every 6 months. To see who's under who's under
there are things getting bought up like that for sure. But I really don't know. I don't know if it's going to be possible for one party to come to dominate this space just because of how competitive everything is. I mean, like the analogy I always draw is just look how chopped up just the NFL is this year. I mean, you got to have 8 different streaming services if you want to watch every single NFL game. People do breakdowns all the time of how it would cost you $800 and some odd dollars if you wanted to watch every single NFL game this season. And the reason that happens, and that this is a microcosm of what happens in the broader space, is because it's just everybody swooping in to be the highest bidder for something slightly different, and Netflix is the highest bidder for the Christmas Day games, and Amazon, holy cow, they have their own thing. Amazon Prime is the highest bidder for Thursday Night Football, and so it all gets broken up like this. And so I think that the space will stay very competitive, really. But you would think that much competition would make it a better experience for the consumer, but it's in fact the opposite because they all just continue to raise their prices. Nobody and they don't have the same goods either.
Right.
Nobody can undercut each other because nobody has access to the same stuff.
That's true.
So
a lot of the rights and ownerships of them.
Yeah.
We got a comment about for you. Hello, Happy New Year's. Was wondering, did Gus implement a strategy, i.e., eat at Wingstop lately? Is there a trade there somewhere? Let us know, Gus.
I have not eaten at Wingstop. I have not implemented a strategy as of late. But I may soon. I've been dealing with some stomach problems that have prevented me from eating spicy foods.
Too much Wingstop.
I don't know. Yeah, I don't know. I don't know if it was too much Wingstop, but So I've kind of been reeling since Christmas Eve. Really been dealing with some stuff. So I've been on the injured reserve as far as implementing a strategy and ordering some Wingstop, but I do miss it. I'm looking forward to getting back on the Wingstop grind as soon as I'm feeling well enough to do so.
Absolutely. Well,
piracy is almost always a service problem and not a pricing problem. That is incredibly well put. I won't speak to alleged piracy that may or may not take place in my life from time to time. But
what's that word? Don't know.
In Minecraft.
Yo, it reminds me of my boy Diego in college. Like any game, any event, whatever you wanted to watch, bro. Trust we had it on lock.
It's
whatever you wanted.
It's highly possible that there are a lot of sources out there, allegedly.
Allegedly, yeah. ALLEDGLEY. Somebody said it in the chat earlier. Allegedly.
You don't have to worry about streaming services. They're out when you sail the seas.
We took a couple trades today in the micro NASDAQ. The first trade that we were looking at taking was an initial long. We got stopped out of this one for, the first entry was what, 25,689. Second entry, 25,679. So average entry was about 25,684. Meet right in the middle there. Stopped out for about 20 points there. Whenever we made a new low, we had stopped out. And, just getting into today, just getting stopped out off the first trade too. I was like, oh, there we go. It was like consecutive losses back to back to back into the first week of the new year. So got stopped out of that one. I was like, we'll be patient. We'll take our foot off the gas again. Really just watching out for that level of frustration, especially coming into the new year. But was able to be patient. And to be honest, we kind of bottom ticked this one. So we were able to recover a little bit from this trade and the one from yesterday and the one from the day before that a little bit. We were patient on this one, and then we snagged 100 points. This one was getting long off the value area low. For a little bit more context, scaled out one contract into the first rip just in case we reversed back to the lows, and then took it off over here at these highs. So those are the two trades we took today. But the loss right off the bat, it's never comfy mentally. But we did get some volatility, a little bit of opportunity, but that's what we did for the day. And just a key focus on the risk, I would say, for the day.
Yeah, similar break to yesterday, right out of open there for you. But
yeah, I was just
happy you got it turned around.
Yeah, I was like, I'm probably not going to trade anymore for the day.
Good to right the ship.
Yeah, so that's what we were looking at.
Nice. Yeah, I feel like with every passing month, I pay less and less attention to like the actual broader market.
Yeah.
We're exactly unched right now on S&Ps today.
Yeah, kind of. I mean, we've been volatile. We ripped what? Let's see, out of the gate this morning, 25,787 all the way down to the lows, like over 150 points, over 100 points, and then kind of just trading within this range. We haven't been able to take out the day's low or the day's high, so we're kind of stuck inside of here. And if we take this volume profile, this will give us a little bit more perspective.
Two good questions for you in the chat here as well.
Yeah, definitely. Let me pull this over here. There we go. There we go. I've been trying out naked. Oh, drop the Discord. If we could drop the Discord.
That's not what he's talking about.
Oh.
We do have a Tasty Live Discord for anybody that would like to participate, which you guys are absolutely more than welcome to, but he was talking about something else.
Oh, what's that? The dead Discord? Wait, what is the flag? I'm trying to...
This guy.
Should I skip it? Should I skip it?
Yes.
I've been trying out naked puts on MES and MNQ, and I chickened out close today. Since they're starting to go red, I think I'll create a lower P&L target for these positions. What percent do you target? Not so much a percent. It's I like to take the perspective of targeting the points. So sometimes it's kind of nice to recognize targeting, or maybe you're risking 5 points or 10 points, and then maybe you're looking to capture 20 to 30 points. So more so from a risk reward perspective rather than percentage is what has been helpful, at least.
So like it's like a ratio?
Yeah, just a ratio. Yeah, just a risk to reward ratio. Sure. It's like, okay, so like for example, if we break this down even further, let's take this off the screen a little bit. We'll zoom in here. So, and this is how the math will help after you take, 20 trades, 30 trades, 40 trades, 50 trades. Because as we know, losses are inevitable, but, we took about 20 points of risk on this trade, right? So just stopping out of a trade whenever the trade thesis is invalidated. So if we make a new low, that lets me know, okay, I'm wrong. I'm completely wrong on this trade. And because it is only taking me 20 points to test that idea, that's why I think that's an attractive opportunity. So it's like, yeah, the long is there, but because of the risk that it's showing is kind of what makes it more attractive. And then down here, we were able to have a little bit lower risk. We were risking around 5 to 10 points. It ended up being the bottom of the move here. But when we look at the ratio here, just because we understood that this was the bottom of the range at the same time, and that the top of the range was somewhere around here, around 25,682, we know there's a chance that we could get at least 1 to 2, 1 to 3 of what we initially risk on to the day. So we weren't expecting to get 100 points out of the move. We were just expecting that we would get more than 20, at least 40 points, and that ended up turning into a bigger trade. But it was just more so from focusing on the risk.
Makes sense.
I think that's a good perspective.
Have you ever done covered calls?
Covered calls, yeah. I mean, the poor man's covered calls, some of the synthetic. I'll do a lot of the zebras. I like to do the zebras. The 100 shares is that's a pretty big trade. That's a pretty expensive trade. So I haven't been able to do those in any large underlines, but the poor man's covered calls is pretty fire. I like to do the strategy, sell some calls against it too.
Sure.
Dude, Arrow Lives and breeds NQ and MQ options chain.
Half the liquidity is from him. Yeah. Yes. Base, there is a Tasty Live Discord. Base 8. Oh, I get it. It's a math joke. Yes. Yes. Yes, Base 8. There is a Tasty Live Discord. We can drop a link for you in the chat here, or if you'd prefer a quicker route, it's you can go to the Tasty Live subreddit, and there's a message pinned at the top with a link to join the Discord.
There you go. Pirate flag. No, we'll see what other opportunities we get for the day. It's super choppy. Other than that, I don't know. It's been a week where the market has really tested your patience and has really tested your level of frustration. You know what I mean? So I think we started this year, came into this year, I think 4 or 5, maybe 6 consecutive red trades. And then, 1 or 2 trades can really clean a lot of those losses up if you really manage them very small. But managing the frustration this week has been difficult, and we'll see how the market wants to digest, going into Friday. But other than that, silver's been pretty volatile too. The metals have been pretty volatile. Silver and gold has been pulling back a little bit more. I haven't checked them in the last few hours. I think platinum too is another one that was going crazy. We touched on copper the other day too.
Copper's been moving as well. Yeah,
it's been moving.
Copper kind of was late to the party after the big drawdown, but has been moving alongside the other metals.
I gotcha. I don't know. Maybe the momentum is slowing down a little bit here on silver. What are you guys thinking? What are you guys doing in gold and silver and any of these metals? Or are you guys kind of just sitting on the sidelines right now? I know we've gotten the first maybe real pullback or first signs of weakness in some of these metals. When we zoom out from a higher time frame perspective, though, it's looking like we haven't really gone anywhere. We're still trading, near the highs relative to kind of where we started even just 3-6 months ago,
Yeah, it's about time these things breathed for longer than a single day.
Right.
So, you can't. I mean, you can't take the rocket ship up forever. You can do it for 3 months apparently, but can't do it forever.
Yeah, definitely a very difficult trade. Like to Gus's point, it was like one day we might get the pullback and then the next day we're up another however many points. It's like it gave you such a short time window to make your mind up in terms of, what you wanted to do and how you wanted to position yourself.
I know we're pretty much at our time here.
Oh, there we go. My fault. There we go. Zebra mentioned. I still remember that trade, Earl. Give me some more winners. Zebra's fire. Shout out to Liz and Jenny. You want to get some synthetic delta on a stock around 100 delta, shout out to the Zebra. That's a great trade.
Absolutely. I ended up exiting metals for a green scratch this morning. Looking to move on from there.
There you go.
Good looks. And yeah, good. You're having a good week. Trade them small, trade them often. If anybody's ever been considering switching to the Tasty Trade platform, we got the greatest deal ever going on right now.
What is that?
A big deal. 4% cash match up to $10,000. First 30 days of trading commission free.
But wait, there's more. What's the best part?
That is the best part.
Commission free.
Oh yeah, I gave it to you already. You can't be asking for that much more. But yeah, you can scan the QR code here if you've been thinking of making the pivot from Thinkorswim or any other brokerage. Now is the time to do it. It is a big deal. So get involved. We named it after you, Big Deal Donuts.
Big deal. Let's go. 4% cash back. Silver margin requirements price me out. Might get into 1 ounce silver. Yeah, no, definitely pay attention to the micros too. I know that's a pretty large contract and get pretty hot in the kitchen pretty quickly, but the micros has helped. Also, gold, sometimes they're kind of moving as like a sympathy play alongside each other. Silver's been leading, so gold is a smaller product if you want to get a little bit more exposure to those metals. With that being said, that's gonna be it for today's stream. That's else top of your mind?
No, that's all I got.
Cool. Big deal. Jared, Kimberly, Sahil, everybody else, thanks for taking the time to hang out with us today. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar. Não vejo a hora de te encontrar. Minuto longe de você, eu já não sei esperar. Madrugada chegou, não quero mais acordar. Madrugada chegou. Deixa eu te ligar, me faz apaixonar. Não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar. Não vejo a hora de te encontrar. Minuto longe de você, eu já não sei esperar. Madrugada chegou. Madrugada chegou. Madrugada, madrugada, madrugada chegou. Madrugada, madrugada, madrugada chegou. Não quero mais, não quero mais, não quero mais. Não quero mais acordar, não quero mais. Não quero mais. Madrugada chegou. Madrugada chegou. Madrugada. Não quero mais, não quero mais, não quero mais.
We're back. It's still Thursday, January 8th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, not such a great day in equity markets so far, depending upon where you look, but that's a different story. How's your Thursday going?
It's going, it's pretty mild here. It's like 55 degrees, but didn't get much sleep overnight. My dog had like some stomach issue, and she ended up, well, I'll spare you the details, but it was pretty bad. She's okay now.
Yeah, problems with the pets. That's always alarming. A few years ago, my dad, we were out at the family Hampton's house, and so my dad left vitamins out on the counter, which my cat got into. And at like 2:00 in the morning, she was running around the house, foaming at the mouth, vomiting everywhere, just like spinning in circles. It was crazy. And then they had to go get a stomach pumped at 3 a.m., which was a delight. So don't leave your iron pills on the countertops if you have pets. There's a lesson there, I suppose.
Yeah, that doesn't sound good.
Well, hopefully your dog's doing all right, Thomas. I don't have a dog. We were a family that was always asked the question, who's taking it out at 5:00 in the morning during the snow? And no one raised their hand, so we never got a dog.
Fenced in yard, just kick them outside.
We could. Coyotes, it's the woods. I digress. Thomas, it's a day where the markets tried to make a move higher. Yesterday, of course, we saw during the show, there was that vol rise. You noted the kind of a kink in the vol curve, the backwardation intraday. And sure enough, as we made our way through the rest of the session, that bump in volatility was a precursor to ultimately stocks sagging into the close. So yesterday, the question, Thomas, was breakouts or fakeouts? Fakeouts so far, we could say, for the NASDAQ and the S&P 500. Although the mirror image of yesterday's price action, we've seen vol futures come back in. We'll check on that in a moment. However, there was a big set of data that was released over the past 2 days. We've seen the ISM numbers. We've had jobless claims jolts, trade figures. So we have a new update to our growth trackers here. And what an update it is. 5.4% for fourth quarter GDP, annualized, real terms. Now, as we saw for third quarter GDP, Thomas, it was sitting north of 4%. In real terms, the nominal figure was closer to 8, which is to say that inflation, as measured by the government in third quarter GDP, was still tracking north of 4%. The way that you get your real GDP number is nominal less inflation. So 5.4% in real terms is fantastic, but it does probably mean that we're running a pretty hot economy right now. Nominally, we could be looking at something like 9% growth. Again, the New York Fed nowcast has not updated this week thus far, so I do want to explain that discrepancy. There might be a bump higher here when the update is released on its typical weekly cadence tomorrow. But right now, Thomas, the data, as we've seen the past few days, it has not catered to an expansion in Fed cut odds. We're still sitting at 11% and change. The market is convinced that the Fed will do nothing come January, and it might take something terrible tomorrow with a really bad non-farm payrolls report for the market to rethink what may transpire come January 28th.
Yeah, I mean, it's a little surprising to not see Fed cut odds going down a little more when you have GDP trackers showing over 5%. If indeed that turns out to be true, I mean, that the economy is running hotter than people have expected. I think that's becoming more evident as we go on. Productivity in the labor market is helping a lot in this economy where you're not really firing, but you're not hiring. It's kind of a weird spot we're in.
It's a very weird spot we're in right now in the economy. There's a hiring freeze. There is a firing freeze. There's jobless growth, basically, right? This is the kind of GDP report that's going to throw economists for a loop. Because if the unemployment rate is inching up and you're getting 5% plus growth, is that because of a one-off like government spending? Sure enough, President Trump yesterday announced that he's seeking not a $1 trillion defense budget, but a $1.5 trillion defense budget. One of our longstanding ideas here, pillars of our directional philosophy on markets, Thomas, has been that the government is running it hot, that the deficits are increasing, that we're running deficits akin to what we were doing during COVID, which in and of themselves were wartime-like deficits that had not been achieved since World War II. We did more than we did during the global financial crisis, and seemingly that's what we're doing right now. All the while, the impulse for Fed funds is to move lower. Our Mundell-Fleming interpretation of that would be looser monetary policy, looser fiscal policy, asset inflation. So we're getting 5% growth, and they're still talking about rate cuts, and they're talking about even bigger government deficits. Okay, that's the game we want to play here. We can play that game. Stocks today are moving sideways. They are off the lows, and I mentioned they're off the lows with a little bit of a tick lower in volatility futures. Let's see if that still holds, and indeed it does. So vol futures yesterday on the show, Thomas, they were ticking up even when stocks were sitting near their highs. The S&P was close to 7K when we were speaking. It started slouching back during the course of the show, and sure enough, it closed lower, closer to 69.50 during the day. Today, we're seeing a little bit of a retracement of that vol. The F26 contract is off by about 12 cents. The G26 contract off by about 14 cents. We can take a look at the VIX, which while higher, it gapped open higher and has pulled back somewhat during the course of the day, although it is off the lows for what it's worth. So vol right now is not exactly screaming at you that there are meaningful problems in the market. But with that vol turning lower and that really strong economic data, the small caps are the ones that are taking the baton and running today, because those are the ones, of course, that are the most economically sensitive to a growing economy. Russell here ticked into its high that we had from 2025 up at 2625 today. The high for today's session is 2624.3. So is this a double top? Who knows? We can't say that just yet. Is this a bull flag that's been forming here? Pretty equidistant range, maybe 125 points or so, gives us a target near 2750. Either way, though, Thomas, the performance of the small caps, the breadth getting better once again, not something that you dislike, even if the S&P and the NASDAQ are not making hay thus far of what appear to be promising technical setups.
Yeah, I mean, defense stocks are doing a lot of work today. It's kind of, they flip-flopped because we had Trump saying no buybacks, no dividends. And then shortly after saying, a 1.5 trillion, which brings us more in line with 4% of GDP compared to 3 to 3.4, whatever we've been running for quite a while. Actually, I mean, it's not too crazy when you think of it, because as a percent of GDP, a lot of countries do spend more than us. So, this administration has put out ideas like the Golden Dome, the new warships, things like that. Those are really, really expensive projects. You wouldn't be able to fund them with just as it is, $1 trillion defense budget. So it looks like they're trying to get funding for some of those ideas.
They're going to try. We'll see what the appetite of Congress is. Although the Trump administration getting oil down towards $50 and then a big surge in government spending over the course of this year, heading into midterms, that may help change some of the narrative that's going on. Certainly the Russell here, still with very meager volatility. It's been mostly flat this year so far. IVR sitting around 12.6, Thomas. I know that this isn't necessarily something that we've liked because of the decline in Fed cut odds, but the start to 2026 has been quite remarkable for the small caps here. And I think that is a good place to start in terms of this breadth widening out, because I turn my attention back to something like RSP, the equal weighted S&P. While the market cap, the futures, down by 0.05%, here you have RSP up 0.95%. And we were just a stone throws away from another new all-time closing high in your equal weighted S&P 500. QQEW, it's, here's the rotation story. It's out of tech and into more domestic sensitive stuff. We do see here that the equal weighted NASDAQ is not quite breaking out yet. And that brings us back to the big guy, which we've been watching this triangle, Thomas. It appeared yesterday we were making our breakout attempt. It instead ended the day with a doji. Now we're back in the triangle, and this is looking awfully topish here, evening star candlestick cluster-like. If we've returned into the consolidation, it does necessarily suggest, as my typical rule of thumb here, my heuristic for when you return into consolidations, you test the other side. That could mean a pullback towards 25,500 or so. We can't dismiss that right now. So it's a mixed bag, right? Fake out yesterday so far, but there are enough puzzle pieces sitting around where you still feel pretty good if you're a bull.
Yeah, I still feel fairly comfortable. I'm in that long call spread I talked about yesterday, the day before. ES, 6 days out, 7,000, 7,005. Just have it on for a directional bet for what I thought would be a nice move up today, tomorrow. But I think there's still some time in here for it. I'll take it off Friday afternoon if it does nothing and try my luck again next week. Other than that, still in some individual names to the long side. I think it's a decent place to get long. I mean, the technicals, it looks like we could still have a breakout today. It's far from capitulation, but it's not what you want to see if you're already long.
No, it's not what you want to see if you're already long. It's not the most encouraging bit of action, but we see consolidations. They can consolidate further and further. And maybe this is the wrong interpretation, Thomas, because triangles, you typically break out before you reach your termination point, roughly 2/3, 75% of the way through. And we were starting to get through that window here in recent sessions. So maybe it's not a triangle here. For the S&P 500, different story. Of course, yesterday we did top tick 7,000 for a brief bit there. Today, as we pull back in, that nice long lower wick up against that 1 week moving average, showing that momentum right now is still intact. All three moving averages, the 5, 21, and 50, the 1 week, 1 month, and then the psychologically significant 50, those still all retain their positive rates of change, upward slopes. And with that vol contraction here in the futures curve, right? Whatever bit of vol buying we saw yesterday is coming off the board a little bit today. It's a different setup, right? If vol futures were sitting at their session highs and we were looking at the NASDAQ down 0.7% and the S&P off here, I'd be looking for a little bit of a heavier close. But I'm feeling, we keep going. Why not keep going? The breadth, though, Mr. Westwater, we look at the sector performance here, as often we do, 25 sector ETFs here on Futures Power Hour on our watch list. 7 of the 25 are red, 18 of the 25 are green. it's mostly tech that's lower for what it's worth. You could go over to XLK, for example. You could head over to SMH. You could go over to Telecom, XTL. You're going to see a bit of weakness in some names that in just the past few days have ticked up to fresh all-time highs. The more local, domestic economy related stocks pertaining to consumption, like a retail XRT, now up at a new all-time high, something we talked about earlier this week, or even an XLF or a KRE, the banks, the consumer-facing items, those are still intact. So as bad as the NASDAQ looks today, it does earnestly feel like a rotation out of, the favorites into some of the lovable losers that have not performed as well as people have hoped.
Yeah, it brings us to the question of like, what is holding us back? If the economy outlook is brightening up, if rates are expected to come down, what are we waiting for? Or is this rotation out of tech or hesitancy to get really bold up on tech? Is this like, a change that is going to last in contrast from last year? I don't know. The one thing, the one tech AI play, I guess, that I'm still pretty bullish on, and I think the chart looks pretty good, is Google. I think I have to get some exposure here. And, Meta, it's not looking good. If you're a dip buyer, I guess it is what it is. But, yeah, Google, it's challenging the high back from November.
I have some Google exposure here going on. Earlier today when we started trading lower, I was able to stake into a position. I think it got filled. It did get filled. The 340, 350 call spread at 29 DTE. This thing looks like it's getting ready to pop. And if the NASDAQ is going to break out, if the S&P 500 is going to break out, I have a feeling that the winner here, Google, given the prevailing narrative at the moment, that's probably going to be one of the leaders to the upside, less so than like a Microsoft or something of that NVIDIA OpenAI flywheel. It's probably going to be on the Avgo, the Broadcom Google side of the equation, which, just for kind of taking a look at this, why am I paying more attention to Google than Broadcom? Well, Broadcom's chart looks like this, Thomas. It has negative slopes in each of the three moving averages I have on the screen. It looks like it's trying to figure out whether or not it wants to carve out a top or fill the gap down here from early September. Google does not have such problems. Google filled its gap. It's now moving up. So we had that actually happen today. We did a gap fill during today's session as well. We closed yesterday at 322.43. We hit a low of 321.99 and started to bounce over the course of the session. I still like the stock market. I know that it's not really exciting here, and we've had a false effort to move to the upside, but the stars are still aligning enough in a meaningful fashion where the preponderance of evidence is on the side of the bulls until proven wrong.
Yeah, Google, I could definitely see it probably, as of right now, being the best performer this year in the Mag 7.
Yes. Well, what's going to happen with Tesla to me is the big question because of everything going on with XAI and Grok and SpaceX, right? Is Musk going to roll these all up into one company? Easier to get to that $8 trillion market cap on Tesla if you have XAI and X folded into the brand as well. And doesn't Grok have a place in Tesla's world? Like, you can go into your Tesla today and Grok's in your car. So I wouldn't be surprised if we hear that coming down the pipeline at some point this year. Tesla itself, we talk about Mag 7 names, Thomas, uptrend off the lows from last April, still very much intact.
Yeah, I don't mind getting long Tesla here. Low IVR. I don't know, I might put on a call spread 43 days out right now. That looks pretty good.
Yeah, I mean, if we're even a put spread here, Tom, still pays you. If this uptrend is going to hold, we probably shouldn't be looking at prices below 415 or so on a closing basis, right? If we're below 415 by the end of this week, it means we've lost this uptrend. It's been a really sturdy uptrend. 1, 2, 3, 4, 5 separate touches. This is not just me connecting two lines. I would actually, this is not a bad look. You could go $10 wide. I'm going to go $15 wide, see if I can get filled on something here. It's better than a 2-to-1 at a 61% probability of profit at 43 DTE. Selling a put spread in Tesla. I'll take you there. So a little Google exposure, a little Tesla exposure, a little S&P 500 exposure, Thomas. I think we just have to trust the charts. And I know the seasonality for the month of January is not the hottest on the other side of a failed Santa Claus rally window. Historically, when we have failed and we end up on the naughty list, great term that I saw on that LPL financial blog. If we end up on the naughty list, January has averaged a 0.1% loss. Obviously not great, but there's a lot of confounding seasonality out there depending upon where you want to look. Do you want to move over to the bond market, or do we have any other thoughts here on stocks? Volatility in a little bit, breakouts not happening, breadth better, particularly for the non-tech portions of this market.
Yeah, I'm just the only thing I think I might try to fade this defense sector move just a little bit. I don't know. I think there's the appetite in Congress for 1.5 trillion. I don't think it's going to get up there. I could see like 1.2, 1.3, but I don't know. This might be overdone. We're already selling off intraday, so I might try to play.
Probably overdone. I mean, yeah, probably overdone. Thinking about the mechanism of this today, a majority of senators passed a war powers resolution to check the Trump administration from further military action in Venezuela. Now, I don't know if that's going to pass because that was just a discharge petition to bring the actual war powers resolution to the floor. And then if it does pass, does it get through with 60 votes? When it goes to the House, is it going to pass there? Like, there's so many other layers to this. Would it pass through a veto-proof majority? Right? Trump could all sorts of different things here for anything pertaining to Venezuela, not just the war powers resolution, but anything. That said, if you're having people line up to curtail the Trump administration's efforts to have a more significant military footprint in Venezuela, one might surmise that those same senators would not also be willing to provide the money that would be required in order to build up that military and maintain those boots on the ground. So color me skeptical if we're actually going to see a $1.5 trillion defense budget passed this coming cycle. That seems like anchoring, right? Shooting high, he'll settle at 1.2. People will cave in, and then it's like, well, we got $200 billion more than we had the last time around. So look, 20% increase, still a win.
Venezuela and boots on the ground. Not something I thought we would be talking about just a year ago.
No, he was talking about that on the campaign trail all the time last year. Don't you remember?
Yeah, I didn't think it was going to actually happen. It's one of those things. A lot of things were said.
Same question as yesterday in the bond market, Thomas. Are bonds flagging? Are they bottoming here? If you're someone who likes being kicked around in a barrel, ZB is the trade for you if you want to be directional, because it's been an absolute nightmare, as we say, for a fourth consecutive day here at the start of this new year, Thomas. We can't really do anything directional because, fortunately, we can't get a move back above 116. I mean, I'm still leaning short for what it's worth. I have my long put spread that's basically at max loss. So if this thing falls apart in the next few days, I suppose I can salvage it. But in terms of flipping, we have yet to really make a concerted, move through this neckline around 116. 116 to me is such a clear line in the sand. The price action substantiates that meaningfully, dare I say, in recent months. Likewise, the 50-day moving average today comes in just short of 116 at 115 and 29 ticks. It's a level that since the start of December, we have not been able to hurdle in any sort of form or fashion. So you know what? If we get above the 50-day, if we get above this neckline, you can make the case that longs look a little bit more viable. Otherwise, if this is a head and shoulders and this is a consolidation underneath the neckline, I think just the pure technical play, Thomas, is you have to treat this as a continuation effort lower. So I remiss to say it's something I'm going to stick with. If this was not at max loss, I might not be doing it. I might be looking for a little bit more confirmation, like a dip below 114.5.
Yeah, I mean, I'm staying out of ZB. I got out. I had a bad trade. I think that was my second bad trade in a row for ZB. I kind of like long Xeon here. I'm hesitant because I haven't done well on the bonds a couple months now. After having a pretty decent, most of 2025 on the bonds, ending the year on a sour note. I kind of see a triangle on the 4-hour and ZN, and that's coming after a downtrend. But we're at support there, and I don't know. I think along here, the short put spread around 112.5 would be my way to do it, probably. 43 days out. I think 112. I think that's what I'm going to do. A short put spread, 43 days out, 112, 111.5.
In notes, it's not going to show up properly on my screen because I have other trades there. Thomas, if we want to treat this as a low, you're basically doing 3-to-1, 2-to-1, right? At the 111.5, it's a 3-to-1 trade. If 112 holds, that's the line in the sand here for notes. It's a 17 IVR, so volatility did tick up to start the year, but it really hasn't gone anywhere since then. The move index, the Bank of America ICE move index, that's currently sitting at 66, which I suppose doesn't provide much context, except for the fact that the volatility index for bonds has been more than cut in half from its highs that we saw at the end of April last year. The move index was at 140 briefly last year. So bond vol is just ever so slightly coming off of multi-year lows. This was the lowest the move index had been since late 2021.
Yeah, I mean, ever since April, this thing, Liberation Day, it's just been pretty clear trend lower. Like you said, multi-year low. We're coming off the lowest since September 2021, it looks like. There's not much there in the move, but the move, it measures it's kind of like a VIX style, right?
Yes, it doesn't look at it looks at the options across the futures curve. So when this is one of the reasons why, given everything going at the long end of the curve, for example, right now, it's a little difficult to move doesn't fully capture it, right?
Yeah.
So you have ZT, you have ZFs, you have ZN, you have ZB options. You head over to UB, there are no listed options, so that when you go out to the very long end of the curve, whatever volatility you're seeing in there is not necessarily reflected in the move index. But Thomas, to that point, right, UB has an IVR of 6.9, ZT has an IVR of 26.6. All things considered, if we were to actually incorporate some of the longer end, the ultras into our volatility calculation, the move index might even be more depressed from where it is right now. So it's not like you'd be adding a more volatile component into the stew there. So vol is just super duper low. I do want to just entertain one thing because it is part of our longer term considerations here in ZB. If we take a look at the charts going all the way back to COVID, we have long held that there could be a more significant bottoming process going on here, which is why I am so interested in keeping an eye on whatever potential long exposure there may be. We've sliced this up a number of ways here. However you do it, though, it's difficult to make the case that this is really getting that acceleration right now. Even going to this weekly chart here off the most recent swing highs in October, we're just clearly not outside of that zone yet. Maybe this is the breakout, but we did have a breakout then of a multi-year trend line only to be met by a head and shoulders that started flagging. Not great confidence in that longer term bottoming call. We don't have any exposure there at the present time because the charts haven't indicated that it's go time yet. But that would be a serious, this bear flag breaks, Thomas, in bonds, it would be a serious problem, I think. And you necessarily start to think, like, what does 110 look like in ZB? Is it because we're doing gigantic military deficits or Defense Department budgets and spending $100,000 per person to entice Greenlanders to allow the sale of their country to the United States? That was a headline today. Where's that money going to come from, Thomas? Probably issuing more debt. So I don't want to say these are real factors of the bond market right now, but keep them in mind.
So more military debt, you're seeing that being inflationary and pushing yields higher on the long end of the curve?
If we are substantially, I mean, if in any case, right, regardless of where the money's being spent, but if the government comes out and says we're going to spend incrementally an additional $500 billion this year in just deficits alone, that's government spending has a positive coefficient in our GDP equation. So you would have to factor in higher growth for the economy. It may not necessarily be inflationary, because I don't know what building bombs does for productivity and as a fiscal multiplier. Pretty sure that doesn't have a high fiscal multiplier. As many jobs as it does provide. I have friends that are machinists in Massachusetts that work for a Raytheon factory. So I know that it provides jobs, but it's not like, infrastructure, which is like for every dollar spent on infrastructure, you get $6 of economic activity out of, or 5, whatever it is now. So it's a different type of spending. But either way, $500 billion additional in government spending should have a positive effect on growth, and growth expectations are ultimately reflected in the long end of the curve. So lower prices, higher yields.
Yeah, makes sense. I think we got to see more political development about how this defense spending stuff is going to go. It started with just the truth, and there's a process to follow.
Yes. Metal shake off the rebalance today. We've flagged this in recent sessions that there might be a gold-silver rebalance hitting some of the tape, thanks to research notes from the banks that run these commodity tracking indexes. Silver and gold, because of their dramatic price expansion last year, were far too big of the components in these respective baskets. So as we shared yesterday, there was a 10%, at least a 10% rebalancing potentially coming down the pipeline in silver. 10% of all open interest in silver needed to be checked and moved along. To that point, silver, which was up near 82 a few sessions ago, dare I say 2 days ago, dropped below 74 today ever so briefly. It has since started to stabilize, and it's stabilizing right where you may want to see that happen, Thomas. Got a little swing high here on January 2nd. We break through, become support on January 5th. Silver's holding up. So perhaps we've moved through the digestion window for this rebalancing effect. Either way, though, with the dollar starting to bounce back, and this to me is the most interesting part of the story now, if yields ultimately break higher here, Thomas, and the dollar is bouncing back, that historically has been a headwind for precious metals and not one that we can ignore. I'm not ready to call the end of this rally yet, even though we know from data shared prior to Christmas, when silver's rolling quarterly returns exceed 40% historically, that has marked the beginning of a consolidation and or end of the rally over a multi-month window. Now, this time may be different, and we're not going to dismiss that, and that's part of the reason why we've stayed long. At least I've stayed long, Thomas. But double top here, only valid below 70. Otherwise, potentially a bull flag. If this is a lot like what happened last summer in gold or even in the fall in silver, the people who are going to be rewarded are those who either stay long over a significant duration of time or are simply being directionally neutral to sell vol. So at 75, which is effectively the midpoint of this trading range, this might be a good place for directionally neutral trading in silver if you already are playing on the long side right now, just to hedge off a little bit of that directional risk.
Double top in silver, double bottom in the gold silver ratio. Silver is getting more like it looks choppy. I mean, we've been getting days where it's just up 8%, down 8%. I'm still long it. I think I'll stay long for now. I kind of like the gold long a little more if you're going to be long either. And I'm also long gold with the call spread. I'm going to stay in there too, but it's kind of like precious metals are a little less interesting to me as the days go by, as we get into more of this chop.
Mm-hmm. It's interesting. If we were to kind of do something like typical Tasty here, we look at the recent highs above 82.5 and the lows around 70. I'll actually blow this out a little bit more. Let's go 83. Okay, so we're going about 50 cents wide here. the short iron condor trade, saying that the trading range that we've carved out since the day before, well, we'll call it December 23rd, right? So 70 to 82.5, 83, risking 2 to make 3 kind of situation. It's only a 30% probability of profit. But that's why we look at the vol here and say, like, okay, if this range is going to hold, Thomas, what does that mean for what would go into that? Why would silver stall here? Is it because of the end of this deglobalization trend? No. Because of capital flows in the short term, people rebalancing their books.
CME is raising margin. They don't want us to make money.
I don't want to say that per se, but
I'm just kidding.
I will entertain. No, I know that, but I will entertain the idea here that if we have these runs higher into 78, 80, 82, and you get these, we've had margin hikes on the other side of 78 twice already, right? It gives you a little bit more, it would give you more confidence that this range is going to hold in the short term. You have buyers coming in, reestablishing their positions with a little bit less leverage. They're not getting squeezed out terribly, but also it's difficult to make a topside break. I'm still leaning along silver. I'm entertaining all the options here. I think this may be something I get myself into. It's still 47 DTE. I like to see a dollar higher bounce in price so that we get a little bit closer to the midpoint of the trading range. Maybe perfect will be the enemy of good here. Either way, though, gold, you mentioned gold looking a little bit better. You have to like the fact that we do bounce off of that 1 week moving average today here. And these are the former highs that we had in October. We're now 3 consecutive sessions in a row. The market's been willing to say, no, we'll buy the dip. We'd like to keep you above 44.25 or so. I don't think we can dismiss that. I don't think we can dismiss the bounce back in copper prices today. We get back to our original breakout level, and then we bounce. Copper prices, of course, have come back in alongside gold and silver with all the metals amidst this rebalancing. So just don't get caught short term with short duration. That's the risk this week. It's why we rolled out a few days ago, Thomas, away from 21 DTE until we get through this week in non-farm payrolls and a potential tariff decision tomorrow. I don't see any cause for alarm based on our longer standing ideas.
Yeah, the copper intraday, that's nice to see, especially since I'm long. But technically, copper it's intact. It's this pullback. It looks like a good buying opportunity for anyone that's been waiting to get a little bit long over the past week. I like it. There's good volatility in there to sell put spreads. Duration, I think, is your friend when it comes to copper, especially as we see these GDP numbers pick up a little more. Because, the economy is pretty much, economic activity is the demand side for copper. So, you're facing the supply side, which is a lot less, I guess you could say, elastic. These miner companies, they've already said the supply is going to not be great for this year. Some have even warned that they can't fill contractual obligations. So that, economic expansion, that keeps on occurring. That's just a better story for copper.
It would be a better story for copper, particularly as it seems based on trade flows. We are watching a grab for the metals and hard assets. Gold down by just over 0.1%, silver 2.6%, copper 1.2% here, Thomas. Over the past several weeks in copper in particular, you go back to late November, if you were a buyer anytime we fell between our 1 week and 1 month moving average, you walked away pretty good. So what's happening here the next few days is, I think, a really important test to see if this particular impulse is holding up. Because if it's not, there are definitely some things that you could look to in, say, copper, like, oh, that's a bit of a broadening wedge here as we run up into the former highs from last July, along with decimate whatever plans folks like us have for further gains in the near short term. And then same thing for silver, right? Silver, a little bit more loss below its 1 month. That would mean that we've lost the uptrend from the late November low that has carried us here. We're bouncing off of it today. So breadcrumbs, right? Breadcrumbs. If we break today's low in silver tomorrow, you're probably going back to 70. If we break 70 tomorrow, low 60s again, why not flush? Why not see a move into the high 50s? and just completely reset this and scare the kids a little bit and shake everyone out?
Scared the kids. Yeah. A lot of the silver and gold weakness, I think, we're in the midst of a dollar rebound right now. It's a pretty good one. Dollar, having really good strength over the past week. I think that's really tempering the sentiment in both gold and silver. Copper too, but I think copper could move past it if a dollar rebound continues. If we get a really strong dollar throughout the rest of the year, I'd be a lot less bullish on silver and gold.
We'll see if those longer-term stats play out, Thomas. We make our way over to what's happening in the energy markets here. Oil up, nat gas down today. Good news for us, who decided to sell a put spread yesterday. Love when that happens, Thomas. Immediately testing short strikes on a double put spread that we put on here. Fun. What do we do? It's still a 70 IVR. Volatility is not coming off the board. For me, the pain point is the low from this week, 3.3324 in the NGG6 contract. When we go out to the NGH6 contract, 6, that line in the sand is a low of 2.828. 2.792. My mistake. So just 2 cents away. This has not worked out as planned, but this is the nature of natural gas. It moves in these 5 or 10 cent clips very quickly. So I'm ready to just eat a loss here and get out of the way. There's no reason to sit on a position where, because thanks to the amount of time that's still in it, 40 odd days to expiration, it'll just be a small loss. And thankfully the intrinsic value is there to prevent this from, like, hey, if this was at 21 DTE, this would be a much worse position today, Thomas. But this is going to be 2 trades in a row, the short iron condor, now these short put spreads that haven't worked in natural gas. I don't know, playing hero ball and trying to call a low yesterday probably wasn't the best idea in hindsight. So we'll see how this shapes up. You need to soothsay me, though, because I feel like I went into natural gas a little bit because of you. Tell me why I should hold long. Why should I stay long?
You're the captain of your own ship, Chris.
That is fair.
I can't be liable for that, but
you're in New York. Liability.
I'm in Chicago. I don't have to worry about you. I'm feeling the same pain. I opened another put spread in the J contract, so I have a put spread in the H contract and the J contract. I think I've gotten a little too confident that at least in the G contract, that this recent low around 3.31 is holding. But it hasn't broken yet. And that gives me a little bit of hope. What we need is the weather to start cooperating. And, LNG flows, they're still high. We just need the domestic demand to come back in. But, it's a really good start to the winter season, and then it's been very lackluster, a big letdown for the bulls. But max bearishness, we might be almost there, but you never know. It's natural gas. It could keep doing crazy stuff. You got to just trade
natural gas tends to do crazy stuff.
Yeah, you just got to trade it knowing that.
Knowing that, right? That's the product that you're trading. To that point, though, Thomas, what I said yesterday about the European natural gas storage levels being at lows that preceded major rallies in the product over the past few years at the start of the year, that has not changed. So I'm just going to hold this for now. Let's see if the lows break. I have a feeling this could be one of those trades, Thomas, where I said, I'm going to toss in the towel, and then it rips right back. And had I just been a little bit more tolerant and appreciated natural gas for what it is, which is a maniac, then it might have worked out a little bit better. Here's the curious thing going on. Crude oil's ripping today, up 3% right now. It's been a very odd week for crude oil, of course, given everything that's going on in the news. We start this week, let's just go where we closed last week, 57.32. Hit a high of 58.87, hit a low of 55.76. We're back to 57. 64. Nothing has changed as far as I'm concerned, Thomas. I'm still watching this key line in the sand. This downtrend, this is the only thing that matters right now for the oil market. If we're above the 50-day, if we're through 59, maybe we got something doing here. Okay. Until then, maybe we don't. I am still very interested in establishing a much longer dated out of the money call position, given what we've seen in the oil market, particularly in positioning. Again, not there quite yet, but vol is still low across the curve. There is even a little bit of backwardation here the further you go out in time. Nothing there yet, but something to do. I think we have to have that in the wheelhouse. It's only a 21.8 IVR.
Yeah, nothing has changed too much. Perhaps the market got a little optimistic that Venezuelan oil would quickly start increasing and we'd see that in short time. I don't think that's the case. I think most traders know that isn't the case. But like I said yesterday, my put side went in the money yesterday on that iron condor I have on crude oil at 57. I'm just keeping it on. I said I was comfortable keeping it on. We rebounded today. The iron condor, it's back, doing just fine right now. So I'm going to keep that on and probably actually roll it. I said yesterday I'd like a little more room on the downside when I roll it. So I might move that put side down to 56, give myself just a little bit more breathing room. But at the same time, you see these economic numbers, they're good. GDP trackers are increasing. It would just be bizarre if we got oil in the low 50s or 40s and, the economy is humming along just fine. So, I'm going to keep it. And my view is that oil stays in the upper 50s to low 60s through at least the first quarter of this year.
Are we going to break 55 here? Given the data that we have in front of us? Thomas, I'm really inclined to say no. I do have directional neutrality here, but sometimes you don't think things are going to change, but you're going to float higher in a range. So the short strikes I have are 62, 64. I don't see oil getting through 62 in the near future, but also thinking that 54 breaks, 55 breaks, that seems unlikely. I think I'm going to throw a kicker in here. I think I'm going to add a short put spread. I'm going to add a short put spread into the oil position, also at 40 DTE. So I really need this thing to hold up. If this starts to rally a little bit more and starts to test the top side of the short iron condor position, obviously there are broader market implications, and maybe that's helping the bonds leak lower. I just have such a hard time conceptualizing what's going to make bonds go up right now, because if oil was down 20%, 19%, nearly 20% last year, and bonds were effectively unchanged, up 1.4% on the year, what if oil bounces back against the backdrop of the deficits and the Fed rate cuts and the yada, yada, yada? It would just seem like it's an albatross around the bond market's neck. So, other implications here for oil, should that play out. Oil, yeah, the iron condor today is doing a little bit better. We've been asking the question here. Has the dollar turned the corner? DXY was our point of interest here in recent sessions. We were keeping an eye on the 50-day moving average, which seemingly aligned with some of the swing lows that we had earlier in December. We couldn't quite crack on through mid-December or at the start of 2026. But here we are today. And now with today's move, we will have a positive rate of change for the 1 week, the 1 month, and the 50-day moving averages. So that brings the attention over to the British pound. As discussed with you yesterday, Thomas, the pound here looked like it was starting to lose its uptrend off of the recent lows. Maybe the weakness in gold and silver makes a bit more sense now, Thomas, right? The dollar's rallying, yields are starting to creak a little bit. They may break to the upside. That's enough for the precious metals to calm down for a short while. We're not quite through the 50-day yet, or excuse me, the 1 month here yet in the British pound. That comes in at 134.25. We are 134.23. So it's starting to happen. Consistent with this, with the dollar breaking out, with what we're seeing play out in every other space, the short call spread in the pound against recent highs, I think makes a good deal of sense. We do have a 38.8 IVR in 6B futures. There is decent open interest, not the best. It's not the euro, but there's decent open interest here. And we can get slightly better than a 2-to-1 risk to reward north of a 50% probability of profit. There's enough to like there where we should be exploring what a long dollar position looks like right now. And I know it's not part of DXY, Thomas, and it's not a futures product per se, but I do want to draw attention to the Kiwi dollar spot price, because I see here what would look like to be a head and shoulders pattern forming in a very commodity sensitive currency. And so if Kiwi dollar's potentially at risk, Kiwi dollar, which by the way, again, not a futures product, but just got rejected from the trend line from its July, from its October swing highs. If Kiwi dollar is going down, the dollar is probably in better shape. So a few puzzle pieces here, Thomas, that tell us maybe the dollar has turned the corner. DXY, if it's the euro, if it's the Kiwi dollar itself, there's something to work with right now.
Yeah, I agree. I am getting long a put spread in the euro at 116.5, 116. That's 57 days out, so plenty of time to work there. But I think this is enough of a trend to where I can jump in here. And, even with this duration, we get a bounce back. I think, go on, make a series of lower lows, lower highs. I see that playing out.
Given the volatility in the euro being slow, only an 8.4 IVR, looking for a move back down to the lows that we had even in November, which is roughly 115.5. You could do something like a long out of the money put spread here. It's a 21% probability of profit. It's in the neighborhood of a 4-to-1 type of trade. The euro, of course, is the largest component in the dollar index, and the ECB is looking at an economy that's not in the greatest shape. Also, Thomas, isn't this a currency that we've long held that there are debt issues and lack of federalism or fiscal unity in Europe? That's what the debt crisis was all about. So what if the U.S. is pulling its support? What's going to happen to European debts if they have to raise their own army and pay for their own defense in full because of a dissolution in NATO?
They'd have to get on board with a lot more fiscal unity across the countries. At the very least.
A lot more fiscal unity, which I don't know if that's better or worse for the euro. I'm inclined to think it's worse because you have all the southern economies' finances diluting that of Germany and Holland and the northern tier economies. So either way, though, Thomas, the dollar here, it's looking like it's doing a little bit better now. There is that, of course, the intervention hedge that was on, which expires tomorrow. So BOJ, save me now. Of course, this was just a few dollar loss because the whole point of the intervention hedge was if something happened over the holidays, Thomas, while we were maybe not paying attention. And so happy to eat like an $80 loss if it means potentially providing, several hundreds of dollars of gains against there. Other than that, though, while we're here, I do want to take a brief look at a different type of currency because we do have some time. Bitcoin futures, they are back up on the session after falling for what was a third consecutive day. We're holding at a really important spot, dare I say, Thomas, in terms of a potential change. We know that 95K is a line in the sand, but I just want to trace this line down here, the yellow line on the chart. That's our 1 month moving average. Resistance all the way down until today, where it's starting to prove itself as support. Small breadcrumbs out there that there's something may be changing. And if that's the case, if Bitcoin is able to get through 95, we're looking at a very different market. And the sentiment that people have been experiencing, it's going to flip on its head. So what world does Bitcoin break through 95? Let's start thinking about that.
I can do it.
Thomas, before we close the door here and we go to what's next on the calendar, I couldn't help but notice that there were some very high volatility readings in some of the grains here. Corn in particular has an 81.5 IVR And from my view, this looks like this is a chart that's just funneling and funneling and funneling right now. First off, what's going on in the grains? We haven't touched on it in a week or so. Why the high volatility in corn and not necessarily seeing that elsewhere? Wheat only has a 10.1 IVR. Soybeans are at 16.4.
I'm not sure about why there's a big divergence in volatility. I think it might be related to how the positioning data is worked out. Soybeans has flushed out probably a lot of the shorts on this latest pullback. But, that's something I haven't been able to see because of the COT data. I think corn, there's just a lot of uncertainty of where this market is going because there's a lot of supply, but there's also, we've come after such a big down move and now we've consolidated. I think it's just uncertainty around this upcoming marketing year and how that, is this excess supply going to be able to get offloaded? There's a lot of factors when you consider other countries like Brazil, how the weather is going to go. So I think it's just maybe traders are conflicted on which directional bets they're taking. But I'm not sure. I can't give you a good answer on that.
It's worth keeping an eye on. I've tried, and I was looking at this earlier today, trying to size up a number of technicals that, what would we do here given the setup and the volatility? The setup itself, a coiling spring to me is reverse iron fly all the way. Just look for a move, be agnostic as to which direction. As long as it goes up or down, then it should work out, right? The coiling of the spring is the storing of potential energy. The breakout, either which way, is the release of the kinetic energy. So we're playing for the kinetic energy release. You can't really do that here in an efficacious way. So then is the best bet betting on the multi-month range holding 435 to 460? Because you could get paid for that. 435 to 460 will go on either end. I mean, it's a coin flip.
Yeah.
Better than a 3-1.
Yeah. Monday is the WASD. So that's usually a pretty big, the biggest monthly event for grains. We also get another big report. It's a quarterly report. The grain stocks report, it'll be released also Monday, I think the same time. But, with those two reports coming, we could expect to potentially see a lot of movement in corn, soybeans, and wheat on Monday. It's the final production estimates for this year. So it's a good one to look at if you're trading them.
Going out to the 1 standard deviation move right now in wheat at the 43 DTE, you will be looking at almost a 1-to-1, 212.50 potential max profit, max loss of 287.5. That's 61% pop, Thomas. So I mean, we can't ignore these volatility readings and products that are presenting them to ourselves. Volatility has been running very high in wheat for the past several months, even with these IVRs in the 50s, 60s, 70s. And yet, if you were directionally neutral and trading this directionally neutral, selling the vol and looking for more chop, you've made out like a bandit. I didn't do that. Hindsight's 2020. But why not maybe a little bit more of it? So one last trade here, Thomas. I said wheat, it's corn. One last trade here, Thomas, for corn. We'll put this up. Maybe it gets filled. The mark. We're on the other side of the ag closure for today.
I do that all the time. All the time.
Yeah, ag. Okay, we'll put you on later, and that will be up on the follow page. What's next on the calendar? Tomorrow's non-farm payrolls, housing starts, building permits, and that tariff decision potentially from the Supreme Court. They do have an opinion day scheduled. Nothing official for what they're discussing, but we'll watch out for it. Also, Michigan consumer confidence. Confidence readings have been all over the place, Thomas. Hey, you know what? We're done here. We'll be back later on today. Of course, you're watching Tasty Live, so there's more great programming coming up immediately after this. Dr. Jim's still out this week, but he has great content pre-prepared for you, so stick around. Get your daily dose of Dr. J.
Nicky, we are back, son. You know what that means. Time for trades from the research team. Who is our first researcher?
Shark.
My man.
The one and only.
The one and only.
Let's get some formalities out of the way. Happy New Year to you. How was your New Year?
My New Year was great. How about you guys?
Awesome. Good for you. Did you go home and see Mom and Dad?
Yes. Absolutely.
Awesome.
How's Papa
Family
Shark?
came over. Huh?
How's Papa Shark?
He's doing good. He's holding up.
He's holding up? Okay.
Holding up.
Good.
Yeah.
Good.
We went to Rockefeller Center on the day before New Year's.
Okay.
Oh, that's where my mom was a waitress down at the Promenade, right by the ice skating rink there.
Giant Christmas tree, ice skating rink.
Yeah.
Super crowded with all the tourists.
You are a tourist.
Yeah, I was a tourist.
You were a tourist. You're born and raised in New York, right?
In New Jersey.
In Jersey.
I
Fair
know
enough.
that offends.
Jersey, Staten Island, Brooklyn. That's just New York, okay? I mean,
You're one of the very few New Yorkers who thinks that.
Yeah. No. Well, I know. Well, I've become a lot softer in my old age.
Oh, because you live in the suburbs now of Chicago.
Yes.
So he
I consider myself a Chicagoan being in the suburbs, right?
Right. I don't know if I agree with that though.
Right.
You're very suburban now. You talk a tough game like you're like this Chicago guy, but you are about as suburban as it gets.
Well, I've lived in the suburbs for 35 years.
I know.
You too, by the way. You were born and raised there. In the suburbs.
But I'm
just off the lake. You know what I mean? Let's not,
I'm a Chicago guy. I've been in Chicago for 15 years.
Whatever. Whatever.
Yeah.
One more question to ask you. So I bought my son, who's 16, my other one, my good one, not this one.
Okay.
A car. When you were 16, did you get a car from your? Really?
No.
I would have bet a lot of money that you did.
No, I was supposed to get
Shark, you're tougher than I thought, man. Babe, really.
If I stayed at home, I was supposed to get my dad's old car, but now I don't have any over here. So.
Oh, so what did you do when you were 16? Mooch rides from your friends?
Drove the family car.
Yeah.
Oh, I'm not letting him drive the family car.
No. I had to ask my dad permission. And actually, I never asked my dad. I always asked my mom because I already knew how that conversation
would go with your dad.
You know how he is with cars. Okay?
Yeah.
He has a new one every 6 months. Okay.
Yeah, that's another thing. Yeah, he's real bougie. I keep my cars forever, pretty much. Yeah, not that.
But yeah, otherwise, Mooch rides off the fence. That's what I still do with Gad nowadays. So.
But mom let you
I pay for the gas. Okay.
And you paid for the gas too?
That's the trade-off you have to do.
At 16 or 17?
What do you think?
So wait a minute.
What do you think the probability is Vinny pays for gas? You think Vinny pays for gas?
Absolutely not.
I'll give you a Polymarket inside information. Inside information, which is interesting. So
I was working at Best Buy at $8.25 an hour to pay for my gas.
Vinny worked at 14,
and I was scalping TVs
in the black market.
Yeah.
Vinny worked when he was 14. I mean, my kids worked
for about 2 months.
No.
It's one of those summer internships.
No. He worked at the ice cream shop for a couple of years. Last year he took a half a season off or so to get his driving.
He finally made it.
To get his driving skill. But that's interesting because you pay for your own gas, but you won't pay for your own DoorDash today.
No, I do. Okay.
That's not what I hear. That's not what I hear. All right, what's your trade? I don't want to.
Done that in 2-3 weeks because I've been at home. Actually, you're right. When I'm at home, mom's pays for things, so I'm not completely as independent as they like to think I am.
You should work the system as best you can, my friend. I would be doing the same thing, if not more, in your position.
But they have a very expensive lifestyle in New Jersey. Okay, my parents.
Yeah. Your mom's got to stop living outside her means. I mean, your dad can only do so much. What kind of trade? I'm just trying to help you, Shark. What kind of trade do you got for us today, baby Shark?
I was trying to find something in the non-AI space. The airlines are going to start using AI too. So every single seat on the United flight back home was full. Like the entire thing. And people
at $6,000 one way.
Yeah, right? People were having arguments on. The overhead bins and stuff.
Of course.
Some people had to gate check their bags. Unfortunate.
Yeah.
So I'm going full in bullish on the airline stocks just for this.
Wow, even at all-time highs. Okay, go ahead.
Even at all-time highs. Nick always says, bring your wackiest, wildest trades up here.
I want the fun stuff.
So I'll give you the fun stuff. So bullish at all-time highs, Strangle. Strangle, just so in case I'm wrong, okay? 105 to 135.
Okay, I like that. So you're selling about a 20, stock is basically unchanged, 116. You're selling about a 25 delta put, 20 20-ish delta call, so you're leaning about 5 deltas long. I like it.
Yeah.
I like it.
I'm getting a little bit of pushback here on some of your answers. I don't know if I should out you here. I'm getting. I was correct about the DoorDash thing.
Sure.
I'm getting. And there's some.
It's an ARB. He's a smart guy. I mean,
he deserves it. I mean, Emory, right?
Plays the point.
Emory, right?
Yeah.
Okay, listen.
I mean, you leave.
If one of my kids could have gone to Emory, all right, I would have been paying for your DoorDash too. Okay, I mean, I got Batista's with CBs. I mean, that's where we live. In that middle
spend
world.
on my own card that I pay off, but because of the point.
Now I'm getting a little bit of discrepancy on when you got your license too. At 16.
No. I got it at 18. In New Jersey, you can't get it until you can't even get to start the process till you're 17 or whatever. It's like the last
I
state.
get a little discrepancy. You might be even older than that. I don't want to out you. It's okay. It's okay. It's okay. I don't want to out you. I want to get to my next reason. I don't want to be.
No, according to my dad, I'm never going to be able to drive ever. Okay, when I was at home.
Your dad's not a good driver. We were going to Brooklyn. I ended up in Staten Island. Okay, and it cost us like $30 to go over the bridge each way. It would have been just. This is why you can't afford free. You just pay for the Uber and you get to your destination. Your father took me. It was an hour difference, and we had to go over different bridges. I found myself by my own.
Who lives in Chicago? Okay, in the city. Okay, have not driven for 6 months or whatever. Came back home. I was driving perfectly fine. Whatever, okay? And he still made comments. He's a backseat driver. That's what he is, okay?
I'm going to tell you something. You're going to lose your DoorDash account. Who's our next researcher?
Thank you, Shark.
And you guys.
The General,
Mr. Kai. Mr. Kai, I hear you're a little bit under the weather, as is Jenny today. So Liz and TP will be TP's film. What's that?
Gad too, I think.
And Gad too, sick. Yeah. Everybody's got this mystery virus going on. What do you? Are you sick?
Or are you just playing hooky?
It's a flu season. You always got it from your kids.
Give us a little like cough. You're supposed to go. I'm not playing hooky. That kind of thing.
By the way, Happy New Year.
Happy New Year, Kai. See, Kai's a gentleman. Yeah. Happy New Year.
Yeah.
What's the year this year? Weren't we snake last year? Was
horse.
it snake? It's horse this year. What does that mean?
I thought he said whore.
Yeah,
I thought he called you a whore.
Yeah.
Horse. What does that mean? It's I think it represents harmony, calm.
Bullshit. Yeah. 2026 is starting out anything but that.
Yeah, we are.
Maybe it's the year of the donkey. What's the donkey? Not like a horse.
No, we don't have year of donkey. We don't have year of cats or fish. These are the common mistaken one. Yeah.
All
right. So we're getting some calm.
But it's supposed to be a good year. Hopefully, 2025 was rough.
Yeah, I know a lot of people didn't have a good 2025. I think Tasty Nation did okay, but
I think
yeah.
It was great.
Oh, that's actually a good observation.
Yeah.
I'm putting together a 2025 Zero DT summary. Actually, it was pretty good, 2025.
Mm-hmm. Yeah. Right. Well, what do you got for us in 2026? Show me a harmony trade.
All right. This is not a harmony trade by any means. I know you're fully committed to the gold. I want to add some silver position.
Okay.
It's SLV, and unfortunately, I've changed my price 3 times in the past day because it went up and went down. It's 67-ish something right now.
Silver. SLV, silver as a future is a different price than SLV. SLV is 67. It closed at almost 71.
Yeah. Silver down another 4.5% today.
Yeah.
Big move.
So I think it's probably be trading in range, getting close to 65. So that's why I want to put on a 65 butterfly, $5 wide. It's pretty cheap. It's a short-term shot. So
yeah, you're taking a short-term directional shot. Well, I mean, it's not short-term. I mean, you got 44 days. There's plenty of time here in the trade. Relatively tight. In years past, I would have said $5 wide and silver was plenty wide. Now with silver moving, I don't know, 30 handles or $30 SLV, this is a relatively tight butterfly. I might widen it out a little bit, but I don't hate the trade as a shot.
It's a cheap way with volatility and the skew that you have in silver, and gold too has the same component as well. But it's a cheap way to get some sort of short delta here, to at minimum play the downside.
Very small.
Yeah, very small. If you're in a little Johnny-sized account,
you
look
could do
at
something like
this where it's a cheap shot. It's not gonna, over the next couple weeks, if silver rallies higher, this will move 10 cents, 20 cents. It's a very cheap way to kind of get a lottery ticket type trade. In a smaller sized account.
Even for naked position on Tasty Trade platform, it's only $1,200, $1,300 buying power, and you can collect $1,200. Probably not this morning. You can still collect like $10.
Let me give you an idea. January, with 8 days to go, as butterflies expand closer you get to expiration, this butterfly is trading for a little over $1. I mean, so it's not the one that you're looking at in February with 44 days is not going to move that much. So I'm just synthetically looking 8 days away. We closed at 71, much closer to your price here on this bearish butterfly that you're looking at, and it's moved about 20 cents. So if you have a shorter time frame, maybe you go into maybe the 8-day options or something like that. If you have a longer time frame, you want to spend a little bit less, you can go into Kai's trade. I don't hate it, Kai. Not a very high probability trade, but you've got not a high probability trade at all. But it's a very cheap shot. Yep.
Yeah. But if silver stays here, this will be, in 2 or 3 weeks, it'll trade at $1.50.
Yeah.
You could kind of get a 100% on this.
Yep. Good job, Kai. I don't hate it.
I like it. I think we're going to look at this for a little Johnny trade. Maybe UAL too.
Yeah. Another way to do it.
Just to find the risk.
Yep.
Wide.
Beautiful.
Good job, my friend. Thank you. Who is our next, I believe, and last research? I believe they have 2 trades. Julie, I don't want to be rude to you like I was to Kai. Happy New Year.
Happy New Year to you guys.
Happy New Year to you too.
Happy New Year to you.
Do you have a resolution?
Oh, my resolution. Oh no. What's my resolution?
Do you have one?
No.
Do you guys have one?
No.
Nikki, do you have one?
Yeah.
You have one?
Well, it's the easiest one to say, but I gotta eat a little healthier. I gotta do a little.
That's a good one.
Yeah.
Mine's way lamer than that.
Really? What is it?
What is yours?
I'm trying to get better at calisthenics, which kicked my ass last year, and I need to up my game.
Okay, that's good.
Calisthenics,
a morning stretch.
Stretches.
I need to do that too at my old age.
L-sits. I want to do L-sit handstand inversions. That's like a very ambitious goal. It's all upper body, and I've neglected upper body for the last 10 years. So it's good to finally do it.
All right.
See,
you got to do your morning stretches too.
Stretches is always a good idea. I don't stretch either.
I know.
Yeah.
Yeah.
I know.
Because if you don't, you got to start, because then you end up like old.
Right, I know. I don't want to drag my leg in another couple of years. Yeah,
wobble and
I know.
You got to drag the leg. You got to kind of hold the leg and move it.
I don't want to look like that. I know.
Yeah, you don't. I don't want you like that.
Thank you.
Because if you end up like that, you know what happens. I got to go mercy. Mercy.
Julia,
So what I'm hearing
before he puts me out of my, what's that?
I was going to say we can do like morning calisthenics. At the office. We can do it every morning.
Will you lead it for us?
I don't. Ding, ding, ding. Let me think of a routine that everybody can do.
We got some pretty fit people in the office. I feel like we could
We actually do, yeah.
And we got some yogis in here. Like, we got some peeps that I think
I'd like to see this happen.
That could do this. Why not?
Some tasty branded yoga mats.
Yeah.
Everyone gets matching leggings. That could be fun.
Yeah, let's do it.
Oh, now you're thinking about merch.
Yes.
Oh yeah, merch on the mind.
Yes.
There we go.
All right, what's your first trade?
Trades. Okay. The first one is we got silver and gold, which has actually, we've definitely seen some chop in gold the last couple of weeks, but it's actually been a little bit on the sideways side versus silver, which has been pretty consistently bullish over the same time frame. So I have a very love-hate relationship with gold. When it moves, it really, really moves. So I'm going to find risk in here. I'm actually going neutral because of the kind of sideways-ishness, noting that the past performance doesn't necessarily indicate future performance, but that's kind of like roughly how I tend to gauge directional assumptions. So I how did I go here? I went with the 377, 440 short strikes and then $10 wide on those. And I think if I remember correctly, I was aiming for around like 20 delta, maybe a little, maybe closer to 18.
Yep.
Yeah.
It's down about $2 this morning and I adjusted. So it should be adjusted for that.
Mm-hmm.
Okay.
Yeah, you're right there. I mean, you're about about a 20 delta based on the closing price yesterday, but it's not going to move all that much today, 43 days out. So yeah, I like it. Delta neutral, 1/3 the width of strikes. We'll take a look at this.
But, Ivy ranked pretty high, 59. ETF, not having to worry about earnings so much for this one. There's a whole bunch of other stuff you got to worry about. But I feel like the defined risk, for me at least, gives me a little peace of mind. So that's generally what I tend to do with these.
I like it.
I like it too. I have no problem with this. Good job by you. What's the next one?
Okay, next one, a little bit more of a stretch. We got the Qs for the next one. Ivy rank of 20, which is not as high as it could be, but across like the market ETFs is actually quite high. And again, you don't have to worry about earnings to the same extent. Obviously, there's like a little bit of like earnings, volatility increase that can come, but with a diversified ETF, it's much less of a concern, generally speaking. So Ivy rank of 20, to me, that's still tradable. It's also had like a little bit of a rally the last couple of weeks, but compared to like the Santa rally from like 2 years ago, thinking like the 2024 one, much calmer. So decided to go neutral with this one as well. It's just kind of my default because I suck at making a directional assumption. So I went with the 590, 655 short strikes, $10 wide on those, collects 309 in credit for 691 in buying power.
I like it. I'm leaning a little bit of short delta into today. I'm hoping we get a little bit of a down move, a little bit of a pop in volatility, and this will be a perfect trade to add on for Johnny Trades or something like that.
Just a little sprinkle.
I like it.
Good job out of you. Good job out of the team. Appreciate everybody's support. We're going to take a quick 90-second break when you get ready for this opening. Even the S&Ps have moved about 2 or 3 handles in that half an hour time frame. They're down 10.5. We'll be back in 90 seconds with Tasty Live. Nikki, we are back, son, with even the S&Ps down 1250. This is about as low as I've seen them since we've been on the show. I know they are about 15, 16 handles off of their lows made last night. Russell is your strongest of the group, up 12. Dow is almost up. It's down 34. NASDAQ's your weakest of the group, down $160. You scalped out of your futures nicely. I mean, you got them down to 25, under 25.7. They're 25.672 right now, so about 20 handles lower than where you scalped.
Missed out on 30 ticks.
Nah, you can't look at it that way.
Joking.
Positive scalp is all you can do. Bitcoin under 90,000 to 89.8. Oil's been up $1. It's up $1.15 right now. Gold.
No vol though.
Again?
No vol
anywhere really right now. Volatility 1675, up a nickel or up 10 cents right now. Even the S&P's just dropped about 7, 8, 10 handles in about a second here. Even the S&P's down 19 or 20 right now. So you really have some kind of pockets in the market with low volatility. You ready to look at some Johnny trades? I
got a couple things that I actually have to do here.
Okay. You got to clean up.
I got to clean up. I mean, I've been
clean up on aisle 7. Clean up on aisle 7.
I got a problem child in MU that's fully in the money. It's a butterfly, so I got to hold that one. But
butterfly defined risk trade. Not too much you can do there, right?
Yeah. So I have a short put in Nike that's right at the money. We can look to roll that out. It's basically a scratch. Maybe that's a decision that we can kind of talk through here.
Okay.
I've got a call spread in, and you don't have to go to yours. I'll go to my pile.
Okay, cool.
I can go to it here. So I have this Micron butterfly. This one, I wish I was around and not on vacation because we were right where we needed it to be just about a week ago. That one is a hold at this point because there's nothing you can do with it. Butterfly.
Right.
Just got a face ripper of a rally, 40 points to the upside. So at this point, it's a lottery ticket because it's basically a full loss. It's marked at $9. It can only go to 10. You can't really do anything there with it right now. I've got this short put in Nike, which is another one that we've been holding for a little bit. Probably had an opportunity over the last couple weeks, but again, that's just how it happens. So we got this naked put. Maybe
so you're saying you're not a diligent manager. That's what I'm hearing.
Maybe we roll that one out. We have a call spread in the Qs. We sold this at 335. It was an iron condor legged out of the put side for 38 cents. I think we could probably look to close this one out. It's marked right now at $1.60, so it's probably like 140-ish dollar profit there on the table. I mean, this is a good move. We needed this.
Yep.
Same thing in SMH. I have iron condor here that's basically a scratch. Maybe we leg out of that put spread and lean a little bit of short with a little bit of short delta here. And then we have another butterfly in Tesla, which is very far out of the money. Maybe we close those out. So let's
This is the Johnny account that we put on these trades. You have it on a separate account. This is the one that we watch. We've closed all the other ones for profits, obviously. Yep.
So let's do something with the Nike.
Nike one? Yeah, let's do it. Nike down 35 cents, sitting right at your number with 8 days to go. I mean, if you're still bullish on Nike, which is in the middle of its most recent range, Ivy rank of 20's not great.
And this is the $1 million question. So just to give you some context, we did this short put. I think it was into earnings or close to earnings. And I just pulled up the market snapshot, which you can get to if you go to the right side menu, order chains, and then you click on you right click, go to view market snapshots. It'll give you this little pop out here. Stock was at 67. It's come down to 62 and change, right at the money here. The put is basically the same price that we sold it at, right? So we sold it at $1.43. It's marked at $1.46. Yeah. The $1 million question becomes, do you hold it for 8 days? Or do you roll this out to February?
Obviously, directionally wrong, right? Stock's $5 lower than where you wanted to be. Unchanged on the position. I roll it from that 8 day to February of 43 days, and I might even roll down a strike to 60.
Okay.
And I put it in for a small credit. It looks like mid price is a small debit.
The stock's at lows though. You want to lean a little bit long here.
Okay, then you can go to the 62.5 strike, and then you would be selling it for maybe $1 in credit or so.
Yeah.
Yeah, just it all depends on no delta change or reduce your delta is really what it comes down to. I mean, you could be a big shot, Johnny, and go to the 65s if you want to and get even more credit.
And do like
But I don't think Nike's on its. I mean, Nike is lower, but it's not on its butt.
Yeah, it is. I mean.
Well, 63 is nowhere near its lows of 57 and change.
Yeah.
I mean, I'm just up to you.
We're gonna keep it going. We have a pretty light portfolio here. We're gonna put this in at $1. Let's try and get filled here.
Okay.
I get these in. All right, so we're in for 98 cents. So we rolled that out, so that gives us a net. That is $2.41 in credit that we've collected on this. So our break even is somewhere around 60-ish.
That's correct, and it's trading on the offer $2.37. So you're basically sold the offer in February.
So we got this call spread too. I think we closed this one out too. So this was part of the iron condor that we had. We're going to close this one out. This will free up a little bit of buying power for us too.
So you're looking to close this trade?
Yeah.
Good.
There we go.
Oh, there you go. Beautiful.
All right. So and
you'll see all these fills come in after the segment.
Yeah, once I have a moment to publish these. But you'll see on the order chains, it adds up all of your credits and debits, gives you your net profit on that too. And I can show that for Nike too, just to show the order chains feature. So we rolled that put. So my first sale was $1.43. Rolled it for $1 or for 98 cents. That gives us a trade price of $2.41. It's marked at 227, so I'm up 14 cents on this. It's basically a scratch, but it adds up. When you're managing all your trades, it helps you track them along the way here.
If you just right click quickly on that thing, I'll push them through if you want. On the follow page, I'll push them through too. You'll see those under the Johnny trades with that silhouette of Nick on them.
The Tesla position. So basically, this is one just to give an example of like where you can buy in the risk, because we've done this I've done this with the gold position that we have in our main account. I do it all the time with ratio spreads. I like to do this as just a lottery ticket type trade, but we'll walk through it here. So,
you're going to walk through the math a little bit, right?
Yeah. So on the analysis mode, and you can go to the analysis mode here on the left side, here's my position for my butterfly, right? So at expiration is the binary risk profile here. We sold this at 96 cents. If the stock stays out of the money from where my position is, I keep the 96 cents. Awesome. Great trade. Now you can see where your risk is up here. So we have this, did we do it 5 by 10? We did it by 10 by 20, I'm sorry.
Yeah.
So we have this 10 by 20 spread, right? So you have $10 wide call spread. You collected a small little credit of 96 some odd cents. So your break even here to the upside is $10 above where your short strikes are. So you can see right here at the 35 strike, 535, that's where you start to have risk. So if you can buy in this risk for for a cheap value,
sure,
you can own this butterfly for a net credit. You have no risk on the trade. And what we mean by that is our risk at 435. So if we can buy this 435, you don't really need the 545. You certainly could just leave it, but I typically just close out of it to make it even cheaper. If you can buy this spread, it takes off that risk profile, right? So you can see here, and this will adjust with the debit paid. So I'm paying 3 or 4 or 5 cents for this, which nets me 93 cents in total credit, which is why you see this all green area with a little bit of a lottery ticket, a very low probability lottery ticket.
Very low
to the upside. Lottery. You have to keep in mind, doing this adjustment 9 out of 10 times or 9.5 out of 10 times, you're throwing away the value, right? But
That's correct. It's just like a scratch off ticket or a lottery ticket, as you say.
Exactly. So you're paying 2, 3, 4 cents. It takes off. The other positive of this adjustment is that you're taking off that buying power, though. So there's a value to that.
And in a small account, that's a huge value. In a large account, it's not as powerful. But in a small account, you're using that new money now that you freed up, that couple $100 that you freed up on another trade, which is the appropriate size for your small Johnny size account for a new trade that has a much higher positive theta to it, and maybe even a directional bias if that's the direction you want to go.
Exactly. So the adjustment that we do there, it locks me into a profit, say 95, 93, whatever, dollar profit.
Which is a great profit on a trade like that. Yeah.
I got a lotto ticket, 2-3% probability of making up to $1,000 if we pin the 535. It's 100 points out of the money.
How about just making another $100?
Or another $100. You get a $50 up move.
Right. For no buying power usage, additional buying power usage, freed up buying power.
That butterfly goes to 50 cents if we get a $50, $70 move, whatever it is.
Yep.
And then freed up the buying power, $1,000 in buying power that we can use elsewhere. So
I like it.
So those are the adjustments. Let's look for a couple trades here.
Okay. Let's take a look at it. How about I'm going to throw out some names for you. Ready? I don't think these are the places you have positions in.
Yep.
We mentioned HIMS earlier. I'll just throw it out there. BMNR. I'll just give you a couple. Give me something. Halliburton, maybe with oil. Upstart. UPST. CELH. FCX. Fremont. ARM is another one. Rivian. RKT. I'm just throwing out names that hit you. So.
Okay, I like that. I actually was going to go back to the well too in Netflix.
Okay, you could. I went for lower price stocks.
Keep those.
Okay,
I want to do those.
Okay,
I want to do some of those.
Sure.
Netflix, you got earnings coming up in the next couple weeks. How do you feel? And volatility is relatively high. Mm-hmm. Stock is on its butt.
Yeah.
I mean, it's reversed its entire kind of move from the middle of last year.
Mm-hmm.
What do you think about doing like a wide put spread here on the downside?
I kind of like it because I've been watching a lot of Netflix lately.
So I like to go somewhere around the 30-ish delta, 25, 20, it depends on your directional assumption. I think you lean a little bit more bullish here. I think we're both kind of a little bit more bullish here.
Just playing the contrarian role, right?
Yep. So we go to around the 30 delta. Now, if you're naked on this position, $1,200 in buying power. A little bit past.
Right.
Could pull it off, but a little bit past my threshold. I try to keep these under 1,000 or at 1,000. So I go and I buy a $10 wing. You could go and, buy a $5 wing if you want to use less, and it'll trade for about 1/3 the width of strikes. I'm going to go 10. It trades at about $2 here, a little bit less than 1/3 the width of the strikes. You're only doing one side here, so that's not a shock, but it gives you about 20-ish deltas on the spread overall, 70% pop.
I like it.
Let's say you. Good? Let's try it.
Go for it.
We'll do it at 207. Okay.
Beautiful.
All right, so we're in at 207.
I like it.
All right, give me one of those lower priced ones.
Halliburton,
What's that?
HAL.
HAL.
Yep. HAL, $31 stock. It does have earnings January 21st. You're going to probably run into earnings all over the board here. Stock is near its highs, IV rank of 33. Markets in February are not that great. I'll give you another one. BMNR, Upstart, UPST is one that we haven't traded. Earnings aren't until February 10th, closer to February 20th expiration here. IV rank's only 15, but you got a 90% monthly implied volatility in here. Stock's on the middle-ish end of its range, got down to about 35. It's been as high as 85. FCX is another one.
A little copper exposure.
Down $2 today. It's been on a huge run from 38 to about almost 60. Earnings are January 22nd, so they are close. A little bit better markets. And remember, all of these stocks, if you don't trade them all the time, aren't going to have the greatest markets in them.
Yeah.
Silver, HIMS.
Oh, yeah, let's do silver.
SLV.
Let's do that butterfly in silver.
Okay.
Kind of stinks doing
Good IV rank of 90 here. Say again?
Kind of stinks doing it into the move today. Let's do you want to do a pseudo pairs trade.
Okay, in which way?
I'm thinking we do the Iron Condor in GLD that Julia had.
Okay.
Something around that realm. And we'll do the butterfly a little bit wider, but kind of similar to what Kai was looking at.
Okay, let's do it. I like it.
So what do you think about going to February?
I think you have to be. I think you should be in February, especially in a Johnny account. I like to stay as mechanical as possible in a Johnny account. If you're going to take a shot, then you do it as an opening trade. It's going to be a shot. I don't think you're looking for a shot here.
What about doing it's probably going to cost us a small debit to do this.
Okay.
But I'm thinking
you don't go to purgatory or jail, by doing a trade for a small debit, right? If it's a couple of cents, under 30, 40, 50 cents.
Yeah. It's always going to hold some value.
Right.
So even if you're paying a debit.
Kind of like the car I bought for Vinny. It's going to always hold some value to it, right?
Yeah, until he finds sport mode and sends that thing.
He found sport mode already.
All right.
So Ford Explorer with 4 cylinders. I don't think he's going to be doing too much sporting right now.
It's got the turbocharge in there.
Yeah, it does. Yeah, it's zippy. I'm not going to lie.
I'm thinking we do a 5x10. So we do something like the 65-60 where you're selling around the 25 delta.
Okay.
And then we'll go 10 points wide. We'll go to the 50. It's going to cost us a small debit.
Right. And that's why the probability of success on this trade is closer to 25%.
Yes. So if you change this, and this is just like an exercise you could do.
Yeah.
If you just ignore the 20 cents and change this to a net credit.
It's an 80% pop trade. So
and that's because you have no risk to the upside.
Right. So. But you're really looking to play for somewhere inside that pyramid, that 10 that you have.
Yeah, what you can see here. So on the So on the analysis mode here, just to give you an idea. So you've got your position.
You do a little tutorial here on the whole trading platform. I really like this.
Yeah, I know how to use it. It's great.
You're good.
So what you can do is for the risk profile here, you can kind of change some of the metrics here from volatility and time, spot price. And as you go through, as time passes, you can kind of see how this risk profile changes. This is what we talk about when we say, the pop is 25%, but you really have no risk to the upside, and this is going to hold some sort of value. Right. You can see as time passes, you have profits here, even though even the stock stays where it is. Silver stays where it is here. If volatility changes too, which you'll probably see volatility contract.
Right.
And this is sort of a short vol trade in a sense, because you're long the at the money volatility, which is going to hold its value, short the out of the money volatility. So you can continue to play around with this, but this gives you an idea of kind of, if volatility contracts and silver kind of stays choppy here, this is what your risk profile looks like. This position would be up, 40 or 50 cents. So even though you're paying a debit, it's going to hold some sort of value here. And that's why we talk about, not really worrying about
volatility unchanged. Even the S&P's down 17. Interesting market here. Volatility not catching any bid here as even the S&P's and Nasdaq continue to go lower. Russell and the Dow are higher. Dare I say? Because I was I felt bearish this morning.
Now you're a little bullish.
I'm a little bit like maybe we don't go anywhere. Maybe that SPX trade is actually the trade to make, which I was really a little bit afraid of when I put it on.
All right, so we're in at 27 cents on that silver trade. Let's do GLD.
Beautiful. And you can see that Netflix trade come through there. You see the Tesla trade, the Q trade come through there, all on the Johnny trade. And we'll get that last trade in there as soon as I can, too.
GLD, you want to do like 20 delta for the shorts?
Sure.
I mean, I think this warrants a position.
Gold IV rank of 55 is quite good.
Yeah, and you'll see, when you have something that has relatively high implied volatility, 40 some odd days to go till expiration, and you're going to somewhere between the 20 and 30 delta, it goes to the question we get all the time of like, I can't find the 1/3 the width of strike. It doesn't exist.
It always exists, by the way.
The what?
1/3 the width always exists.
Always exists.
Yeah,
across the board.
Credit.
It's just relative to how close you are to the stock.
Correct.
So when volatility is low, when this IV rank is 10, these spreads are going to be 10 points in the money. You're going to be at, or closer to the money. You're going to be at 420 and 390 as opposed to 385 and 438. It's just relative. That's where people get caught up. It's like, oh, I'm too close to the stock. And it's because you're looking at something that has low implied volatility. So here, we're going to the 20 delta. We're going 10 points wide. We're going to collect around $3 in credit. Pretty cookie cutter here. 385, 438 are my upper bounds here. We're going to start above the mid price, work our way down. You can cancel replace from the analysis mode that we have here too. You can see me doing it here. Just right click on that little flag here.
Bonds down 17.
I bet you didn't know that one either.
I did not know that one. No, I don't know a lot of these. You really teach me a lesson every day when you do this. I'm forever grateful to you.
All right, so we did. That was kind of sweet. That was kind of cute. So we did neutral delta and gold.
Well, I need you to take your brother to practice tonight. It's at 9 o'clock because I'm going to be asleep.
I'm going to be watching the Miami game. All right. You're going to have to walk.
See? There we go. I tried.
GLD, neutral delta, iron condor. We did SLV, which we'll call neutral / slightly bearish omnidirectional.
Sure.
With the butterfly that we did for a small debit. Wide put spread in Netflix into earnings. That's our long delta trade. Should we try and get I guess the silver is kind of a short delta trade.
Yeah, silver's kind of a short delta trade.
You got anything we could do like some?
You can look at GameStop. You can look at Rivian. You can look at RKT, SoFi, JD. You can go back into you did the Qs already.
Yeah, let's do
the SPX trade. Go ahead.
What about doing? Should we do like a call spread in SPY? Only got like a short delta. So I have a little bit. So overall, and if we look at just my delta
of my positions here.
So your delta of your overall portfolio.
Yeah, so you got beta weighted delta here. You know, I'm basically flat.
Pretty flat. Maybe SMH gives you a little bit of short delta.
Yeah, SMH gives me a little bit of short delta here. Should we do like a wide iron condor and SPY? 40 some odd days.
Ivy rank of 15. I think you get a better opportunity to put something in there in the next week. I mean, it's 43 days to expiration. I know you're itching to put on a trade, and that's what happens when markets are relatively slow. But I don't think you push it.
Need about $20 more from MU, which is 1 day's worth of half a day worth of price action in that freaking stock.
Good job out of you. Even the S&Ps, let's take a look at the market here. Down 12 in the orders. NASDAQ down 200 and change. Russell up 10. Dow up almost 70. Got a tug of war between the Russell and the Dow. NASDAQ, the weakest of the group, down 230. Let's see what's moving the NASDAQ to the downside. It's some usual suspects like APP. AppLovin down 13, AVGO down 10, Meta down 10. Did you want to do something in Meta? Was that one?
I did it yesterday.
Okay, good.
Pulled the puts, the 475 puts.
Got it.
Out about like.
SMH down, Oracle down 5 or so, Microsoft down 5. Out of the Microsoft trade from Tuesday's option trades today. So kind of picked the lows, picked the bottom, got lucky there.
Should we get back in?
Say again?
Should we get back into it?
In Microsoft? Yeah, you certainly can. Ivy rank of 32 is good, not great. It does have earnings January 28th. Microsoft, you know, it does have a good high correlation. I mean, decent correlation, 0.40 the overall market, but nowhere near its highs. This was the point that I was making when we got long and when I was trading closer to the lows just 2 or 3 days ago. You know, just a stock that usually is a leader of the market. If you thought the market was going to catch a little bit of a bid, which we both did,
back down to
earlier in the week.
475.
It was it got as low as 476 today.
So,
it's 478 right now. So if you look at the sales, maybe you put it.
What do you think of this? So you did that Jade Lizard.
Yeah.
Short the 445 put, the 485, 495 call spread. You did that at $11 on the 6th.
That's correct.
You bought it back.
Use a lot more buying power if you do that in a Johnny trade account.
No, I can't do this in the Johnny. I'm talking about our show account.
Okay.
So you did that at $11 on the 6th. On the 7th, you bought it back at $9.50 and change to be $150.
Yep.
It's now back at $10.50.
Oh,
it's 50 cents below where you started it.
Yeah, it's a decent
scalped out of it.
I don't hate the trade putting it on again. I agree with you.
32 IV rank.
Yeah, I agree with you.
Let's see if we get filled at 10.50.
Cool. I mean, the S&Ps are down 6, so market catching a small little bid here. Volatility.
This is not a trade, by the way.
In by 11 cents.
Big boy trade.
It is a big boy trade. It does use a lot of buying power.
Yeah.
That's the other caveat. Let's take a quick 90-second break and come back. We got more Tasty Live. What comes up next, son? A market measure.
Market measure.
Even the S&P is down 4. Volatility in by 10 cents.
Cool.
Take a quick 90-second break and come back. We got more Tasty Live immediately following this message.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
everybody. Happy Thursday to you. Tim Knight here, and we have a very mixed day on our hands today. Small caps are the king, and tech stocks are weak. The NQ's down about 1%. The RTY's up about 1%. It's a real mixed bag out there, and it's been a quiet day. As I said, tomorrow probably is going to be the big one of the week. We've got the jobs report an hour before the opening bell, and I don't know if there's anything more definitive. The last I checked, the Supreme Court might report on their own ruling with respect to the legality of the president laying down tariffs, which historically has been Congress's job. But that should be interesting. I checked out kind of the betting market on that, and it seems that I think it was 77% probability that they would say, no, he can't do that. Although I've also read that it's not going to be a absolutely nothing and absolutely, I think it's going to be just a muddle. Sort of, kind of, he can kind of do this, et cetera, et cetera. And I assume the market doesn't care that much because I think if the court came out and said definitively he has no business doing this at all, Control Z, all these things, I suppose the market would freak out. But I also suppose that the president's staff already has plans for what to do if that happens in terms of other routes to go about the same objective. But should be an interesting day. I've got a little shorter list than usual today because I'm tired of running out of time. So let's thumb through them at a bit more of a mellow pace. If there's a theme to my own trading, first is light. I've been pretty cautious so far this year. I don't really feel in sync quite yet, so I'm taking it easy, kind of a 60-70% commitment level. But if there's anything I'm shorting, it tends to be in the semiconductor zone. So today's going pretty good in that respect. We'll get to that in a moment. Let's start with the king of the day, which is small caps. Here's IWM. Intraday has sneaked to lifetime highs. On a closing basis, it might close at a lifetime high. This was the former lifetime high close here. We're just about there now. Who knows? It's certainly not blasting above this intraday peak, but it's done the deed. It's poked its neck to a level never seen before. So the small caps are doing quite well. What on earth is this line? Oh, it's moved. Okay, we'll just move it right back to where it belongs. Okay, like so. All right, so that's where that is for the IWM. The spider sneaked to a lifetime high yesterday, but it closed weak, and it's actually down a teeny little bit right now, 0.06 of a single percentage point. You can see it's just kind of hanging out here. Like I said yesterday, it was going to be a quiet day. There's just nothing going on. Little bitty, almost a doji there, very little range, just Snoozeville incorporated. Overseas, the emerging markets, EEM, this is also down a little teeny weeny bit, 0.07%, very similar to the S&P 500. Lifetime high on that one was on Tuesday. It's a real snooze fest. I mean, it won't be for long. Like I said, tomorrow could get interesting. And then, once a quarter, we do get an earnings fiesta. So in 2 or 3 weeks, things will be really cooking in that respect. And we can all look forward each day to 2 or 3 big pieces of news from the corporate scene. But as I made mention at the top of the show, tech is weak, which is a real change from last year. The cubes are down about 0.75% right now. Our old Gap friend has not once been sealed or breached. Yesterday was as close as we've gotten in a very long time. Got a bit of a shooting star going on right there, and we're slipping today. We're basically, right now we are where we were on Tuesday. So Tuesday, Wednesday, Thursday, nothing. Net, no change, as you can see. But this is the, let's just draw, and whoops, hello, wrong place. Let's fix that. Like so, something like that. Okay, so there's our right triangle pattern. What the bulls want to see, and I don't, is a cut above this gap. That would be pretty powerful because techs have some catching up to do, and that gap has been a real barrier for months now. What the bears want to see, if I can dare use the plural, if it's anybody besides myself, is a failure of this line, which wouldn't take too much. One more day like today would do it. Hasn't happened yet. We bottomed way back here on the 21st of November, and we've been making a series of higher lows ever since. So we're kind of bound up in this and getting tighter and tighter. It's got to resolve at some point soon. So let's drill down a bit. Semiconductors, SMH. Now, semiconductors, unlike the cubes, were at a lifetime high recently. The cube's high was like late in October, way back. Tuesday was a lifetime high for semiconductors. We lost a little yesterday. We lost more today. We're down 1.77% on the SMH right now. I've moved this line up some. Interestingly, so we jumped on Tuesday above this line, and we found support at this line now. So this little cluster shows this is fairly meaningful support. A modest down day tomorrow would cut through support, and the more important failure would be to get below this gap. But that is held up so far. But it is down for the moment, so that's helping. And there's some individual ones that have been just red hot, white hot, that are slipping, like Micron, MU. I'm short this, down over 4%. Yesterday was the lifetime high. We've got a bearish engulfing pattern on this, and we've kind of gone back to where we were at Tuesday's open. So Micron's slipping a little bit. I mean, it's gone up hundreds of percent, so 4% is like, just a nick, but it is something. NVIDIA, the king of kings, is down 2.25%. And we've got this kind of sloppy pattern going on right here. It's been going for many, many months. For a while there, NVIDIA could really just do no wrong. And it peaked just like the NASDAQ on October 29. And it fell quite hard. It's recovered some of that, but it's starting to slip again. And this possible distribution top has been grinding away since mid-July. So, half a year of just nothing, just grinding around without much direction. It would take a lot to get below the support level. But hello, Mishka. But we're right in the middle of that range. The joys of puppyhood, right? You'll hear some sound effects, but she's adorable, so forth. I don't think she'll come. If she comes in, I'll grab her for you and show you. Okay, what's next on semiconductor ON? This one is slipped a little bit. It's down about 2% right now. Peaked on Tuesday, like a lot of other stuff. But I've got a short position on this one too. And a younger one, ARM Holdings, ARM, is also down about 2.5%. Good heavens, child. And this one, I'll close the door if this keeps up. I am operating on a couple of dozen fewer IQ points than usual. I try waking up every 90 minutes all through the night. See how it affects you. That's the boat I'm in. But this is the distribution top on this one. Again, this is ARM, and it is slipping nicely. And I've got great hopes for this continuing on. It has a history of doing this after these big tops, so we'll see if that shakes out or not. I mean, we're just almost all day long, like I'm glancing at the NQ, almost the entire drop was in the first half hour of trading. And we've just been grinding around ever since. So everyone's waiting for tomorrow, I suppose. Getting away from semiconductors a bit, one item that I'm also short, gave me a bit of a scare this morning, but it's doing well, Palantir, PLTR. Now, Palantir peaked just a few days after the NASDAQ did, right up here. Had a huge plunge and an almost entire recovery, and it's starting to weaken again. Alex Karp, the CEO of the place, has been very vocal about what the problem is, and it's shorts, of course. That's the problem. Bears, both of them. That's who's to blame for any weakness. So yeah, it is true. We bears are a powerful lot. We control the market. We can make it go up and down at will, but we're financial masochists. So we've made it go up for the past 300 years. So anyway, he is full of baloney, I would say. It's just an annoyance for me whenever heads of companies blame short sellers for their problems. Give me a break. It's an exceptionally richly valued company, to put it mildly. Some have called it the most overvalued company to ever exist. That's probably a little bit of an overstatement. But I am short this sucker, partly because I'm annoyed at Mr. Karp's ludicrous pontifications. And so we got a bearish engulfing pattern on this, and we'll see how that goes too. What else besides Alex Carpenter's giant frizzy hair? Dell, there's another one. That's a good one. Dell is down about 0.75%. It has slipped. It has slipped just below the snoring. I bet you missed the snoring. It has slipped just below support here. This is a very nice head and shoulders pattern, quite large. I think it could have months to play out, but I am short this too, and it's a lovely pattern. SanDisk, I have no position to this, but I just wanted to make note of it because it's been extraordinarily strong. It has an intraday lifetime high today, but it's got a bit of a bearish engulfing pattern now. We'll see how much of that recent pop it gives up. This is the key. It's got to stay above the support. And so it's well positioned, but if it sinks back into that pattern, that could be a warning sign. And one last one of Shortland here, Vistra, VST. This one is quite interesting because it's had this rather violent move down, big ups and downs, but clearly in a downtrend measured in many, many months. And we're down again today, 2.6% on Vistra. And historically, and I'll just rough these out real quick. Historically, we have had some instances of some nice tops in this. The prior two didn't produce too much of anything, but this most recent one, maybe it's got some more potential. Okay, moving on to the wonderful world of shiny things. Gold, GLD. Maybe there's not going to be a need for a drop. Perhaps the just kind of hanging out in this zone is enough to digest those gains. That would be particularly bullish if it didn't even bother getting below this line. 5,000, 6,000, 7,000, many prices are possible for this. I think that, as I've said over and over, there's a big signal going on. Something big is taking place under our feet. I don't know if it's entirely clear what that is, but I think gold and silver have been trumpeting it. And it is hanging in there. It's up about 0.5%. And except for this brief sojourn beneath the line, it's been comporting itself quite admirably. The miners, GDX, are down just a teeny little bit, but here too, they have opened weak and closed strong 3 days in a row. Green, green, green. So once again, just kind of holding this ground, not retreating, no sellers to be found. And the same can be said for silver. So you look at SLV 3 days in a row, weak open, a lot of drama, a lot of selling, and then you start buying it up. Green, green, green. So we've been falling, but rising at the same time. The buyers are still there. So kind of fascinating to watch. In a way, a little bit of the same thing happened with Bitcoin just today, because we did open down in the 80,000s again. We have clawed our way back above 90,000. We're at 98.20 on the futures right now. A little bit of a hammer right there. But for some months now, we've been just mired at around the 90,000 level, plus or minus about $5,000. It's really kind of lost its mojo. Okay, just to wrap up in the last few moments here, we're going to end on time here. I'll just end with the superstar of the day, RTY. Small caps, looks like a lifetime high close on this, certainly a lifetime high intraday. It's all about tomorrow at this point. Can it extend this? Can it pad those gains based on a favorable jobs report? ... favorable Supreme Court ruling. We shall know by the time I see you again. I think the Supreme Court's not guaranteed, but jobs report pretty much is. All right, well, good to see you, and we'll close it out tomorrow. Thanks for swinging by. Good night.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, Did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm. Boys, turn up the charm. Listen up, y'all, get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, my friend, we are back, and it's been a grind of a day. We've got E-mini S&P 500 futures exactly unchanged here. They're up about 50 cents. You got the NASDAQ, the weakest of the group, down 155, a little over 0.5% here. Dow up 270. That's about 0.5% to the upside. And the Russell, the outperformer of the group, up 1%, 26 points to the upside. Oil actually catching a bid in the last hour or so, 30 minutes to an hour, up $2.45, 58.45 here. The high of the session, about a 4% move. Volatility futures have remained pretty sticky. We did have a 17 handle for a quick second today. Now kind of in the middle of the range here, 1654. Bonds down 16 ticks. Gold has actually rallied back. It's up $22 now. It was actually down about 30, 40 handles in the overnight session. We've had about a 75-ish point intraday range in gold futures. So pretty big move there. Silver as well, only down $1. It was down at about 3 or 4 at one point today. It got down to 73 and change. So big range there. Bitcoin has had some pretty wild action here from high to low, 89 to 91, almost 92 at the high of the session here. ETH as well, down $44, has had a similarly large 400-ish point range, $400 range here, about 10%, 5% on each side there. And then VIX, 1536. What do you make of this? It's been exceptionally low volume.
Yeah.
Pretty much all week. The E-minis right now, I think this is probably our most active day of the year thus far, at 1.1 million here going into the close. So we might get like, another 100,000 contracts or something like that.
What do you make of this market? Tomorrow's employment numbers. You got tariff decisions at the Supreme Court. What do you see anything bad, or is it just more upside here forever?
Well, the numbers aren't. The numbers are weird because it's a 40-point move through tomorrow, which is it's not nothing, but we're still in a low VIX environment. But when you look at tomorrow's 40-point move and then you weigh it against the move through next Friday, which is only 90 points,
they're
pricing in half of the implied volatility tomorrow for the range. So that's interesting. I think the tariff stuff actually is pretty interesting because if you look at some very specific names, Costco, mooning, Target,
up $40 today or 35 right now.
Yeah, Target up 3%.
Oh yeah, wow.
Nike up 3%.
Bailing me out.
Lulu up 0.5%, but that one's been dead forever. So like the products that have been hit the most from negative tariff narrative are now reversing, at least some of them. But I mean, your Costco, your Target. Do we have a Walmart up a little bit?
Actually,
non-event. But yeah, I think that's kind of interesting where you're seeing some very strong moves in some specific names that are kind of related. So it's interesting. Other than that, I think we'll see, more chop. I really think the market is kind of waiting for this next earnings cycle because you started the year with JP Morgan just like ripping to the moon. Now it's kind of come back to earth. Bank of America, Wells Fargo, Goldman Sachs, like all of those products were just ripping to start the year.
Yeah.
And those are the first to report earnings. So it feels like a wait and see until we get more data from some of these bigger companies that kind of rule the world here.
Just to give everyone an idea of what's moving today, I like to go to the S&P 100 list, market indices, and then you go to the S&P 100. You can do the 500, you can do the Russell, you can do whatever you want here. I use the S&P 100 just to give you the top 100 stocks here. Got a couple names on the downside here of note. Intel has had some wild action over the last couple sessions. AVGO has been kind of out of favor here. Palantir, AMD, Eli Lilly after rallying yesterday. You got NVIDIA, Oracle, CRM. I mean, there's some big names on the downside here. On the upside, a couple of the more cyclical stocks here. You've got like some of the oil names catching a bid. You said Costco as well. You got the complete reversal of all the defense names. LMT up 20. It was up like 30 or 40 at one point today. Some of the tariff stuff, as Mike mentioned, Nike and Target on the top of the list. So certainly has been a mixed bag today, but some big moves like, Micron is down 12 or, is down about, I think it got as low as like $15, $20 to the downside, but it's like 30 or 40 points off of yesterday's high. Some of these chip names really taking it on the chin today, which is usually my that's not a good sign.
Yeah.
The chip names have been kind of our bellwethers. NVIDIA at 185. Apple, have you looked at Apple?
Yeah.
Apple's at below 260 right now. I mean, it's had a pretty decent sized down move, 10, 15, 20% over the last month.
Yeah. 5 straight red days in a row.
Yeah.
I mean, today's technically, I guess we're closing higher than the open, but we're still lower than yesterday.
Yeah.
So yeah, it is very interesting. And you had your initial rip in IBIT, Ethereum. Those have come down a little bit too. So yeah, it just feels kind of like a meh.
A meh day.
A meh.
It's waiting for tomorrow.
Yeah.
Were you guys able to put on any trades today during the show?
Yes.
I've been pretty sparing with the trades. I got a AVGO position on today. I did a Google trade, closed out of a number of things in CL. I was short some NASDAQ into today, which ended up working out. I'm now short the Russell because that pig can't stay up if the NASDAQ's going to be down. Come on. But anything...
Bless you.
Sticking out to you here?
Yeah, so we had a viewer submit some crab trades. So we got
beautiful.
I got a new crab trade on net.
Net.
Yeah, these are longer term. These are like pre-earnings pump trades.
What are you doing in net? I did because I got long CrowdStrike. So
okay,
net is another one. What were you doing?
So they're both cheap. This one I like a lot. This one's a March 220 call.
Okay.
And then a Feb 240 260 crab component. So it's a
240. Okay.
260. So it's a 20-point wide crab trade for $300.
Okay.
Which is nice and spicy. And then the same setup. Long.
Yeah, it's
it's nice.
A cheapie, little shot trade.
Yeah, cheap with a lot of upside if it rallies into earnings. And then same setup in Palantir. So Palantir, long March, short Feb, the 210, 220, 230. So that's a 10-point wide for $3. But both of them are $3. Longer term trades. Pretty asymmetric risk reward to the reward side if you get that rally, just because both of these trades are $300 and they're so long term that even if they continue selling off, it's not going to go to zero.
Mm-hmm.
At least in the near term. So
I added. I just sold the 160 puts in net for 451. So I'm gonna participate there. What'd you guys do in Palantir? You did the upside crab trade.
Yeah. Same thing, long March, short Feb, the 210, 220, 230. And that one was also a $300 and change debit.
Yeah. Move this. I think I might go a little closer.
Yeah, you can go closer. Totally fair. These ones were a little further out of the money just because they're 70-day long options. But yeah.
I think I'm going to do the 190, 210, 230. I'll do it for like $6. Yeah, 608. Auto-filled. Ooh.
Ooh. That's what happened to me too. Yeah. And I said, I no longer like this trade. But yeah, outside of that, I made an adjustment in the year-long MES strangle.
How did the IBIT?
It's good. I need
to do that for you.
I think next Thursday, because we'll be on last call. Next Thursday, we can do the IBIT.
Okay,
review
that's good.
Because we can do it quick.
Yeah.
But yeah, ultimately, IBIT closed at 50. I had a 65 short put, but I collected $3,000, so I made $1,500 on probably
And you had that mostly a strangle the whole time.
Yeah.
And you were I
was moving up.
You were moving up into the up move, and then on the way down, did you just have the put?
Yeah.
Okay.
Pretty much.
Nice.
Or I moved it to a straddle if it was a strangle. And then the only adjustment I made was I went to a 5-point inversion with my current setup. But yeah, I've leaned very bullish in there the whole year, and IBIT ended lower than it opened on the year, but still doubled kept 50% of the credit. So it'll be a good example of implied volatility premium really being the key factor there, since I had a 15-point in the money short put. And I still made $1,500 through the year.
Can't ask for more than that.
Yeah, so I'm still in that. I'm going to stay in that this year too. Just because why would I not? Mm-hmm. And then the MES position, I just moved it to the end of the February monthly cycle, and I moved it up.
What are you doing there? Strangle or
strangle?
Okay.
So I have the 6650 put and the 7200 call. So just shifting up a little bit.
Okay.
And yeah, already collected $700 so far, which is 140 points in the E-minis.
Very nice.
But yeah, those are the trades of the day.
E-minis.
In the micro E-minis, yes.
E-minis are 50 a point, so big boy contract.
Yeah.
As we get into the last little 10, 15 minutes here, E-minis have downticked 3 points. The NASDAQ, still the weakest of the group, down 160. Dow up 245. The Russell up 26. Did you buy any oil into the dip that we had in the last couple of days? You're a big MCL guy.
So I've been long MCL.
Okay.
So I'm in. I've been long for 23 days.
Okay.
But this was from a previous contract. So I actually rolled into the G contract, and then I threw on a call ratio. So I threw on the 55-57 call ratio, and that is coming in nicely. So I've got the long contract at 55, plus the 55-57 call ratio expiring in 6 days. There's still 80 cents of extrinsic value in that call ratio, so I'm just going to leave it to extract, I should say, out of it, and then I'll just close the trade once that's done if we stay above 57. But yeah, loving the rally today in there. I should make like $200 net, even with the roll from the previous loss position.
Yeah, I'm thinking of putting, because I sold puts into the move yesterday, took them off this morning. I wish I held them. Hindsight 2020, but into this move, I'm thinking maybe adding an iron condor. You got an IV rank of 26 on the oil futures here, so it has certainly upticked a little bit. The 5-day IV change is up 8%, so you have had a little bit of a pop in volatility here. All else being equal, the rest of the market basically zero vol across the board. I'm thinking maybe like, depends on how far I want to go. I might go to like the 20-ish delta. So you go like 53, 51, 65, 67. It trades at about 48, 49 cents. It's 2 points wide on the Iron Condor here. So you have $1,500 of risk, 500 or a little bit less than 500 in total potential reward. How does that sound to you?
I like it. Yeah, I mean, we've been trading in this range. Like, we've had our ups and downs, but Thomas, back in like October, into the sell-off, Thomas Westwater was like, yeah, I think this will be the new range, like sub 60, mid 50s. And that is what's happened. So until we break out of it, I think the implied volatility is there still, and you can create a nice channel.
Yeah, I just got filled on that. The 53, 51, 65, 67. I did that at 48 cents, which is $480. It's each penny is $10. 10 multiplier there.
Yeah, and you cover the entire range that it's been trading in for 6 months.
Yep, exactly. Any other Westwater? I've missed my fix of Westwater. Like, I haven't done a grains trade. Like, I haven't done anything in any of the ags. Natty Gas has been like sparing in terms of my trades.
Yeah.
Any insights from the Oracle Westwater?
We haven't talked about the grains or anything. I mean, they've been tough to trade because they've been so one-sided. But yeah, we talked about oil on Tuesday and just had a quick session on that. But yeah, we were looking at maybe buying the dip there and just trading this range, continuing to trade to the range here, considering all things that are going on in that space. But yeah, other than that, just I'm in the crude with that position, and I'll be looking to buy dips as we get to lower 50s levels, and then the micro E-minis is the only other futures position I have.
How has your FX trading been? Mine has been, I was on a heater, can't lose type thing.
Yeah.
I've given a little bit of it back. It's still been great.
Yeah.
How do you feel?
I feel great because I'm sticking to my guns, and I will not close a trade unless it's a winning trade. So with that said, I had an initial long dollar franc position.
That came in today.
It came in today, and I've had 3 tranches on that. So I now have 15. I have 15 micro lots. I'm still down 80 cents on it.
I actually have the same amount, and I took some off today. I had 19.
There you go. I mean, technically, I guess I could remove one of these legs, but I have $80 left to make back, and I was down $300 on this thing. So it's moving in the right direction, and I want to lean on this because I will not close a trade if it's a losing trade. But yeah, Glenn got me into the long dollar short peso.
I did that too.
Nicely.
Are you long that?
Yeah.
Yeah, I'm long that too. He pitched that to us this morning too. I was like, all right, that's the kind of stuff I need. I want to get on the fringe.
Yeah.
I want to be on the fringe stuff.
Well, apparently, like the peso actually had big gains for the first time, or like the biggest gain for many, many years.
Okay.
Last year. But yeah, also along the euro pound, that's flat. And then I'm even spicier. I'm long the peso over the yen.
Oh, good.
Yeah.
The yen, I'm done trading the yen.
Yeah.
Well, that's off my board. Done with that.
But yeah, it's good. I'm just trading super small and just holding it perpetually and collecting pennies on the dollar on the overnight carry, especially in the dollar franc, because that's a nice positive carry.
Yes. We have a big promo going on. It's called The Big Deal.
It is a big deal.
Yeah?
It is.
What's it about?
4% cash match on qualifying deposits. 30 days commission-free trading.
Yes.
But yeah, 4% match up to 10K. So come one, come all. You have a nice deposit window too. So if you wanted to gather funds, do whatever you need to do. But it is nice. The 30-day commission-free trading thing is nice because it allows you to test out things you want to trade, futures products, equities, ETFs, whatever it is. Check it out. You can scan that QR code on the screen or just go to tastytrade.com/big deal. You'll see all the terms and conditions there.
And we've got some other promos coming up very soon as well. Are we allowed to mention maybe a teaser? No.
We'll table it. But
we'll table it.
But it's very exciting.
It is very exciting.
We're working on people.
Yes, we're working on our peeps. For all you watching, I know a lot of people have been chatting in like, if I'm watching this, I already got my account, obviously. We're working on it for you guys.
We hear the what about existing customer thing where we hear you and we're doing stuff.
Yes, and we're we're pulling the strings for the powers that be.
Yes.
Yes.
We do actually currently have existing customer stuff. We have the referral program.
Yes.
There's another one. tastytrade.com/referral. If you bring in a friend and they have a qualifying deposit of $2,000, you both get $100. So that's a nice one. Hopefully that eased the pressure of talking to estranged uncles and aunts over the holidays. You just throw them with this referral code bonus and either start or end the convo right there.
Yes.
But yeah, tastytrade.com/referral. You can also scan the QR code and check it out. But that's a good one too.
Got some good coming for you, fam. As we go into the close here, we got about 6 minutes until the close here. E-minis, much of the same here. Up a point. You've got the NASDAQ down 144, the Dow down 200, or the Dow up 272, and the Russell up 28. Oil continuing its move higher here, up $2.65, basically the high of the session. Volatility futures down 15 ticks, basically unchanged on the day. Bonds down 17 ticks. You got gold up 22, silver down 97 cents, and Bitcoin actually rallying a tiny bit here. Futures basically unchanged, down $100. Spot is up 100. Just kind of choppy day.
Yeah,
is my take. No earnings after the close. I guess if you want to trade Tilray, that one is after the close today. I think they've had like 15 different splits. Stocks at 9. I think if you split adjusted that, it would probably be at 9 pennies.
Yeah, the banks are January 13th, 14th, and 15th. So that always
Tuesday next week is like the start. Delta, JP Morgan.
Because that'll always kick off. When the banks announce, the next week and the following week, that's when you get your Mag 7 stocks and hundreds of others. And that will likely kickstart 2026 trading.
Yes. Yes, no doubt.
Tomorrow's expected to move 40 points. Inside or outside, up or down?
I think you get outside down.
Oh, wow.
I don't know. I talked about it before, and Josh is pointing out in our chat here, the VIX one day having a pretty big move today. You can see there's a little bit of volatility getting pumped into tomorrow. The VIX one day is it's a funky index. I mean, it's VIX style, but it includes the options that are expiring today as well as into tomorrow. So it's 0 plus 1 day volatility. So it does tend to kind of increase into the close, but you typically don't see it move like this into the close. Getting a little bit of a bid in some protection into tomorrow or speculation into tomorrow. It could be both sides, will be both sides. So that's a good thing to point out. Good little spot to look.
Yeah, that is actually interesting.
Yeah. I think it's inside down or outside down. And I tell you why. You got Trump throwing grenades. You remember in the April, kind of March, April area, I don't look at the stock market. You know, we're doing this for Main Street. He was kind of like just like lobbing grenades. It feels kind of like that right now.
I mean, there's supposed to be some kind of announcement tomorrow, and that obviously
with the tariffs.
Yeah, and that's gonna do something.
You would
to the markets.
You would think, but the market's done much of nothing.
Yeah, I'm on the other side. I think it's outside up.
Outside up.
Yeah.
Do you think we finally blast through 7,000?
Yeah.
7,100.
Yeah, I think
7,200, something like that.
I think there's a reason why
vol is so low.
Vol so low, and Costco, Nike, Target, they're all ripping today.
Yeah. But is it good? Is the tariffs coming off good? That's the big question.
We're gonna find out tomorrow. But I think it's outside up. I don't think it's crazy, but I think we'll be up like 50, 60 points tomorrow, which would be stupendous for a lot of these positions I'm in. So that also, maybe I'm biased.
Okay.
I forgot to mention, we were on the SIBO float today, and I threw on a stupid. So that also plays into.
What'd you do this in?
That's the end of January.
End of this January or next year?
This January.
Oh, okay.
January 30th, end of month.
For what?
For SPX.
SPX.
Okay. Yeah. 67.50, 67.40 put spread.
67.50. Okay, end of month. 67.50. Okay, so right at the expected move.
Mm-hmm.
Yep.
And then I bought the 7100, 7105 call spread.
71.
So just a little outside up kicker.
Did you do this 10 points wide, or what'd you do this?
The call spread's 5 points wide.
And the put spread is
10 points wide.
Is 10 points wide.
Yeah. So it's a 60-cent credit. I got filled at 55 cents.
Yeah.
But yeah, if we get a rally over the next couple weeks, this will be a couple $100 winner, and you take it off.
And the reason we call this the stupid, which that'll be determined in hindsight.
Yeah.
But it's double bullish. So you're selling a put spread to finance buying a call spread, and doing this for a small credit gives you this kind of break even, or this basically, scratch area in the middle where you keep 50 cents if the market stays, above your short, but out of the money to the call spread. But if you do get a move higher, you have up to $5 more that you could potentially make on a move above 7,100 because you have that call spread there. So it's a double bullish trade, aka the stupid. You could also do a stupid to the downside, selling a call spread to buy a put spread.
Yeah.
Same sort of trade there. It's just a double directional trade.
Yeah. It shifts your credit spread risk profile, which can be slower, into a faster moving trade, because if you get the move in your direction, your put spread, in this case, your put spread depreciates in value and your call spread appreciates. So you're shifting your max profit from the put spread to really the call spread you're buying. But you're doing it for credit, so you have no risk in the middle.
As we get into the close here, we got about 30 seconds here. E-minis are down about a point. You've got the NASDAQ down 150. You got the Dow up 264. The Russell up 29 here. Oil staying high. You got vol futures at 1650-ish. Very much an inside day here in the E-minis for sure, going into tomorrow's festivities. And that is the bell. E-minis basically unchanged, 69.62 right here, down a point. Nothing. That's good. What do you say we take a quick little 90-second break, come back, and we'll do this in the morning? Stick around for overtime?
Sounds good. Yeah, I'm interested to hear what the overtime boys have to say about the tariff stuff. So stay tuned. But yeah, let's do it all again tomorrow.
We're going to take a quick little 90-second break. You're listening to Tasty Live. We'll see you in the morning.
of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was awesome. Not a paid, you're not getting paid for this advertisement.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Stocks rebound, vol futures fall flat, and the gold silver rebalancing, is it over? It's Thursday, January 8th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes as we wind down the trading day. I haven't said this in a while, Ilya. If you're watching on the platform, welcome. If you're on YouTube, please join the chat. Tell us what you think of this market today. Somewhat of a rebound in volume. The NASDAQ slacks off. It's the loser on today's session. Down only 0.5%, a recovery off of some of the lows earlier. It's a day of rotation, though, Ilya. Trade data comes in. Deficits are being cut. What's that? Atlanta Fed GDP now growth tracker sitting at 5.4% for the fourth quarter. Good news for small caps here. We likewise see a bounce in oil following the last few days of back and forth price action. Small caps, particularly oil stocks, had a nice little bit of a day. So did the banks, Ilya. But the tech stocks, those are the ones out left to dry. We do see that gold and silver had that much awaited rebalancing for some of these commodity indexes. Silver, 10% of open interest needed to be effectively sold off. Surviving that today, gold actually finishes positive after dunking deeper into the negatives during the session. Josh, we can put up the charts here. We find ourselves back to 44.60 here in gold. We hit a low of 44.15 earlier. Silver, likewise, only down 1%. The low was 73.53. We're currently 77.5 cents, Ilya. So a $3 bounce in the second half of the day. Really, all of that came right between the 2 p.m. Eastern and the close here. So it's been a nice little rebound over the course of the session here, 2 p.m. Eastern. Onwards is where you get your bounce in silver. Other than that, the dollar appears to have turned a corner as we think about the greenback pushing through its 50-day moving average.
We talked about this a little bit yesterday, in particular with the euro.
Yes, the euro falling apart, the pound potentially joining the party now, the yen likewise still
Aussie
facing
too.
pressure. Aussie's down. It's not part of the DXY, but we flagged this earlier on Futures Power Hour. Kiwi dollar looking like it's got maybe a little bit of a head and shoulders-ish type thing going on here. So the dollar may be on better footing with yields not going anywhere. That is also one of the points to make today, where Treasury yields are just kind of creeping back up to the top side of the range over the past 5 or 6 weeks. All right, Ilya, I'm done talking. What's the big news today in the market? Is it that yields are up? Is it that the metals rebounded off the lows? What are we working with here?
I don't think it's that we have news today. I think it's that we will have news tomorrow. And what you're seeing this rotation telling you, I think, is the markets are basically getting ready. We are essentially back to about the starting line for kind of the pre and post holiday rotation. S&P basically rebounded yesterday to its December high, has stopped there and is holding. Similar deal for the NASDAQ, although it hasn't made it all the way to December's high. It's certainly reset all of the losses in the last week of the year. Russell is back and sitting right below December's high. If you look at what's going on in gold, we tried to consolidate yesterday. We haven't made any meaningful push this way or that. We're waiting. Crude oil back at the top of its range where it's been consolidating since essentially before Christmas. It popped right before Christmas, formed a range, and it's been holding. I think the most interesting thing here might just be the dollar. Because it is doing meaningfully better and is actually making, at least in the case of the euro, some actual trend type of headway. It's actually crossing some lines. And that's very interesting here because, of course, we're in the teeth of this U.S. jobs report. We got an ISM number yesterday for the service sector that was hot heat. And it's going to be very difficult for the Fed to justify speeding up rate cuts as the markets want them to do, because let's be clear, since Fed policy expectations have stopped getting more dovish, the stock market has stopped going up. It still hasn't made a higher high than the October 29th high or thereabouts. Name an index. And that was when Fed Chair Powell came out and said, you all are over extrapolating. We're not going to cut as aggressively and as much, and we're not nearly on the kind of autopilot that you all think. Go ahead and pump your brakes, everybody. We're not doing this.
How could they justify it now with a 5.4? I know, obviously, we're a ways away from getting that. Well, no, we're not, Ilya. We're not. Like 2 weeks away from getting fourth quarter GDP data.
No, we're not. And here's the
that
really
snuck up on us real quick.
Yeah. And here's the other that shutdown has messed around with all the cadence. And here's sort of the interesting thing here. We get the red hot ISM number. Stock markets don't like it. You can look at where the data occurs. You can look at a 15-minute chart. You can see. Markets go, nah, I'm not going to celebrate that this is good for earnings, good for the business cycle, blah, blah, blah. No. Don't forget, we had a pretty good GDP number for the third quarter. Everything evened out on imports and inventories after that front running of tariffs in the first half of the year. Consumption was once again robust, which was a big concern in the first half of the year. The S&P Global PMI numbers showed a little bit of a cooling in the fourth quarter around the shutdown, but nothing catastrophic. Mid-range for sort of the post-COVID growth dynamic. And so there's no bad news here, but the markets don't want to take away that second rate cut for this year. They just refuse to do it. And so you go, wait a second. What's wrong with you? Why do you want this cut so bad?
How many did Mirren say that we needed this year?
He said he wants over 100 basis points in cuts.
Okay.
That man is the Little Wayne of rate cuts. He makes it rain.
Yeah, that's the past few days, and really for all of 2026, rate cut odds have been slowly bleeding out. We went from like a 3.5 Fed funds rate for year end 2026 when the calendar turned to now like 3.56%. So it's not the, yeah, Mirren. I thought it was Mirren said 1.5% or so. Oh, good. Yeah, that's what we need to. That's
Makes it
exactly
rain.
what this economy needs. But that's the dynamic, Ilya, right? We talk about asset inflation as kind of a North Star. At least I really do think that asset inflation is the North Star for the past few years. That combination of lower rates and just directionally lower Fed rates, coupled with all this government spending still. The macro textbooks tell you it should be inflationary. It should be growth positive. Whether or not it's real growth is a different story, but it should be
That's
nominally
neither here
growth.
nor there.
Right, but it should be
As far as
nominally
defense concerned.
growth positive. So Trump yesterday comes out during the show and he says that we should get rid of dividends and buybacks for the defense companies, which, all right, interesting commentary. And then, of course, a few minutes later, we hear the announcement that the administration is going to be seeking not one, but $1.5 trillion in the next budget for the Defense Department. And so if you were playing the roulette of buying the dip in the defense stocks yesterday after hours, you may have lucked out. But then that's also the context of the macro impost, Ilya. We're running these gigantic deficits already. We're now talking about an additional $500 billion in potential spending, which I don't think the Congress would approve, but we'll have to see when we get there. The Fed is still cutting rates. The composition of the Fed board is changing. If there are more people like Mirren on it, Lord knows that we're going to be cutting rates regardless of what the data says. I have a hard time getting off my high horse here about just buy things that tend to go up when government spending and rates are low. And history tells us it's things like hard assets, it's real estate, it's financial assets. It's certainly not bonds.
Well, this is the interesting thing here, right? Is you get this good data and the markets get the evidence that the world is as you describe it. And yet they don't want to take away these rate cuts. Now, are they not taking away the rate cuts because they think, you know what, White House is going to just stick who they want on the board. They're going to rubber stamp whatever, and we're going to have an inflationary growth spurt. Well, no, they obviously don't think that. Because if you look at inflation expectations, they're back to where they were in early April last year, around the kerfuffle with Liberation Day. They've been falling since August, inflation expectations, when you look at break-even rates. So is the market gearing up for an inflationary overheating of the economy? No. And so why won't they alter this calculus? Are they seeing something that the Fed doesn't want to see? Or, as I've argued, it's not that they're seeing something. It's not even that they know why they want the cuts in a granular way. They just know things look shaky. There's lots of uncertainty, lots of balls in the air. Cheap money would be good if something were to go off course, or at least the possibility of such a thing. I think what's animating gold is very similar.
Could something help accelerate us here tomorrow? I know we have the jobs data tomorrow, Ilya, and that's important unto itself, but there could be a Supreme Court decision. And a few days ago, we were talking about the retail ETF responding very positively on Tuesday when we see that the Supreme Court has added this opinion day. Today, some of the top flyers in this market are things like Home Depot, a lot of consumer-facing stuff for what it's worth. So you have a Home Depot that's up. You have an Amazon that's doing fairly well. Something else discretionary like a Tesla. That's nice. But then you have your Nikes of the world, which are up 3%. Decker's Outdoor Company, again, apparel, sitting up 4.2%. TJ Maxx, 2.73% into a new all-time high. So a lot of
And
these,
then you look at something like Apple, and it looks like the world's most perfect Head and Shoulders.
Yeah, sure. Yeah, the Apple chart looks terrible, right? But
it's just ugliness.
I'm also thinking of consumer cyclical names like packaging and containers. There's a few of these like International Paper. There's a lot of performances here, 6%. SW.
Yeah, Russell as a kind of avatar for names like this is very much the opposite of what NASDAQ is doing, to your point.
But isn't this a healthy rotation? RSP, the equal weighted S&P, was back with a 0.85%
I don't know
gain
if you
today.
can call it a rotation considering how much market cap is in the tech stocks versus in these other names. It's sort of like saying, I am going to take all the food that I had earmarked for this elephant and try to feed it to this chihuahua. Let's see what the chihuahua does.
Is there any read through here though? Because after this data today, a company like John Deere, huge performance. I'm trying to figure out, Ilya, is the 5.4% Atlanta Fed GDP now update legitimate? Because if it is, then there are definitely pockets of the market heading into that GDP report that have been ignored. Right? There's a reason why some of these consumer-facing names are rallying so much today, because people are saying, "Oh gosh, we've been underweight our risk weightings that are sensitive to the U.S. economy domestically." In a certain sense.
Unless what you're seeing here is a pre-positioning for the tariffs getting axed. Because if you look at what's doing well here, it isn't the stuff that really powers the economy. Let's not forget, on the one hand, the consumer is not really weak here. On the other hand, and that's from the third quarter GDP report. On the other hand, the service sector is booming, according to ISM, and that's where most economic activity is. You can look at the CPI report, and it's not just that services is where almost all Americans are employed. Never mind that. It's that most of what Americans spend on is services. That's why consumption is still so strong, even though the goods side is getting whacked by these tariffs. The split in CPI, the most recent CPI data, just to give you a sense for where the pull from demand is coming from. The most recent CPI report gave us a headline figure of 2.7%. 1.84 percentage points of that, or overwhelmingly almost everything, is services excluding food and energy, as compared to just 25 basis points, or just a quarter of a percentage point for goods. So if you took that 2.7% and you threw the tariffs away, goodbye goods, then you still had just about 2.4% inflation. Okay, then you take away food, you're down to about 1.9. Then you take away energy, that's where you get to 1.84-ish. So you've got a situation here that seemingly is domestically oriented. Now, what's rallying today? Well, those names that would have a better time on global supply chains if the tariffs went away. But does that change the calculus? Not really.
Are you adherent to Dow theory about transports being a leading indicator for the market?
I'm not sure how true that still is, but I certainly watch.
Transports here closed at a new all-time high today. Highest closing level ever.
Again, if the tariffs were to go away, a critical choke point for all of that would go away. But that's if the tariffs go away and the administration decides to let them go away, which, by the way, would be a very interesting thing, because we do have the midterms coming up. And what the administration might then do is say, let's just keep the tariffs off until November while we figure out how to put them back on. And then we'll put them back on in December.
Yeah, there's a non-zero shot. I hear you. There's a non-zero shot that you're correct, right? Like that's.
If anybody, I mean, these tariffs are not on for crazy ideological reasons, one would think.
I'm not going to think too hard about that. Yeah. So we have the banks, right? It's the small caps today. KRE is actually the highest close that we've seen going back to November 2024 now. Okay, so this pattern that I know we've been talking about it for quite some time here on the show, but this potential triangle or inverse head and shoulders pattern, not technically the right place for it, but it is a triangle. You're getting that nice breakout back to the breakout level and move up into a new high. And then same thing for the transports here. These are charts that, for me at least, I have a hard time looking at this and saying the market looks weak when it's regional banks and it's the Dow transports that are still pitting to the upside here. So for me, Ilya, heading into the next few days with whatever comes out via the tariffs, I would remind everyone that when Trump took the tariffs off or paused the announcement in early April, the market ripped 12%.
Yes, it did.
Not going to say the market's going to rip 12% tomorrow because there are Section 232. I mean, there's just so many other ways.
There's a gazillion things. And one of the key things that I've been hammering in the past several days, sort of my theory for why the markets want these cuts and why they don't want to embrace this good data that tells you the economy is doing quite well, actually. Night and day better than China or Europe, say. And that's uncertainty. The trade policy uncertainty index is an indicator I've really started watching very closely here because it really captures how uncertainty is weighing on activity without really anything else having to go wrong. So the index still shows tons of uncertainty, even though the overall trend in trade policy uncertainty is obviously moderated. The amount of fuzz and back and forth kind of knee-jerk concern is still vastly elevated relative to history, where day to day, it's much more tied around what the trend average is, much less erratic. So you look at what the effect has been. And 2025 saw a significant decline in global trade volumes, just around the uncertainty. Even with everything having moderated significantly, even with the front running before the tariffs, which gave us historic import numbers in the US. So you put all that together and you go, the uncertainty itself is like a pall on activity. And you take away the tariffs, administration comes back and goes, yeah, we're going to figure out how to put these back on, but we're going to take a bunch of months to do it. That's a whole lot of uncertainty.
A lot of uncertainty, but this is a market where it's innocent until proven guilty.
Indeed.
And until the wolf actually blows down the house, we've convinced ourselves that our building material is brick still. All right. It wasn't in April. It's certainly made out of straw. But for now, we are, Ilya, I mean, I see the low volatility across the board. This does raise a question, though. If the dollar's rebounding and yields are going to break out, is this a reason to think that gold and silver may stutter step over the next little while? The uptrend in silver that we've been watching since late November, this is a ridiculous uptrend. When silver was breaking out, like you told me, we'd still be following the same uptrend that we started during the wedge breakout around Thanksgiving. We'd be here in January, like, oh, that points to $70-something. That's crazy talk. Well, we're in crazy town in the metals world now. So at 76 and change at an 87 IVR, I think perhaps, I mean, and this is for my sanity's sake, because of my long silver positions, I'm looking at something like a short iron condor, which I know doesn't make a lot of sense for typically how I'm approaching this, but hear me out. The range highs are 82.5. The range lows are about $70. If we were to go out on either side of those here, and there's not a lot of open interest in the particular strikes I'm looking at. So, adjustment may be required. But we can size up something where you're risking 1 to make 2. I know it's a 30% probability of profit, but that's just because the vol is so darn high. And the markets are like, we're not going to stick within this range for the next few months. But effectively calling this not as a double top, but a period of stagnation, both in gold and silver. I see the appeal. The only caveat I have is that if this was a rebalancing day and we've already had margin hikes and we've now had all this forced selling and we haven't gone anywhere, then it's probably just a flag. Just like in gold right now, Ilya, this looks like a flag. This is a flag coming out of look at where we're bouncing today. You're a horizontal line guy, just like Josh, our producer. We have 44.25 or so here in those October highs. Look at this beautiful bounce. That's exactly what
I'm still long gold. I'm not going anywhere.
So I'm partial to thinking that maybe silver has some chop, maybe copper has a little bit more chop, but you know what? 5.4% growth. And, the administration today said, I don't know if anyone's paying attention to this. JD Vance came out at the press conference and said that they find that the War Powers Resolution is the War Powers Act is a fundamentally unconstitutional law. So like Democrats and Republicans in times past, the administration is going to continue to conduct foreign policy as they see fit. So this little Senate vote that was happened today, the discharge petition to bring a War Powers Resolution to the floor, is it going to change anything about Greenland or Panama or Colombia or Cuba? Maybe not. The medals to me are, let's get past this digestion window, Mr. Spivak. But this is our last day of the week here. And so we're heading into non-farm payrolls tomorrow. I want to leave it with you to give us a little preview of the data here. I know you're going to be talking U.S. economic data on macro money, he said with confidence.
Yes.
Okay, because we don't talk about this. We don't talk about this thing before the show.
Most certain.
Tomorrow, 60K expected from 64K previously. The unemployment rate is due unched. Actually, a slight improvement from 4.6 to 4.5%. Do we care about these numbers? I see an S&P 500 that is staring down through the end of the day tomorrow, 42 points. Do we buy vol for tomorrow between the Supreme Court and non-farm payrolls?
I haven't changed anything other than buying more dollars. I'm now, I flipped over, thankfully, the euro and the pound. Flipped over the euro last week, flipped over the pound this week from the long side to the short side. I haven't really done much of it. Sold Aussie as well. So I guess I'm short risk, even more so than I was. Got back into a short IBIT vertical. I took a second before rolling it in between, sort of taking the spread that was expiring and putting something new on. Took about a day to get a little bit more conviction. But of course, these numbers matter, and they matter for the same reasons that speculation about the Fed has continued to keep these markets anchored. The debate is unsettled. The markets want 25 more basis points in cuts than the Fed wants to give them this year. The Fed is not flimsy about what they're talking about. They said back in June they only want one cut in 2026. They reinforced that view in September. They repeated it again in December. They're pointedly resisting calls for more. They know what the Fed funds futures show, and they won't go there. They know what would make the markets happy, and they won't do it. Now, the markets, for their part, have said, we're standing firm. To look at the response to ISM. Market said, we're not going to change our calculus. No, you blink. So if we get the same thing now, let's say NFP comes out and it's decent. Stocks aren't going to like it, but if yields don't move, I'm not sure gold cares. I'm not sure silver cares. Stocks won't like it, though. Dollar might rise. And your sound is gone.
There you go. Well, with that, Ilya, we're out of time for overtime, not just for today, but for this week. We'll be back
I've
on
left them
Monday.
speechless, folks.
As we always are, Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading, especially tomorrow around the non-farm payrolls. Of course, Ilya's sticking around here, though, because he's got macro money. He's talking U.S. economic data. Stick around. You're watching Tasty Live.
You're there, everybody.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
The time has come for heavy-duty U.S. economic data. What will stocks and bonds and currencies, what will gold do as we face some proper event risk finally? That's what we're going to get into here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And of course, we're going to take a look at the price action first and foremost, figure out what the markets are setting up for here as we get into this data. And then, of course, take a look at what the tea leaves seem to imply. Not so much even about what the outcome could be. That's for your crystal ball. But what the likely price response might be and what the probabilities look like for that price response. So let's first take a look at how the markets were setting up for all of this. Here's what they did today, and tellingly, it isn't much. S&P 500 stalling ahead of the event risk, NASDAQ off just a little bit. The way you got to that relatively neutral S&P 500 reading was tech had a haircut. Now, a lot of the other names that saw rotation were pointedly outside that space, where it seemed like what the market was doing was essentially getting ready for what is incoming and resetting its bearings ahead of what that might be. Tellingly here, virtually every major benchmark, bar maybe the Dow, which is a weirdly constructed index compared to the other ones, is basically at its decision point from December. The Russell is back to December's swing high. The S&P is hovering at the range that it set mid-December. NASDAQ is the soggiest of the three. It hasn't even managed to get back over the December 26th high, but overall seems to be coiling up into some sort of a spring-like situation, waiting for some kind of a breakout cue this way or that. We get a little bit of seesaw action in the bonds, so yields come up a little bit. But if we look at contextually where that is, we haven't gone anywhere in bonds in a long, long time. Basically going back to the beginning of December, the long end, the 30-year, the 10-year, and even at the shorter end, the 2-year have been locked in relatively sideways drift. So, yeah, we get a little bit of a bounce in yields today. So bonds come down a little. Yesterday was the opposite scenario. So we're just basically treading water here. The big news of the day seems like it's oil. It's up 4.63%. But again, looking at where that actually leaves oil, it isn't very exciting at all. We're basically back to the top of the range that was set somewhere between, let's call it 58.70 or so on WTI and 55, give or take. The range that we've been oscillating in all of December. And if we look at it a little bit more broadly, going all the way back to late October. As a matter of fact, the April lows, the Liberation Day tariff bombshell lows for crude oil are at 54.61, and we've basically been sitting just above that level since testing it mid-December and going nowhere. So, needless to say, with Venezuela and everything else going on this week that's semi-oil relevant, we've had a lot of volatility and a lot of chop back and forth, but this jump in crude oil doesn't really amount to much of anything in terms of a convincing trend move that would beckon buying or selling something. Gold, also in consolidation mode over the past 2 days. It was a little bit down yesterday. It's a little bit up today. Nothing controversial there. Bitcoin steady, yen steady. The euro is singled out for a little bit more time in the barrel here, a little bit weaker than some of the other major currencies, down almost 0.3% against the dollar. That's an interesting setup here at a time when stock markets look soggy. Seeing the dollar stronger gives you a whiff of the kind of risk aversion that gets the dollar higher, not necessarily on sort of currency fundamentals so much as this is the unrivaled liquid form of cash. And because it's the unrivaled liquid form of cash, when cashing out occurs, this is where the flows go for the most part, making the dollar a kind of de facto safe haven element, because when people sell other things, they try to sell them for dollars because dollars are liquid and easy to move around. So what does all of this do? What does all this standstill amount to now that we have this key data in front of us? And of course, that key data is the U.S. jobs report. Well, for one thing, it suggests that the data is likely to be market moving, even perhaps in its passing. Never mind its content. Once we get to the other side of the event risk, the markets might have the free road to do what they wanted to do. So the fact that we're seeing this kind of rotation, rebalance, and general sort of coiling up and girding for the event risks suggests there is some kind of a reaction on the other side of it. Expectations give us a 60K rise in non-farm payrolls, with the jobless rate ticking back down to 4.5%. That would be meaningful in the sense that it would be the first downtick we have seen in the unemployment rate in quite some time. 4.6% was a 4-year high. This would still be the second highest unemployment rate reading since October 2021, though. So in that sense, it would be sort of choose your own adventure in the sense that you could either focus on the fact that it's gone down or focus on the fact that it's still quite high. So unclear that this particular indicator has some sort of lead for Fed policy expectations. Really, it'll be the payrolls number most likely that's front and center. And here, we heard in December from Fed Chair Powell that he's applying a kind of haircut to BLS numbers, which he thinks are overcounted. And of course, we've had evidence of that in 2024. There was a big revision for those numbers. There's another one upcoming, most likely. And the expectation from Powell is that the numbers, on average, are about 40,000 jobs a month in terms of gains, and that you haircut that by about 60K in overcounting. And so what this leads to, or rather a 20,000 jobs a month average haircut by 60K. So what this leads to is about on net, 20 headline, 60 haircut, an average of 40,000 jobs lost a month. This is the thing that encouraged the Fed in their telling to cut rates 3 times at the end of last year. That essentially it was time to focus on the slowdown in the labor market, which we can see here, and to operate accordingly. Now, the issue here is, as ever, that there remains an open debate between what the Fed is saying it will do on policy and what the markets want the Fed to do on policy. And as we'll find out as we go here, that has a meaningful implication for stocks. It has a meaningful implication for most major assets because this is the underlying cost of money. This is what illustrates whether a trader wants to buy or sell anything at all versus sit on cash. And only then do we decide what to buy or sell. So the markets want at least a pair of rate cuts this year. We can see Fed funds futures are stubbornly baking in 56 basis points for 2026. The view for next year, flat. So between now and the end of 2027, the markets want a pair of rate cuts, but they want them all up front. They want them all in 2026. They don't seem to be hung up about seeing one in January. We can see here markets are reasonably comfortable with 88.4% chance of no change in rates. So that much seems to be okay. But if we look at the probability matrix here going forward, there's one rate cut that's fully baked in for April. July is a little bit on the fence. It's narrowly better than even odds that we get a cut, but it's so close to 50-50 that we look to September where the probabilities shift firmly to price in that second cut. So we can see here that the likelihood that we get no cut or one cut is meaningfully lower, less than 40% here altogether, than seeing 2 cuts by this point. Similarly here, the likelihood of standstill declines below the 50% mark, and so the likelihood of 1 cut becomes better than even. So the markets are fully discounted. foreseeing 2 cuts. And we can see here that by December, the likelihood that we don't get these 2 cuts is not even 30%. So the markets are firmly convinced that 2 cuts are coming. Compare that with what the Fed is guesstimating here, and that's 1 cut short. Now, the Fed also thinks 2 cuts over the next 2 years, but they're spacing them out, 1 for 2026, 1 for 2027. Moreover, this is not new. This is what the Fed had on the menu in June. This is what the Fed had on the menu in September. They reiterated it again in December. They have had ample time to change their mind. They know where the market pricing is. They know what the markets want from them. If what the Fed wanted was to juice the markets, they would be writing different things in these forecasts, but they're not. And so there's clearly a disparity here, and the markets clearly don't like this disparity because since the Fed meeting in late October, stocks have struggled to go very far at all. They've basically been stuck in a glorified range. Whereas policy expectations have stopped getting more dovish. They've stalled. What did we learn in early October, or late October rather? Powell came out at the end of that Fed meeting and said, you all are over extrapolating way too much on rate cuts. We're not on autopilot. We're not doing it. We gave you the rate cuts that we gave you, but don't assume we're just going to keep going. And so the markets since then have become understandably circumspect. And so you can see here's that October move. The markets take a little time to digest, but since here, easing has somewhat come back. Things have become a little bit less dovish. Though, tellingly, the markets are holding on and showing conviction here. Basically telling the Fed, no, you adjust your view. You've got to cut. And while there is uncertainty here, stocks are struggling to make headway. Now, we just saw earlier this week, the U.S. service sector appears to be booming. And that's the largest part of the U.S. economy by far. What we find here when we take the soggy manufacturing sector and the booming service sector together in this data from the Institute for Supply Management, which is a kind of purchasing manager index version, which oftentimes is a good early precursor to where GDP is going. What we find here is quite the robust view of the U.S. economy. In fact, this composite index, weighed to be about 70% services and 30% manufacturing to sort of line up with how the economy is organized, it gave us the fastest overall growth since all the way back in February of last year. So this looks like, at this point, a 10-month high on U.S. economic growth. Now, that's hardly an environment in which the Fed might be encouraged to cut rates. The Fed's argument that inflation is cooling is certainly borne out in this data. It does seem to be cooling over both services and manufacturing. But employment, the Fed's argument for getting the rate cuts going as inflation cools, as opposed to just standing still and letting it cool, that seems to be going the other way. This is very robust job creation here. As ever, 50 is neutral in the logic of PMIs. So when you're above 50, that's growth. When you're below 50, that's contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And this amounts to pretty strong growth for what is the economy's largest component by far. Almost all Americans are employed in services, about 8 to 1. And this is the fastest employment growth that we've seen, again, since February of 2025. So quite strong. Not only that, but if we consider what this means for consumption, the largest component of GDP growth, we already had a strong quarter for consumption in the third quarter. You can see all of these shenanigans with swinging imports and inventories go away after the front running of the tariffs runs its course. We get a much more normal breakdown in GDP here in terms of its components, led primarily by a welcome rebound in consumption, which accounts for 68% of overall growth. So it seems difficult to imagine that an economy in which employment seems to be growing strongly in the service sector, consumers seem to be doing well, or at least seem to have no issue buying stuff. And that buying stuff is mainly services. We can see that in the spread in CPI numbers, where 1.8 percentage points out of a 2.7% inflation rate is core services, excluding food and energy, whereas goods are just 25 basis points or a quarter of a percentage point. So we can see where demand is. It's in services. It's not in goods, in relative terms anyway. And so it's difficult to imagine how the Fed goes about dialing up the pace of rate cuts in this environment. Moreover, if we look at what the Powell logic looks like here, much of getting to a 40K job loss run rate in the last 6 months, or at least the second half, we're about to get that final 6 month with December's data, but the last half of last year, so the second half, is very strongly skewed by this October dip, where we had 105,000 jobs lost, and in Powell's parlance, with that adjustment, 165,000. And that was, of course, the U.S. government shutdown, the longest shutdown on record, 43 days. Now, without that number skewing the average, job losses are not altogether as bad as Powell has suggested. Moreover, this number, essentially zero after we make the adjustment, is better than a 40K loss, which is what the Fed is ostensibly conditioning policy around. So, if we get an NFP number that's reasonably in line with expectations, or anything remotely adding up in a way where we're not looking at a 40K job loss on net after this Powell haircut, would suggest that the Fed need not be in a hurry. And of course, the markets would very much like them to get in a hurry, or at least to signal that they're going to do the 2 cuts that the markets want. And that seems like a difficult calculus to make when the economy seems to be in decent shape, and when job losses, barring 1 month skewing the average, are not as bad, apparently, as the Fed suggests. So if that's the case, then why do the markets want these rate cuts so bad? The Fed has been telling them they don't want to do them. The economy seems to be on the Fed's side, at least as far as the encouraging numbers on growth are concerned. So why is it that the markets want these cuts? Well, we've argued that this is largely insurance against uncertainty. If we look at the breakdown of the 10-year yield, we can see that the term premium in 10-year U.S. Treasury bonds is at the highest in almost 2 decades. Now, the last time we revisited this level was in 2014. That's around here. We've been a little bit higher, but we can see where these elevated levels live. These are obviously very significant readings, and now we find ourselves right in their vicinity, a little bit less. But in absolute terms, this is the highest reading for the 10-year term premium since 2014. So just about 12 years ago. And one wonders how you get here. The 10-year is clearly the sort of benchmark risk-free asset in the market. The term premium here indicates a desire for greater compensation for uncertainty over a period of time. So the market is, for some reason, wanting a backstop. And we can clearly see inflation expectations are actually somewhat pinned lower. One reason that might be is increased trade policy uncertainty since the beginning of this year. We can see that while overall uncertainty has come down, choppiness around the averages here suggests there's a lot more volatility here than even during COVID. And of course, that has been a hurdle for global trade volumes, which are down for the first time since COVID in 2025, and by the biggest year-on-year margin since the financial crisis in 08-09. So clearly all of this trade uncertainty is hurting global trade in absolute terms. Why is that something the stock markets need to worry so much about if, as we just said, all of the U.S. economy almost is powered by services? Well, we can clearly see here that the tech sector has overwhelmingly outperformed everything else in stocks world. No big surprise there. Obviously, the AI hype has been strong. But that AI supply chain is very globally integrated. 38% are, of course, in the US because that's where the models are for the most part. But there is a very strong dependence in this supply chain on both Asia and on Europe. 24% is Europe, 26% Asia. Think all the work that gets done in the Netherlands, in Japan, in Korea, in Taiwan, and so in China. And so this is a very vulnerable supply chain. Were all of this to continue, because all of this is continuing into this year and next. And so it seems like what the markets want is cheap money insurance against the possibility that something odd might occur, that some sort of risk might emerge. And so they don't want to let that go and don't want to embrace this economic data, positive though it may be, to say, you know what, the economy is doing fine. Maybe we don't need rate cuts so bad. No, they want them. And perhaps not for economic reasons, but for insurance. So with that in mind, if we're expecting jobs data that might not give the markets any more sense that the Fed is going to find a sense of urgency around giving them this insurance, I'm still on the short side of risk. So I still have these put verticals in the S&P, in the NASDAQ, in the Russell. I've re-added some put verticals on Bitcoin via IBIT. I'm on the long side of the US dollar at this point across the board, short the euro, short the pound, short the Aussie. I'm staying long gold for now because I'm not sure that this data is going to necessarily inspire the markets to let go of their rate cut expectations. They certainly haven't been swayed yet. And so I don't think that gold is necessarily going to take a big shock loss here unless the markets finally relent and yields move. In which case, the dollar might go higher, not just for risk aversion, but for yield reasons too. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns next week. Happy trading.